Thank you so much. And hello, everyone. Great to see you here. And welcome to CNBC's CONVERGE Live in Singapore. Now, who was with us yesterday? Put your hands up if you were joining us yesterday. Fabulous. Now, give us a big whoop if you enjoyed yesterday. Whoop. Awesome. Now, hands up if you made a personal or professional connection yesterday, a new connection. Great. Now keep those hands up if you made 5 new connections. You can do better than that. Today is the day. That's what it's all about. That's why you're here. 5 new personal or professional connections, because we are here to help you bring each other together. Okay. Today is going to be absolutely fantastic. But you know what? Yesterday was really special too, wasn't it? I mean, didn't we all really enjoy watching those big titans and thought leaders, Mark Benioff and Ray Dalio, have that conversation? I think my biggest key takeaway from that was that meditation is the key to success. Did anyone else go away thinking, I got to meditate more? I mean, it'd be nice to have buckets of cash and a flying DeLorean, but that's not the key to happiness. Apparently, it is meditation. So I'm going to do more meditation, and hopefully you will as well. And that was backed up, wasn't it, by DBS's Tan Su Shan at the end of the day. So today is promising to be just as special as day one. We have some big heavyweights lined up for you. But let's go to the official welcome from CNBC International. I would like to now welcome to the stage, and let's also give him a big, warm welcome and applause for Deep Bagchee. Deep, come on up. Did you enjoy yesterday?
I did. I enjoyed myself thoroughly. I think I made more than 5 connections, though I didn't meditate. I have to admit, I did not get a chance to meditate. Good morning, everyone, and welcome to day 2 of CONVERGE. First of all, wow, what a day yesterday in this incredible venue with this amazing waterfall behind us. Today also, as Mandy said, promises to be spectacular. Before I talk about some of the things I'm looking forward to, I want to take a moment to reflect on some of the highlights from day 1. So Singapore's Deputy Prime Minister, Gan Kim Yong, he set the scene for our discussion yesterday, reaffirming Singapore and Southeast Asia as a beacon for growth and stability. But he also did say that trade tensions and tariffs could disrupt global growth and investment. And that's how we started our morning, just about this time yesterday. Then we had Ray Dalio on, who warned us about the risks of U.S. deficits and borrowing, and that's reverberating across the world. We had Salesforce announce a $1 billion investment into AI in Singapore, and Mark Benioff, the co-founder and chairman, said data centers were quickly becoming a commodity, with so many of them now being built. Joe Tsai was here, obviously, from Alibaba. He told us he didn't think AI would entirely replace human beings. It'll just enhance the quality of work. That's the hope, obviously, for everyone. And he also talked about the importance of President Xi meeting with entrepreneurs and what a big signal that sent to Chinese entrepreneurs. And then in the afternoon, we had DBS's incoming CEO, Tan Su Shan, who said companies should stick to their DEI and ESG goals and not be swamped by political developments. Obviously, this is quite a controversial topic in the zeitgeist currently. I could go on, but first, let's take a look at some of the highlights from yesterday.
CONVERGE Live, at its core, is an opportunity for global leaders to connect and drive transformation, and together discover opportunities for growth.
Singapore is deeply invested in the growth of Asia. We believe that Singapore will do well when our region does well.
The debt issue. We have a very severe supply-demand problem. That's a big deal. You are going to see shocking developments in terms of how that's going to be dealt with.
Reciprocity can be very good. And if you can't put the what and the how in a consistent, clear, and meaningful way, then you could end up with high levels of volatility and conflict.
A few weeks ago, President Xi Jinping had a meeting with entrepreneurs. What that meeting did to the entire entrepreneur sector or the private business sector is it gave private business people confidence to make investment in their business.
I hope you all enjoyed that. As Mandy said, we're able to make personal and business connections. So as we build on the momentum of yesterday, I hope you're feeling just as energized today. And it'll be time to limber up, stretch, as we turn to the world of sports later today, exploring the intersection of technology, media, investment that's shaping the industry. Mandy mentioned we'll be joined by four-time Olympic champion Michael Johnson, and he'll be talking about his vision for business and how much he enjoys running his own business, and it'll be interesting to hear from such an iconic sports person. Then from one track icon to another trackside legend, we'll be speaking to Ferrari CEO Benedetto Vigna. It's perfect timing with the Formula One season starting this weekend in Montreal. The CEO of Live Golf will be here to talk about the league and their business. And if Live Golf is an alternate format to one sport, we'll also talk about esports, which is growing and disrupting in a completely different way. And we'll discuss the growth that industry is seeing. But that's not all. We'll also cover family offices and wealth. After all, Singapore has often been referred to as Switzerland of the East. Then we'll discuss an alternate store of wealth. That's cryptocurrency. And we'll be joined by the CEOs of Binance and Hashkey Capital. Plus, we'll get into private equity, Trump's trade policies, sustainability, and much more. So, with that, I want to just give a few thanks to people who made this event possible. Obviously, this event would not be possible without our host nation, Singapore. I think Singapore really shows us what good governance, careful stewardship, pro-business policies, and long-term thinking can do. There really is no better place for us to host our first inaugural CONVERGE Summit. Thank you also to our sponsors for their collaboration and support: Schneider Electric, B. Grimm, Samsung, Prime Infra, and Grab. And finally, to everyone here, we're delighted to have you with us. I hope that CONVERGE provides you with valuable conversations, new connections, and insights you can take back to your organization and businesses. So thank you very much. And with that, Mandy, I'll hand over back to you.
Thank you so much, Deep Bagchee, CNBC International's president. So what a superlative way to start today's program. But before we move into the next segment, I'd like to throw you all into the deep end of audience participation. Let's do a quiz, shall we? So this one is about self-driving taxis, one of the conversations that was brought up yesterday with Anthony Tan of Grab. Now, hopefully you've all got a Grab code from earlier, and if you don't, make sure that you get one from the registration desk. So all of the Grab cars that we take today have real drivers, and it's lovely. You jump in, they're always very friendly, get you to where you need to be, and because it's Singapore, it's in no time at all. But some companies apparently have already started a commercial self-driving taxi service. So which one was the first? Let's bring up the options here. We have option A, Tesla, B, Google's Waymo, C, Uber, and D, Apple. So a show of hands here. Who thinks it's Tesla? Okay, we've got a couple out there in the audience for Tesla. What about B, Waymo? Okay, quite a few for Waymo. What about C, Uber? Any for Uber? No one for Uber. And what about D, Apple? No one for Apple either. Well, I think the majority of you who put your hands up for Waymo would be on the money. Yes, it is Waymo. They launched their first fully autonomous taxi service in Phoenix, Arizona, back in 2020. Well, let's move on, because just a moment ago we heard Lord Cameron talking about the new world order that we're facing under Donald Trump. And you also heard him say that he has some very unconventional tactics. So what we're seeing here is that long-held positions and beliefs about America's role in the world, and of course its responsibilities as well, they're being upended, or at least severely challenged. I would like to now bring to the stage two people who have a lot of policy experience in this area. David Adelman is former US ambassador to Singapore from 2020 to 2013. We also have Kishore Mahbubani, former Singapore ambassador to the United Nations, and joining them to moderate this session is CNBC anchor from New York City, Sarah Eisen. Over to you. Thank you.
Thank you, Mandy. It's great to have you. Ambassadors. So I was going to talk about geopolitics, which we'll get into, but I feel like trade, it's really hard to keep track of what's going on in trade. There's so many headlines, everything's moving so fast, and it's really front and center for investors, for CEOs that we talk to on CNBC, for policymakers. I'm curious, Ambassador, do you think that Trump is going to accomplish what he's trying to accomplish on trade?
I think the answer is that's why we're paying such close attention. I think he will accomplish a lot. I think he is reshaping much of international relations through the use of tariffs. Donald Trump learned two big lessons during his first term. The first one is he needed to staff his cabinet and the secondary level of his government with people who were prepared to execute on his goals, people who recognized he was the only principal in the U.S. government and the executive branch. And second, and this is the most important lesson I think he learned with regard to trade, Sarah, is that the courts and Congress can get in the way of a lot of what he wants to do. But there's one thing he could do with the stroke of a pen, if he was willing to, in the name of national security, do so, was to put in place tariffs on trade in goods and services. And he has used the tariff pen very liberally since he learned that lesson. He has prosecuted issues around the world that don't really relate to trade. The flow of fentanyl, immigration issues at America's southern border. He has used the tariff pen to try to have his way across the policy spectrum. And I don't for a moment doubt his ability to make progress on many of these issues, including the core trade issues.
Also on fentanyl, it's already working given some of the concessions we're getting from Canada and from Mexico. If you're a country, you spent a lot of time at the United Nations representing Singapore. How nervous is a country like Singapore? The Deputy Prime Minister was here yesterday, and he did use the word anxiously watching what's happening with trade.
Well, I think when you look at what's happening on trade, you have to realize that two things are happening simultaneously. One, there's a structural shift of power to Asia, and that's carrying on. You mentioned what the Deputy Prime Minister said yesterday. He said that Asia's share of the global GNP is 50%. It's going to rise to 60%. And within this region, as you know, trade carries on. The open markets carry on. The free trade agreements carry on. So that structural shift of power is happening. And then, of course, you have the Trump disruption coming into play. And the question is, how will it affect the structural shift of power to Asia? And I think it could work two ways. Of course, it could have a negative effect. There could be disruptions and trade could be reduced. But at the same time, the sense I have is that when it comes to the most important relationship in this region between United States and China, while in theory Trump is very negative on China, in practice he might be willing to do a big trade deal with China. So everybody's waiting to see whether or not Donald Trump defies expectations and reaches a big deal with China.
What would that look like?
Well, I think at the end of the day, each side has their own priorities. For China, clearly, the number one issue is how they deal with Taiwan. And if they can get assurance that the Trump administration is not pushing for the independence of Taiwan, that's a big win for China. And on the other side, if Donald Trump can get China to open up its market, accept more American exports, and possibly even invest more in United States, then it's possible to have a win-win trade deal. And it's curious that in theory, Donald Trump being right of center should be more anti-China, but there's more likely to have a deal between Trump and China rather than Biden and China.
Also to sell U.S. TikTok. I think that goes into the deal too. Do you share this sort of optimism that he could be working toward a grand bargain with China?
Yeah, I do. I have some slight differences with the way Kishore has presented it, but In the same way that only Nixon could go to China in the early 1970s, only Donald Trump is in a position to shape the environment so that there can be a grand bargain, so to speak. No American voter will ever accuse Donald Trump of being weak on China, and that gives him an advantage at the negotiating table with President Xi. Kishore also points out a very important aspect of what has happened in the last, let's just say, 20 years, and that is the increasing purchasing power, especially of the Chinese consumer. So as diplomats, this relationship should set up very well. China has an important stake in American economic success. The U.S. consumer is still the most powerful consumer in the world, and the U.S. presents the greatest market for Chinese goods and services for the foreseeable future. But increasingly, the Chinese consumer has grown in power, and that presents an opportunity for American producers. We know this historically because China is the largest consumer of American agriculture. But I think the products and services that the West, in particular America, wants to make available to Chinese consumers is going to grow. And that's without regard to the continued importance of China in global supply chains. No matter how much talk there is about removing China from global supply chains, it's not going to happen. China is so firmly entrenched in global supply chains that economics will require it continue. And Donald Trump understands that at the very core, because Donald Trump, at the end of the day, listens to business. He comes out of the business environment, the rough and tumble real estate world of New York, but he's rubbed shoulders with businessmen his entire life. And I think we see increasingly that business will get more access to Donald Trump in this White House than was the case in the first term.
I have to say, we have never met, but I know you were an Obama appointee, and so I am surprised that you are not more negative on what President Trump is doing, especially on trade, given how much angst it's causing in the markets and with businesses, which is also now a big part of your world.
What we're seeing from Donald Trump is hardcore extreme realism, combined with a lot of protectionism, which I disfavor, and I know no one in Singapore favors the protectionist policies, and then even a heavy dose of expansionism, and I have to process what that is really all about. But I think the world has changed substantially since that first Obama term when I was in the U.S. government representing the United States here in Singapore. And in particular, there are two new items in Donald Trump's inbox: war in the Middle East and war in Europe, both of which I think will require an American president to be more assertive and to maybe move more towards a harder, realist policy, especially in international relations.
Well, you've turned us to the geopolitical landscape, and I do want to ask if, first of all, on trade, as we get there, does it risk alienating U.S. allies, important U.S. allies, in the geopolitical space when it comes to trade? Already, Canada talking about how we can't be a reliable partner and a reliable ally. Do you see some real collateral damage as a result of the trade war?
Well, I think you have to do a country-by-country analysis. And certainly in the case of Canada, Canada has no choice. I think 70% of its exports go to the United States of America. And, I see the Canada-US thing settling down in a while because there's no other option.
What about Europe?
Europe is a completely different matter. And, in the case of Europe, Europe is going through some kind of, I would say, an existential crisis. And I say that partly because the weight of Europe has gone down in the world. I mean, give you one statistic that everyone should know. In the year 1980, Europe's combined GNP was 10 times the size of China, 1980. Now they're both about the same size. By 2050, Europe will be half the size of China. So can you imagine in one lifetime, 70 years, Europe goes from being 10 times larger than China to becoming half the size of China. And at the same time, the Europeans are beginning to realize, especially after what's happening vis-a-vis Ukraine, that in some ways they've got to develop their own options because they have been clearly, to put it very bluntly, they've been slapped in the face by the United States. And certainly the way that Donald Trump treated Zelensky was quite a shock to the rest of the world. And Europe realizes that if it wants to continue with Ukraine, it's going to be on its own. So that's an example of a geopolitical shift. Of course, at the end of the day, what that deal will look like, we have to wait and see. But here, on one positive note, you were surprised that David was saying positive things about Donald Trump.
I was.
Let me say one positive thing about Donald Trump, that for reasons I don't understand, he doesn't like wars, which is wonderful.
He's a
Donald
pacifist.
Trump doesn't like wars. And, and that's really, really positive, because he's trying to, and clearly, at the end of the day,
Shouldn't
it
everybody
was
not like
Donald
wars?
Trump that got us a ceasefire in Gaza for a long time, and it's Donald Trump trying to get a ceasefire in Ukraine. So on that front, if he pushes for the stoppage or elimination of wars, I would say that's a positive contribution from Donald Trump.
You know, we were here yesterday with Mark Benioff and Ray Dalio, and something that Mark kept saying when I was asking him about trade war, when I was asking him about deficit cutting, is he was saying the what is good, it's healthy. The how, leaves something to be desired, and they have to be careful about that. And it feels like that relates to foreign policy as well.
Yeah, the how matters a lot. And you asked questions about Europe. Europe, the risk of this extreme realism, of course, this power politics, especially power politics as it relates to U.S.-China relations, is Europe could be left out in the cold, which is really the first time in the 80 years since the end of World War II that the American in the White House, has turned a shoulder, not completely turned a back, but turned a shoulder to Europe. It's very new, and European capitals, I think, are still trying to figure this out. We even saw Macron talk about maybe increasing France's military and nuclear arsenal.
Germany's going to finally spend.
Germany
right?
the same. So it's a very tricky time for Europe, and you use the right word. There is real risk for Europe if Donald Trump continues to practice this sort of extreme realism.
What is the risk? What does that look like?
The risk is, they're going to have to find their way in a bipolar world. And I was asked a question a couple of weeks ago, what is Trump's end game? What does he see as the end game? And I believe, and I'm interested in Kishore's view, he believes the end game is a G2 world. U.S. primacy, for sure, but he believes there are two capitals in the world that matter, Beijing and Washington. And if you study his politics and his policies from the first term, even then he was moving in that direction. It was all interrupted by the pandemic.
Is that wrong?
Sorry?
Is that wrong?
Is that wrong? It's wrong if you believe that the 80 years of this sort of liberal world order since World War II has served the world well. It has certainly raised hundreds of millions, a billion people out of poverty. We've had relative peace over these 80 years, and it's very risky to throw that all in the trash bin. Nonetheless, there are two heavyweight champions in the world today. China on the rise, America as the incumbent power, and Donald Trump and Xi Jinping, for that matter, are right to be very sensitive about this relationship, because we know that rising powers and incumbent powers oftentimes find themselves in conflict. And it doesn't have to be a shooting war. Kishore has said Donald Trump, based on his first term, is very uninterested in shooting wars, but trade wars, nonetheless, can do great damage. And I think there is risk. So, is he wrong? Theoretically, academically, no. In practice, the how, as you put it, the how is a very risky endeavor.
What do you think about it, the how and the end game?
Well, I think the one thing I emphasize about the Chinese is that they play the long game. And if you read Henry Kissinger's book on China, he emphasizes that the Chinese try to look at the whole world as one big chessboard and try to figure out how the different pieces fit together. And that's in the contest between United States and China, which is, as you know, I wrote a book called Has China Won on it. It's a mistake to either underestimate the United States. The United States is an amazing country. China would be foolish to underestimate the United States, but at the same time, it'd be foolish for United States to also underestimate China, because they play the big, long game. And I can tell you, I just came back 2 days ago from spending 10 days in Africa. And you've got to, by the year 2100, by the way, there'll be 4 billion Africans. And if there's one continent that Donald Trump has cut out completely, it's Africa. He said some very nasty things about them. He's made jokes about Lesotho. And by contrast, China is seen as a steady, reliable partner in terms of the long-term development of Africa. And if you go by slice the world, it's amazing how consistent Chinese policies have been in terms of trying to cultivate long-term dividends. Even in South America, which is much closer to United States geographically than to China, the Chinese have built a state-of-the-art port costing billions of dollars in Peru. Now, that's a major long-term investment that they have made.
Well, it turns out you can do that if you don't have to have elections.
That's true. But at the same, it's more than not having elections. It's having a long-term perspective on how the game is going to be played. And by the way, the Chinese clearly want to have a deal also with the United States. They don't want this contest to carry on. So that's why it's important to understand that as you look at this game, look at the entire global picture. And if you're going to have a multipolar world, we haven't mentioned India, for example. India is going to emerge and play a major role. I think Southeast Asia, this region, ASEAN, is also going to matter. It's growing very fast. In the year 2000, Japan, as the second largest economy, was 8 times bigger than ASEAN. Now it's 1.3 times bigger. By 2030, ASEAN is bigger than Japan. So there are other regions of the world coming into play also that we should factor in terms of the big picture for this US-China contest.
Please start thinking of questions, because I am going to open it up in a few minutes. But I do want to follow up on India and talk about the strategic importance there and where you think they fit in as the US and China get more confrontational if they do.
Well, I think India, is already the 5th largest economy in the world. By 2030, it'll be the 3rd largest economy in the world. It'll be growing. And India clearly was in many ways shifting away from China towards the United States. That shift was happening. But I think under Donald Trump, there has been a rebalancing partly because from India used to get preferential access to the US market as a developing country. With Donald Trump imposing reciprocal tariffs, the reciprocal tariffs are going to hurt India a lot.
Well, but why does India have such high tariffs on US goods? Like, I found out about the motorcycles.
Well, I think that this is a legacy of the time when they were, a developing country and so on and so forth.
They should lower it.
India has got to make some adjustments. But you notice that India's relationship with China has gradually improved over the past few months, and Prime Minister Modi and Xi Jinping are meeting each other now. They're not the best of friends, but they are talking to each other now. So what you will find is that more and more countries are subtly shifting their position to adjust to this new environment.
Which relationships are you watching?
Yeah, I wanted to comment on India quickly to answer your question. India has a very long history of protectionism. It's an understatement to say that Indian domestic politics are very complicated. So, the idea that India is going to open for foreign investment or foreign trade, has been out there for a long time. And sort of the wake of people who fall in love with the potential of, the Indian dream is filled with disappointment. So, although we now refer to this part of the world as the Indo-Pacific, I believe nonetheless the game across the Pacific is the U.S.-China game. I'm spending time looking primarily at U.S.-China, but I'm also very interested in what's happening here in Southeast Asia. Because here, as Kishore pointed out, we have hundreds of millions of people, fighting their way into the middle class, trying to participate in global trade at a higher level, increased purchasing power, but for the most part, it's a collection of neutral countries. These are countries that have enjoyed the benefit of American security protection, as the U.S. Navy, has protected trade routes since the end of World War II in what the Americans call the Western Pacific, but is firmly within China's economic orbit. China is the #1 trading partner for every country in this part of the region, and tiny little Singapore, where we sit this morning, is the largest foreign investor in China. So how these countries that are part of this non-aligned movement are able to continue to navigate the waters across the Pacific, take advantage of America's security protection, advantage of China's economic growth, at a time when Donald Trump, and to a lesser extent Xi Jinping, is trying to force a choice on them, is a very interesting dynamic.
Well,
I think is going to play out in the next.
Can a country like Singapore remain neutral?
I think Singapore must remain neutral, but I'll allow Singapore's former rep at the UN to speak to it.
No, I think it's very clear that it's not just Singapore, it's all of Southeast Asia. They want to have good ties with the United States, and they want to have good ties with China. And you know, United States has invested more in ASEAN than it has in China, Japan, South Korea, India combined. I mean, that's a stunning statistic. And a lot of it, of course, is in Singapore. And at the same time, Southeast Asia's trade with China is double that of its trade with the United States. So they have to keep friends with both sides. And I think over time also, I think United States and China will realize that it's in their interest to try and work with regions like Southeast Asia, which don't want to choose. And by the way, that's true of other regions like South America too. Doesn't want to choose between the United States and China, because if you look at South America per se, you take out Mexico, South America actually does more trade with China than it does with US. So everyone wants to keep their options open, and that's the world of tomorrow that you will see, that everyone realizes that the best way to survive is to keep your options open.
You know, I feel like we're talking about two things, the short term and the long term. The short term is President Trump, and we're talking about that, and then you both sound optimistic that there's actually scope for a deal to be made, whether it's on trade or maybe more broadly on security. Long term, though, it feels like what we're talking about is some sort of inevitable confrontation between the U.S. and China. Is that fair? Is that what we're talking about here?
I don't think so.
No.
I think historically we know that rising powers and incumbent powers, oftentimes are pulled into some conflict, but the world has changed. This is not the end of the British Empire. This is not even the end of the Cold War. These are two countries that are firmly integrated with each other and depend on each other, as I mentioned a few minutes ago. So I don't think the conflict is inevitable. There's risk, of course, because both countries seek primacy, and especially here in Asia. Look, it's no secret that the view from Beijing is pretty clear. Asia is for Asians. And why is the United States so far from home? This is not unlike the American sentiment during the depths of the Cold War. Why were the Soviets moving around in Central and South America? It was very distressing to Washington. In the same way, I think that the U.S. Navy's activity and posture here in this part of the world is very distressing in Beijing. But I think we can find an equilibrium, because when Xi Jinping wakes up every morning and looks in the mirror, of course he says, "I'm a handsome man." After he says that, he says, "Give me a stable day." And in order for there to be a stable day in China, for him to execute on his China dream, he needs relatively calm waters across the Pacific. And back to this part of the world, I think that the ASEAN countries, and for that matter, the Europeans, also benefit from calm waters across the Pacific. I know Lee Hsien-loong, the former prime minister here, referred in a speech he gave recently to the African adage that his father, of course, often discussed, which is, the two elephants fighting in the jungle, it's the grass that gets trampled. And of course, it was later updated, I think, by Lee Kuan Yew with something along these lines, Kishore. Also, when two elephants make love in the jungle, the grass gets trampled. So there's something to be said, I think, for these neutral countries keeping this equilibrium so that they can, sort of run the rapids. Right. But the water has to be calm. And I'm not projecting anything other than the U.S. and China finding some way to maintain relatively calm waters across the Pacific.
Well, I hope David's right. I mean, clearly, I agree with you that there won't be a war between U.S. and China, because in a war between U.S. and China, you don't have a winner and a loser. You have a loser and loser if two nuclear powers go to war with each other. But at the same time, they're also not going to make love with each other. That's very clear. I mean, as David
So
emphasized,
the grass is safe either way.
the primacy is very critical, and both will be jostling for primacy over the next 10 to 20 years. So it's definite that the competition between the United States and China will continue. That's a certainty. The question is whether or not both sides will agree to some guardrails. I'll give you a concrete example, and it's an essay that our Asian Peace Program is going to put out soon. That, for example, you know how amazing AI is. The last thing you want to have in the world is AI being injected into decisions on when to launch a nuclear missile. That would be absolutely fatal for humanity. So all the great powers should agree that when it comes to deciding when to press the nuclear button, leave it to a human finger and don't give it to an AI. That's an example of a guardrail that you need between US and China to ensure that things don't get bad.
Yeah, let's hope so.
It's a great point. You know, one thing I look at very closely is the amount of higher level military to military communication, not cooperation, but communication between Beijing and Washington. And that fell off very severely during the end of Trump's first term, and was virtually no communication at the high levels during the Biden term. Now, part of that was because of the pandemic and travel and other logistics, but I guess now 18 months ago, there was a resumption of that type of communication. Very important to avoid the type of military catastrophe that Kishore referred to.
That should make everyone feel a little better. Can we open it up for some questions? Yes, please. Yes, microphone coming. And if you could just quick question, quick introduction.
Hi, Kareem Hijazi, CEO of Vigilosity. I'm a cyber defense company. Totally, tied to this concept around a hot war. I tend to agree. I don't think that's going to escalate. But cyber is a brewing issue that is much more complicated, harder to determine. And it seems like it's actually ongoing now. What's your perspective on the escalation of that and how it could turn into something even worse?
Well, I'm not an expert on cyber, but there's no question that in the cyber sphere, there will be a lot of things that will be going on. And every day, as you know, things are happening in the cyber sphere. Both sides are trying to carry out offensive and defensive operations, and that will continue. But even there, as you know, if I'm not mistaken, in the Obama administration, there was some kind of an understanding reached between US and China that China would not use its cyber capabilities to steal the intellectual property of American firms. You need those kinds of agreements that you can put in place. And I agree with David that the more they talk to each other, the more you can control the worst case consequences of competition like in cyber.
Yeah, full disclosure, our firm has substantial investments in cybersecurity firms. But look, these are strategic competitors. And despite the best intentions and treaties and agreements, I expect there to be increased activity on cyber, not just commercial, but on the security side. And that's not just between Washington and Beijing. It's global. It's an increasingly important space, without a doubt.
Okay, we have one in the back, please.
Yes.
It's Trump's end game. Last month, one military airplane landed in Moscow carrying J.D. Vance and Marco Rubio. There is a massive comment that draws the parallel between that event and 1971 Henry Kissinger landed in Beijing. So that changed the whole game of the Cold War and the global appliance. Do you think that event last month, February, has a equal, maybe even more significance, change the landscape in the geopolitical side, or is it just a massive conspiracy theory?
I didn't hear the last part. I'm sorry. Could you repeat
the
last part?
Okay, the parallel part is February. Yeah. There's a military airplane, Marco Rubio, and J.D. Vance landed in Moscow.
Yeah.
Right. Okay. Before the Munich.
Similar to Kissinger's visit to China.
Yeah, I understand.
Yeah.
Similar to Henry Kissinger's visit in China in 1971. Do you think this parallel draw makes sense? Therefore, we return the triangle global Cold War. instead of G2 you just said. Thank you.
Yeah, look, I think these times are very different than the Cold War times. I think in the Cold War we had two competing systems that had very little interaction and very little engagement. I think we have two fierce competitors in a single system now. Now, the lessons of the early 1970s and Nixon and Kissinger's decision to try to split the Sino-Soviet relationship, to try to, in effect, weaken the Soviets, there's an argument made that, this sort of new rapprochement that seems to be developing with Russia is sort of a Sino-Soviet split in reverse, trying to weaken the Chinese in this way. I don't necessarily buy into that, but principally I reject this idea that we are entering into a new Cold War with some sort of global competition for the affection of smaller countries around the world. Again, I think as diplomats, I think this sets up much better, thankfully, because of the stake the Chinese have in American economic success and the stake the United States has in Chinese economic success. Managing that interconnected or interdependent world is the challenge. It's a little bit different from the Cold War.
Okay, we're out of time, but last really quick and dirty one. So I would feel very worried about the world if Donald Trump did X. Fill in the blank.
You want me first?
Yes.
I think if Donald Trump withdrew American military hardware and troops, but especially hardware from Europe.
I think if anyone in the Trump administration persuades Donald Trump to recognize Taiwan as an independent country, that will start World War III.
Excellent. Let's hope none of that happens. Thank you both very much for your wisdom and expertise. And thank you all.
Well done.
Thank you so much to Sarah Eisen of CNBC. We'll see her later on today. And thank you very much to David and Kishore. That was a really excellent and very concise lesson in foreign policy, wasn't it? It was also, I have to say, that image of elephants in the jungle that is seared into my brain. Thank you very much, David. But anyway, I thought that it was a very glass half full kind of conversation, wasn't it? We heard from Kishore saying that he is hopeful for a deal between the United States and China, and also that Trump just doesn't like wars. We also heard David say that, Trump's a realist. In fact, he called it extreme realism, and that he does listen to business. He also said that China has a really important stake in the US economic success. So I thought, all in all, a pretty optimistic versus pessimistic view of the world. But of course, as we know, foreign policy has many nuances, a lot of consideration. So let's throw this forward, shall we? Because there's everything that we have to consider on the geopolitical front these days. But if you also throw on top of that high interest rates and interest rate volatility, and also a very dynamic and changing regulatory environment, what does that mean for private equity? That's going to be the topic that we're talking about now. Let me introduce to you, and please give them a big, warm welcome. We have Scott Hahn, CEO of Hahn & Company, and Serena Tan, CEO and co-founder of Gaia Investments, plus, of course, CNBC's anchor, David Faber. David, take it away.
Thank you, Mandy. Good morning, everybody. As Mandy said, certainly, we came into this year with an expectation in the U.S. of a lot of potential deals, obviously strategic being key amongst them, but also an idea that a lot of financial sponsors would be very busy getting exits for some things and also obviously putting new capital to work. So, Serena, I'd love you to just sort of give us a sense a few months into the Trump administration and into the new year, what things look like, broadly speaking, from the macro perspective, in terms of, are things as optimistic as they were even a couple of months ago?
Yeah, I think when we started the year, and Scott can attest to this, you thought you started the year with all the major elections done with, and therefore you had stability. And I guess as one person that's determined to make sure that we don't have that in the system. The reality is that as we look at the managers and the private equity managers that we work with, because we are a fund of funds, you have the prepared and the unprepared managers. And for many of the managers who saw this new administration coming in, they were definitely looking through their books and thinking, which businesses should I fortify? Which businesses do I need to, which will have tailwinds with this new administration? And what else do I buy into, given where the focus of the new administration will be looking at? Across the globe, when we compare, we still see a lot of positivity in the US. We spend a lot of our time looking at middle market managers over there. The reality is the average American consumer, the average American middle market SME business still needs to move on, right? We see that in Europe as well with middle market, and definitely in Asia, whereby businesses just need to carry on, and the private equity guys who are in the know and using all the demographics tailwinds to look for the right opportunities are still doing so. And most of our managers are, they've just taken a point where rates are just going to be where they are. We're not going to underwrite for lower rates. We're going to underwrite for inflation at where it is, and that's probably the most prudent way to look at life. Yeah.
When it comes to exits, I'm curious, though, in terms of the managers that you're working with. The IPO market has still been relatively quiescent.
It's tough.
Yeah. So are you frustrated with their inability or with the pace of exits and return of capital?
Yeah, distribution and liquidity keeps me awake at night for sure. I have investors who expect me to return distributions at a certain point in time, as with any private equity fund. And what we do see, though, is obviously the wave of new options of getting liquidity into the system. With many of people in the audience, evergreen funds clearly are all the rage. They are raising in the hundreds of billions. I think there are 415 evergreen funds in the world today, which is, shocking. It's 5% of private markets today. We expect that to just keep growing. The high net worth individuals love it. You see the continuation vehicles. I don't know whether Scott's done one yet, but if effectively that's created another avenue. Unclear whether the market truly likes it or whether they accept it today, because it does provide some form of distribution. But there's such channels where we see a little bit more liquidity being injected because the IPO markets are just unable to open at the moment.
Yeah. Well, Scott, let me come to you. South Korea, obviously the focus, although many of the businesses that you're investing in or acquiring, the U.S. is a very important component of the overall revenue. So just first off, give me a sense in terms of your market and broadly speaking what you're seeing.
Yeah, I think when you look at the Korea market and Asia market, I think the big takeaway is that you do need to separate this big region to maybe a more domestic private equity market in growth capital and IPO exits. That has been the case in China and India, versus my market, Korea and maybe Japan, where the exits have been more M&A driven, where the businesses, as you have mentioned, are outwardly facing. And I think the big difference now is that outwardly facing now is effectively US facing. It's become less Europe, it's become less China. So if you
Over what period of time has that taken place?
I think over the last maybe, it certainly didn't happen with the new election. It happened many years ago. I think it's certainly before pre-COVID, when maybe Trump won, when you started getting the notion that the US and China relationships were going to change. And when you've had that, certain private equity markets, particularly in Japan and Korea, which already have as an economy big connections and relationships with the US market. I think what you're seeing now and what we're going to see is that maybe accelerated. So if you have a business in these markets where, take for example, semiconductors, energy, areas of sort of industrial manufacturing. The fact of the matter is somebody needs to make the product. And manufacturing, for example, in my market is 25% of GDP. It's one of the highest globally. If you have those businesses, those are attractive. They will sell.
it is not public market dependent, and that's going to be a difference than perhaps the challenges you'll see that are different in a China, India, pre-IPO type of investment.
And how would you characterize the current environment then? I mean, are you, to the extent that you just described some of those dynamics, whether you watch CNBC US, Asia, or Europe right now, we're all talking about very similar things, namely the tariffs, on-again, off-again nature of it, sort of the chaotic sense at this point in terms of policy and the uncertainty that brings. Is that something you're seeing or not as concerned about?
There's less concern, at least I've seen, in South Korea than it may appear. It is a market that already has a strong free trade agreement. In Trump 1, it was renegotiated with the U.S. And I think you do need to look at it sectorally. There are certain sectors where there are already discussions about trying to get Korea businesses to do more in the U.S. And the fact of the matter is, Korean businesses have strong presences, manufacturing presences in the U.S. already. So the idea of adding additional capacity is very different from an Asian business who, for geopolitical reasons now, wants to build a presence in the U.S. The thing we look at in our investments is how in certain industries, how competitive are they versus something in the U.S. So you look at shipbuilding, for example, and you're going to see a significant difference in how to manufacture a naval battleship in the U.S. versus doing it in South Korea. And the opportunities to be able to work together, the economic rationale is probably going to offset some of the uncertainties that we have right now with tariffs and with regulatory.
So you seem to be implying there may be a differential in price in manufacturing a
aircraft
carrier in the U.S. versus South Korea?
Yeah, I believe the difference is almost 100 times. It's not an insignificant difference.
I don't even know how that's possible.
That seems to be the case. The infrastructure has got to be there. We own a number of businesses in the semiconductor space on the manufacturing side. But a number of our businesses are also supported by almost 20 or so trade schools that support the talent and the R&D, and that simply doesn't exist in the United States. So it's not just a matter of bringing in the capital. Whatever subsidies that Korean businesses can get into the U.S. does help, but we've got to run these businesses for a very long time. And that operating difference, having the human capital talent is just as important as getting tariffs down and getting tax relief as well.
Interesting. Serena, you mentioned evergreen funds and continuation funds. What other changes are taking place in sort of the broader private equity ecosystem that we should be keeping an eye on? Or maybe give us a little bit more on those two as well.
Yeah, I think I just wanted to correct one thing I said earlier. So I think, with regards to liquidity for exits, especially in the mid-market space, you're not expecting an IPO anyway. You're expecting
your sale,
a strategic partner, and you still see a lot of that happening because the reality is that corporate businesses still need to expand. What we do see is this market actually is a good reset for a lot of the private equity in general. There have been a lot of players who have been able to raise fund after fund with very with track records which are probably not as great as they should be on the back of this low interest rates and this a booming environment. So I think there's a quote that came out to say that many private equity players who have raised their last fund, they just don't realize that yet, right? And
why don't they realize that yet?
And I don't think it's a bad thing. So from a perspective of an allocator, you do want to see that market streamline a little bit and the top quartile managers truly being top quartile, and then everybody else still performing, but really still making more than what an investor would make in the public markets. And that's the idea behind it, right? You need to have your private markets beating your public markets even for managers who are middle and a bit lower than that, because otherwise, why do you exist, right? So you see that. You see a lot of managers now extra focused on having their operational team in place to ensure that they have ability to go in straight away, grow revenue, optimize for costs, put in the right governance structure and talent pool in place. Everyone has always said they do it, and Scott knows this, but many just say it. And the reality is today, if you don't, you just can't drive the returns. So there's structural changes inside private equity today. And the last piece around that structural change is cash flow management. I think historically, private equity players have been very tardy with how they manage cash flow. A lot of it being because cash flow comes from the sovereigns. Sovereigns have much lower cost of capital, so they allocate, they let you take your time to buy, and the commitment sits there. The opportunity cost actually is really high for the balance sheet. I think today everyone is a lot more impatient, and that's the right thing to do because that creates truly a longer lasting private markets for everybody, not just sovereigns and large institutions.
Right. You mentioned sovereigns and institutions. On the fundraising side, I mean, you know, we see in the U.S. there are vehicles that try to access retail money, for example, and or permanent capital in some way. Are they running out here and places to go, private equity?
No,
so
it's just started in Asia. So Asia's going, I think you're going to see that boom happening here with all the big shops starting up. You know, capital formation used to be institutional sovereigns. You'd come and cover GIC Temasek and then the range in the region. Now you have an even larger team that's here covering all the high net worth individuals, covering all the banks, all the distribution channels. So effectively, there's a proliferation that's going to come out into starting obviously in places like Singapore, Hong Kong, but really across the region around Southeast Asia. The biggest caveat to that is just to ensure that people know what they're buying, because you're not buying a stock. It might say it's an evergreen, but it isn't buying an NVIDIA stock. You can't sell it tomorrow. In fact, you may not even sell it in a year. So that part is where regulator, education, ensuring there's no mis-selling is key.
Yeah. Scott, on the purchase side, I'm just curious to get your sense of things. What are multiples like in your market, Japan as well, where I know you can be active, and what are the expectations? I mean, we talk a lot when it comes to broadly speaking about M&A, aligning obviously seller and buyer expectations when it comes to value, not to mention the impact that rates have in terms of overall returns. But
well, I think when you look at purchasing, we are both Japan and Korea are working off of a lower public market. So the acquisition multiples there was a time where acquisition multiples, there was a case made maybe about a dozen years ago that acquisition multiples in China should have been higher because economic growth was higher. I don't think anybody thinks that anymore. And if you look at more of the value markets in Japan and Korea, you are seeing the opportunity to do multi-billion-dollar transactions with ownership and change opportunities at high single digits. Both markets have a lot of domestic liquidity that you can get right now. We can do acquisitions where really whatever leverage we want at approximately 5%. That's pretty attractive. When I was in the U.S. and I was talking to our buyout friends and saw the cost of capital, so the challenging interest rate, the higher interest rate environment, of course, exists. But businesses here, you have the opportunity to get more idiosyncratic returns because these capital markets aren't as efficient, and the competition for deals is not at the levels that you would see, I think, in the U.S. or Europe.
So are there private credit guys in Korea, like with the financial sponsor deals?
Yeah, we've had some private credit. I know private credit has really taken off, but at least
well, not at 5% returns.
Yeah,
they're not going to.
And I said that to a very extremely capable private credit manager in the U.S. who came, and I said, we're getting 5% acquisition financing for 70% of our transaction. I don't know what part of the capital structure you want to be in. So it is different. I think the private credit here, the markets have been a little bit more on the distressed side, and it's probably things that at those returns you might say you're maybe taking a little bit of risk. But the purchase multiple, particularly if you're doing private equity and buyouts, is going to be more dependent on what are they trading at publicly and what kind of a control premium do you need to get them out at. For example, our portfolio, which is a Korea-only buyout portfolio, about 65% of our revenues are US dollar denominated, meaning most of our businesses are selling outside of the country. And if you take that multiple and look at a comparable transaction in the US, you are going to say if valuation is an indication that you're taking more risk, then there is a case to be made that you can get into more attractive opportunities that present less risk on purchase multiples in Asia.
I don't know if there are any questions from the audience, but if there are, let me know. Raise your hand. I'm happy to take them. Scott, are leverage ratios very similar in Korea, Japan, as they are in the U.S.? Are you talking, less?
In terms of leverage multiples?
Yes.
They're probably a little bit more than what you can get in the
so
U.S.
5% capital at a higher...
5% capital, and the U.S. is really a capital markets leverage market, whereas Japan and Korea is really a bank lending market. So that's going to depend on relationships, and less capital market dependent with this kind of volatility may not be a bad thing.
Right.
I think you see that across Southeast Asia as well, in fact, right?
Yeah.
With the credit markets being much more reliant on the banks and some form of government sponsorship, depending on the businesses that you're in, especially in Southeast Asia now with data warehouses, semiconductor. So it's a little bit less of a private credit market at this part of the world.
Do you see private credit trying? I mean, granted, again, you're not going to be getting the double-digit returns perhaps that are available in certain parts of the capital structure in the U.S., but given all the money they've raised, I would imagine they're focused. Is there an opportunity to disintermediate the banks at all? Serena? Or either one? Scott?
Yeah, I think it's less. I think a lot of the private credit opportunities, to my understanding, in the U.S., a lot of that was a little bit regulatory driven in terms of what was the opportunity for big banks to lend a couple of years ago. You don't have that in Asia. Also, on transactions, it could be common to have government banks and government capital bring down the cost. So I think the double-digit kind of returns, they will be there, but you're going to have to take a lot of risk to get those returns.
Interesting. All right, it's prediction time, so I want to get both of you to sort of tell me what your expectations are as we get deeper into this year and into next year for both of your businesses and your markets. Serena?
So I think we woke up in 2025 with the hope that the winter of the M&A market would be over. But I think winter is here to stay for a bit longer. With the uncertainties prevailing, I think what we hope to see is the second half of the year a little better than the first half. Hopefully, he runs out of energy on the daily commentary, so that should help as well.
The he being Donald Trump, I assume. Okay. Yeah. We don't even need to name him anymore. He's just he.
I think we need that to happen to see real distributions come back in private equity. People are accepting of the CVs. No one wants to see CV over CVs. So you want the IPO market to open and you want M&A market to open. I do think, and I'm in this space deeply, so I obviously have to really champion this, but the reality is that end of 25, you want to see the number of M&A activity definitely higher than 23 and 24. And 23 and 24 is basically flat. And that wasn't a good indication. So 25, we need to see that at least 25% higher so that the businesses can just keep going, right? Yeah. The underlying businesses are fine. And I think that's one point to note. With all your good private equity managers, the underlying businesses, especially for your mid-market guys, these are still strong businesses, generating real cash flow, generating real profits, doing real things for real people, right? It's not airy-fairy type activities. But for the private equity managers, they need to be able to exhibit exits for their LP allocators to keep allocating to them.
Yeah, I think there's going to be big divergence, maybe even more so before. If there was a Asia private equity index, I'm not sure I would be a buyer of that index. You're going to see a big divergence in performance and exits and liquidity depending on your strategy between growth capital that is IPO dependent versus control deals that are relying on what is our pretty favorable and liquid leverage markets on top of a more a market for control. You're going to see, I think, divergence between maybe the more growth domestic plays in India and China versus more of the value plays in Japan and Korea. And these are very, very different markets. And that manager selection may be more important in Asia private equity than in markets where the capital markets don't have this much divergence.
Okay, but divergence aside, broadly speaking, I mean, do you share some of Serena's concerns?
Yeah, I think so. I am optimistic that those who can hold their businesses a little bit longer, that you're not going to have as much divergence. We also don't have public markets like the U.S., which I'm not sure. It's very difficult to beat S&P over the last 2 years. It's not as hard to beat an Asia public market index. So for those who are saying, I do want Asia exposure, private equity and the returns that they're generating have been relative to the public markets pretty attractive.
All right. Scott, Serena, thank you both. I'm going to leave it there. Appreciate it.
Thank you.
Thank you.
Thank you so much, David. Thank you very much, Scott, and also Serena. And you heard Serena there. Obviously, they were talking about private equity, and Serena was saying that we're just getting started here in Asia and that we're going to see a boom. So another glass half full conversation. Thank you so much for those insights. So naturally, we're here at Jewel, and it's not just an amazing event space, but it's also a shopping mall. And it does enjoy quite a lot of foot traffic because it's got the advantage of being close to Changi Airport. And we heard yesterday that Changi Airport has about 40 million tourists, people passing through every single year. But broadly speaking, physical shops have taken a bit of a hit. I mean, hands up if you do the majority of your shopping online. Yep, yeah, quite a lot of us do our shopping online, or at least the majority of our shopping online. And so I guess the problem here is, of course, how do you make sure that it all flows nice and smoothly, it flows on time, because the customer is increasingly impatient. So we're going to be talking about this. We're talking about how do you make sure that the customer is happy, that you get the product delivered to them on time, that you don't strain the systems, and you also don't compromise the quality of the product as well. Let me bring to the stage now two people, Javier Bilbao, CEO Asia Pacific at DHL Supply Chain, and also Tomaso Rodriguez, the CEO of Talabat, and their host for this session is CNBC's Julia Boston. Thank you.
Thank you so much, Mandy. Ooh, and good morning again, everyone. This is a fascinating time to have this conversation about speeding up the supply chain to meet customer needs, because here we are 5 years after the beginning of the pandemic, which fundamentally transformed the way people thought about the supply chain and about the importance of speed and the expectations of how fast things would get to them. So Javier, CEO of Asia Pacific DHL Supply Chain, and I have to point out that DHL is the world's #1 contract logistics and transportation specialist, and you started in logistics when you were just 25 years old. And then Tomaso, CEO of Talabat, transformed the food ordering business in the Middle East when it launched in Kuwait in 2004. Both of you are using big data and technology to optimize your supply chains and improve the customer experience. So before we dive into your businesses and the role of big data and AI, I want to sort of level set. with what you believe has changed in the past 5 years, since March 13th, 2020. Javier, let's start with you.
Good morning. A pleasure to be here. I think if you want to summarize it, is everything accelerated. All the trends that we had identified before that were likely to happen within a time scale of 5 to 10 years, all happened much faster, and volatility has become the norm everywhere.
And for DHL, I mean, which was always in the business of logistics,
it helps us thrive in being able to adapt to all those changes. I think one of the key things for me is it kind of vindicated the role of logistics in the world. Before the pandemic, logistics was just making sure that things were shipped. It was, in theory, an easy task to do. I think we proved that we were an essential part of everyday life. We were needed in the day-to-day of what was happening with our lives. And we proved that we could be flexible, that we could respond to all those changes and keep things moving despite all the challenges that we've had to face.
And Tommaso, what did it mean for you? You had already been at it for a decade and a half before the pandemic started, and then all of a sudden food delivery became an essential service.
That's actually true. Maybe I explain very quickly what it's all about, because I believe probably most of the people in the room don't know, given we're a Middle Eastern company. But we're basically a Grab for Middle East without kind of the ride-sharing piece. We're focused on food delivery, grocery delivery, and fintech. And you're right. Look, throughout the pandemic, we were one of the massive beneficiaries of that in terms of business. But the reality is that on day one, and actually the first week, we were super worried because I don't know if you remember, but at the very, very beginning of COVID, people stopped using any single product and service. And for food delivery as well, people were thinking, oh, is the rider touching my food? Who's touching my food in the kitchen? And they were super worried about that. And so for literally, I think, 2 or 3 weeks, we went to 0 orders. After 15 years of operations and growing for 15 years, 50% CAGR, we went to 0. And we thought, okay, this is it. This is the end of our business, right? But actually the opposite happened, and orders started to grow a lot. And what we had to face was, okay, how do we make the whole supply chain, the whole last mile delivery much more efficient, right? So the work that happened in the last 5 years has been really behind the scene, that the part that no one sees, but it's like, how do you optimize your fleet and you make it much more efficient, deliver more orders? Because we scaled from say 10, 20,000 riders to now we have 130,000 riders on our platform, right? And we built a lot of machine learning tools, a lot of AI tools, etc. And I think the efficiency we have today is something that was really unthinkable 5 years ago.
And here we are now, and DHL has really invested in this end-to-end logistics, making sure you're really participating in every part of the process. And it seems like particularly leaning into this now more than ever. Walk us through that strategy and why it's so essential, especially here in Asia.
Yes, and it's becoming more necessary as the years go by. DHL, as you mentioned earlier, is the world #1 logistics company, and it has some very strong verticals. We do the international air and ocean activities. We do the express international. We do DHL e-commerce, which largely focuses on domestic delivery, and DHL supply chain, which is the one that looks at domestic warehousing and distribution. In each of those verticals, we are the leaders, and we're very specialized in what we can do. Now, there were question marks in the past of how do you connect all four? As change has accelerated so rapidly, as said earlier, it's more and more of a need that those end-to-end supply chains get connected. What happens in one part of the world has a big influence on what can happen elsewhere. So how you are able to transfer knowledge, visibility, how do you use that AI that we've been talking about to predict what's going to happen in those future steps, and how you're able within your ecosystem to react to those changes, to those threats, and shift the volumes in the right direction to make sure that things do get to that end point.
So for both of your businesses, this idea of using data and AI for its predictive abilities is really essential. How are you using it at your company, and has that evolved over the years?
So we're using AI in a lot of areas, right? But there's customer. But what we're focusing on right now is really on all the revenue-generating areas, right? So we're focusing a bit less on the cost-cutting areas because we believe companies will massively benefit more on the revenue side, right? On the consumer standpoint, is really how do we convert all the customers that today are not ordering into ordering, right? A vast majority of the customers that open our app every single day end up not ordering for whatever reason, right? And I think that if we are much better at, targeting those customers with the right offers and whatever, we'll be able to convert them. Like a bit like when you open Netflix and you don't find what you want to watch, right? In the first 2-3 minutes, you may end up not watching a movie anymore. Same for food. If we're not good enough to recommending you, you will not order food, right? On the other side, for example, on the sales, we're now using agentic AI on sales pitches, right? Lead qualification, for example, if you want to convert a new vendor to come on our platform, you can have today an agent that have the first call with the decision maker and qualify the leads. The person will ask some questions about the business. The agent will, take notes, put all those notes on Salesforce, give some basic answers and whatever, and then you can pass that lead to your Salesforce, and they can close the deal. And that augments the capabilities of your Salesforce, right? Another big area for us is groceries. In the groceries business, we are empowering a lot of these small retailers to advertise to very specific audiences, right? And this was not possible in the past. If you are a CPG company, today the only way for you to advertise in a grocery store is basically to buy space, to buy an entire shelf or a display. And that's extremely expensive, right? And you cannot really do that if you're a small guy, right? Through platforms like Talabat and others, you can really now target very specific audiences and enable also the long tail of CPG's companies to succeed.
And walk us through a little bit of the predictive abilities, that if you give a discount of a certain amount to a certain type of customer, that you're more likely to drive certain outcomes. And are there predictive abilities you're also able to give to your restaurant suppliers?
Yes, absolutely. So if you for example, I could say, I know that Julia is not super big on sushi. I don't know whether that's true or not.
I love sushi, but
okay.
Yeah.
So let's imagine what do you don't like? Is it?
I mean, I'll try any. Food in Singapore is amazing, so I'll eat anything.
Okay.
But so if there's something I didn't like.
Okay, so
burgers. I don't want burgers.
Okay, so if you want to convert Julia into burgers, that will be very hard, right? You may have to give her an amazing deals, right? But maybe Javier loves burgers, so you don't have to give him any deal to try your brand, right? And before we were doing this through personas, right? Before AI, like you have to say, okay, there's a group of people that have these preferences, a group of people that has these preferences. Now with AI, you can go very deep to the single individual and know exactly what that person is more likely to want or not, right? And that's really where all our focus is going right now.
Javier, yesterday we heard a lot about robotics. Mark Benioff talked about the sort of physical manifestation of AI and how we're really entering this age of robotics. How are you using robotics in your warehouses, and are they replacing people or augmenting their capabilities?
We're using that very extensively. If we look at how we used to pick products in the past, there was zero robotics interaction 8 years ago, let's say. 45% of our picks today have a robot participating in the pick. And I could say it's not replacing, it's complementing the humans in the way that we operate. There are tasks, for sure, that previously were taken on by humans that are heavy, are very repetitive, and those are being transferred to those robots. What we've seen is, on the one side, an acceleration of our ability to use robots across our supply chain. with AI accelerating the capability of local developers to innovate and create new designs. We have a massive network of innovation centers and innovation corners connecting with the local ecosystem, identifying robotics opportunities that we then test in our operations, and we scale up and replicate. That is giving our customers the ability to adapt to an environment that is ever-changing for them. It's very difficult for one individual organization to identify what is that technology that will drive their needs for the future and invest heavily on those. When you do it through an organization like ours, we identify those capabilities, we put it in place, and we do it in a multi-user environment. We have a concept that we call robotics as a service, where we make the robots available to our customers. We ship them around. You were talking earlier about the predictability. Through AI, we can better understand and connect different chains of the customers, the different moments in which they will be needing those robots, and we ship them around. But we're seeing autonomous capabilities becoming more and more available, allowing for those robots to move around the warehouse on their own. Vision AI is one that has also given us a lot of advance as well. You don't need IoT anymore. You don't need gadgets to be present in the warehouse to be able to track where the people are moving, where the MHE, where the heat maps are, where you have bottlenecks, where you have a lot of activity happening simultaneously that may need rethinking of it. And it's amazing how fast we've been able to touch every single part of the activity that you do in the warehouse, from unloading a container with a robotic arm that will pick each of the cartons, to then palletizing, bringing to the shelf. We are now testing actually doing the picking, which is the part that has been the most difficult, having robots that go and suck a product and put it into the order line. Robots that move those picking or picked products across the warehouse and then make it ready for dispatch. The strength in robotics is giving us flexibility. Peaks that happen, and you will know that very well, around Black Friday or Cyber Monday or all these events, they spike up so quickly, it's very difficult to bring people that understand the process, that know how to react. Robotics helps us in that scalability because they know how to do it from the get-go. So you just need to add more robots to it.
Yeah, and just a quick question on your recent investments, because you, over the past couple of years, invested $350 million in Southeast Asia and made a $500 million investment in India. How much was robotics and all these new capabilities part of those deals?
That was a very important part. We invested in three things. We are investing in infrastructure, making sure that you have that physical capability to, host all those robots and volumes, etc., in a way that, again, makes it flexible. You can't flex up and down the space, but you can locate them in the right places and be able to the new demand that is coming. That's number one. Number two is investing in people capabilities. Things are changing dramatically. The capabilities that we needed from our people before are changing. We need a lot more, I could say, logical approach to how we do things, more mathematics, more engineering in the way that we operate. And then the third one is in technology. It's interesting because just 3-4 years ago, you could not think of having robots in many countries in APAC where labor costs are so low. Because the labor markets are becoming more difficult, and because the technology is becoming cheaper, through all those innovations that we were mentioning earlier, there are now providers of robotics based out of India, based out of Japan, for example, surprisingly very competitive. And we're seeing that growing in countries that were very difficult to automate in the past, like India, Malaysia, and it's growing fast.
That's fascinating. And Tommaso, give us your perspective. You mentioned you're an alumni of Grab. We heard from Grab's CEO here on stage yesterday. And in so many ways, there are similarities between what you're doing and what Grab's doing, minus the ride component of Grab. But what is the opportunity you're seeing in the Middle East right now? You started in Kuwait, expanded to 8 countries. How is it different from the Grab business here in Southeast Asia?
Well, I think it's somehow very different. So we are today in 8 countries across Middle East and North Africa. Middle East is a region that is a great region for our business, right? Because it's a super young population. 70% of people in the Middle East are below 40 years of age. It's a super urbanized population, so we don't have a lot of small cities. Like 90% of the people live in big cities. And this makes our business much easier to run, right? Because you don't have to take care of like all the outskirts of the city, etc. And population is very young, tech savvy, and internet penetration is super high. So that's the reason why I think today in Middle East, when you think about food delivery, is more like an everyday thing rather than kind of a thing that you do once or twice a week, right? And also the difference is that when you're sitting on your couch at home, your alternative is I either order on Talabat or I have to take a car to go somewhere, maybe a few kilometers away to eat, right? It's not like here in Asia where you just go downstairs and you have a plethora of restaurants and food courts and whatever. So that's what makes it very, very attractive to the region. But the interesting thing is that although you see all our bikes everywhere in the region, wherever you go, we do millions of orders a day, so it's kind of a big operation. Still, our population makes 0.4 orders per capita per month. And people eat 90 times a month. So still the headroom is really, really massive. I think people really underevaluate how much food delivery will become something of our everyday life in the future. And people think that it's already a big business, big penetration, but actually it's going to grow much, much, much more in the future. Maybe we're not going to have kitchens anymore in our houses at some point.
I hope we still have kitchens. It seems like we should have the option of both. But backstage we were talking about inflation, and I was really struck by the differences that both of you see in the impact of inflation in the region and your business. Javier, tell us what you're seeing here in Southeast Asia and how it's impacting your customers.
Yes. So there's a direct impact. We mentioned earlier the 5 years since we started with COVID. There was a lot of incentive being added to the economy for a few years, and there was a lot of availability of cash for consumers to spend. With the advent of inflation and those stimulus stopping, the reverse has happened. So we have seen our consumers being a lot more conscious on how they spend their money, moving away a bit from the modern trade type of commercial activity and going more to their local, more accessible type of commerce, which is an interesting contrast with the amount of FDI that is coming into this region, the amount of capital investment that is happening, which is fueling the macroeconomics. It gives us confidence that in the future all of that will trickle down to the real economy. But for the time being, our consumers are a bit hesitant as to how much they really want to invest in their day-to-day, in their leisure, and in buying cars or things of the like. So it's a bit of for a region that is used to constant growth, it's a bit unusual to see how it's stagnating a little bit right now. And I would say the biggest word is uncertainty. We've been discussing with the customers for quarter after quarter, when do you think that this will pick up again? And we keep saying, in 2 quarters from now, maybe, we'll see. And it hasn't yet happened.
And in the U.S., there's so much talk of trade wars and tariffs. Is that something that's also driving the uncertainty?
I think at a macro level, yes, there is some question marks around that. I don't think that has yet hit the consumers. It's not a topic that is so prevalent here as you perceive in other parts of the world. But what we are confident about, though, is that trade will continue. Trade is a very significant component of the economic activity of all parts of the world. There has been trade wars in the past. There have been, moments of difficulty, and global trade has been very resilient. We just issued last week our global trade atlas that looks at the past and predicts the future. And it's interesting on the one side to see that over 75% of global trade doesn't touch the US. So this trade war that we're seeing will impact a significant part of that, but not all of it. And that part that is not touched is predicted to grow.
Yeah.
The expectation is that it will not be at the pace that it's been growing in the recent years, but it's about 3% per year until 2029. With some countries here in Asia-Pacific actually being the ones that will benefit the most. We're talking about Indonesia, Vietnam, India, and the Philippines as 4 countries that are supposed to, or expected, to really be above that average.
Fascinating. And what about the Middle East? You're having a different experience there.
I think Middle East is a bit different right now when it comes to the macroeconomic of the world. Although we had a kind of our share of inflation, but probably not as high as many other parts of the world, especially in the GCC countries. But when it comes, for example, to Egypt, which has been going through massive inflation and at the same time massive currency devaluation, there's been a big impact there. But for our business, the impact has actually been positive somehow, right? Because when prices start to rise and the currency started to devaluate, people stopped buying things that were USD denominated, right? Like a new car or traveling and things like that, and started buying more stuff in the country, right? For us, kind of food delivery became more of this discretionary spend that before you would spend into kind of a luxury good or travel or etc. Now you do food delivery, and that's actually been a positive impact on the top line.
Interesting. And do you expect that to continue, or do you think there's, again, with the uncertainty, what are you seeing in terms of uncertainty?
I think that now things are stabilized in the region more than before, and there's a very positive optimism towards the future of growth of economy and the outlook on the region. Also, us as we have our own grocery business where we have our stores, quick commerce stores where we deliver super fast to the customers, and our import range actually in the last 2 years have been increasing. Right, we're importing more and more products from outside the region using partners like Javier. So our share of imports is increasing, right? So I think, yes, there's trade wars going on, et cetera, but I mean, the future I see, more trades happening rather than less.
Yeah. And Javier, you have these partnerships, but you've also been investing in your own e-commerce strategy. Tell us about that and why it makes sense, as opposed to just partnering when it comes to e-commerce.
We have seen that e-commerce is a trend that has come to stay. We have seen that obviously being accelerated much faster than anyone thought. And people get used to it. People like it. And as you were mentioning, Tommaso, earlier about the opportunity still on food delivery, etc., it's similar in many other aspects of the supply chain. The worry that we've all been having is that sustainable? Can we continue to grow e-commerce in the way that it's been doing so far? And it's great to see some very good developments in terms of packaging expectations. How can we reduce the amount of packaging that goes in there? But also, how can we make sure that all those deliveries that happen simultaneously are done in a way that they don't collapse the roads, they don't have an impact on how we operate as a society in general. And in that sense, DHL has been investing big time on sustainability, on electric vehicles, on robots that are able to deliver with the minimum impact possible on the roads. The e-commerce element also has a component of last mile delivery that is very fragmented, but with a long supply chain that needs to be interconnected in many different ways. This globalization of how you respond to the logistics needs of every particular country. You can have a very specific strategy for one country, but you can't forget that it will need to be connected with what is happening outside. So that's where our e-commerce bet, in a way, which is one of the 5 key mega trends that we have identified in the DHL Group strategy for 2030. One of them is e-commerce. We're seeing how we can use that strength that we have of touching all the different elements of the supply chain to give e-commerce the resilience that it needs. And sometimes customers don't want speed, they just want the product to get there on time in a cheap fashion. Some others do need the product to be delivered in 10 minutes. And how you adapt your supply chain to have that little store for that quick delivery, and at the same time that ability to predict when that other product that can be delivered in 5 days, what are the routes that will follow together in the most efficient way.
Fascinating. This is a good opportunity to open up for questions. Are there any questions in the audience? If not, I have a couple more before we run out of time. I don't see any hands. So if there are no questions, oh yes, there's one up here in the front.
It's coming.
Thank you. I'm curious, both of your thoughts on alternative ways of delivery, drone delivery, robots on the streets, and what you're thinking when it comes to that.
Good. We have done both. We are making trials, connecting with local organizations. For example, in Tallinn, in Estonia, we had a trial where we had a totally autonomous robot that could drive on its own on the street. It could do milk run deliveries, no human interaction in the delivery to the final customer. We received really good feedback from those that were delivered. It's very quiet. It works well in areas that are congested and that have restrictions of traffic. Drone deliveries, we've been similarly doing tests to support remote areas, more than what people think of using drones to deliver within a city, which is way more complex for many reasons. But attempting to deliver to remote locations that are difficult to access by road, or ones where snow, etc., make it difficult to access, those have proven to be more successful. But I think that will be the solution of the future, but it's a bit too early yet. We are doing a lot of tests, a lot of validations of assumptions, etc., but then you get into local restrictions. Are cities, are towns comfortable to see robots moving on their own? In all the tests that we've had 0 incidents, 0 situations in which there has been any conflict with the human or anything of the like.
Tommaso, I live in Los Angeles, and there are robots that roam around and deliver food, these little small vehicles. What are you doing in the Middle East?
So we're doing a lot of pilots and trials. We had our own kitchen at Expo in Dubai, and we were delivering only with robots across the Expo site, etc. We're doing drones, pilots, etc. I think technically it's feasible, and I mean regulation-wise it's feasible as long as you cooperate with the governments, etc. I think both methods of the delivery has a major flaw, which is for robots you have to go pick up your food for drones you have to pick up your food at a drone station, right? And for robots also they cannot come to your door. So our riders come to your door, no matter where you live or how difficult it is to get to your apartment. I know in Europe, for example, they ask you to come down, etc. But in Middle East, customers are used to get the food delivered to their door. Actually, the next service we can provide is probably put the food in your mouth, right? That's really where the business is going, right? But so I don't see people giving up on that and saying, I go take it. So maybe you're going to have a mixed solution where you have a hub and spoke model where you deliver with a drone to a hub, and then you have a rider that go pick up from the hub to the customer. And that's probably a more viable model. But on the last mile delivery, I still think the human action, the human interaction is still very important, and it will not be replaced for quite some time.
Echoing a lot of what we heard this week about the importance of AI, the importance of robotics, but still humans in the loop, as they say. Tommaso and Javier, thank you so much for this fascinating conversation. I'm glad we got to end on robots. Thank you.
Thank you.
Mandy, thank you.
Thank you so much to Julia Boston and also to Tommaso and Javier. Javier mentioned one statistic that really actually made me sit up and listen, and that was that over 75% of global trade does not touch the United States. Just think about that for a second, because so much of our daily news flow, when we talk about what's going on in the world of trade and tariffs and trade wars and tit for tat, etc., we always think, therefore, that so much of it must be going through or via the United States. But in actual fact, he says over 75% does not touch the United States. It really puts it into perspective. And I also really liked what Tommaso was saying about the AI's predictive qualities and abilities, and how it's really changing the game for food delivery. And ultimately, who wins? It's us, the consumer. So let's move on, shall we? Because I'd like to turn our attention now to what's happening with family offices. Apparently, they're booming here in Singapore. Just how much are they booming? Let me give you some facts and figures. According to the central bank in Singapore, the city-state now hosts more than 2,000 single-family offices, which is a 900% increase from only 5 years ago. What's behind the boom? What's driving it? Well, let's bring in CNBC's Robert Frank, who is the wealth editor all the way from New York City, along with his guests. Let's welcome to the stage, give them a big, warm round of applause, Srihari Kumar, principal with Lion Rock Capital, LH Ko, UBS Head of Global Family and Institutional Wealth, APAC, and Tuk Meng Yi, partner at JRT Partners. Robert, the floor is yours, sir.
Thank you, Mandy. Thank you. Guys, great to see you. Thank you so much for joining us. Is my mic working?
Not sure. I don't think so.
I don't know that. Yeah, I'm not. There we go. There we go. Thank you guys so much for joining us today, and thank you all for being here. So, as I talk to investors in Singapore and in Southeast Asia recently, it's like there are these two investing universes now, where in the U.S. we have about $5 trillion in wealth destruction over the past month, a lot of volatility and questions about the future. And yet, as we heard from Joe Tsai and others yesterday, a lot of optimism here in Asia about the hopes for China and the hopes for what could happen here in this part of the world. When you guys think about where you invest your money around the world, Harry, when you think about the U.S., you do a lot in India, you do a lot in Southeast Asia. How is what's happening right now affecting your decisions for where you're going to put your money?
Yeah, so I think, Robert, like Lion Rock itself is a long-term growth equity investor. So from that perspective, over the last 5 years, a lot of our investment has been in U.S. technology, in India, and some in Europe. I think China, generally for a lot of investors, has been a smaller part of their portfolio, given something that's happening domestically there. I think what's happened over the last few months has changed some of the dynamics. So even for us, and I think as we talk to other family offices, they started saying, okay, what about, can we reinvest in China? And I think that's definitely increasing. You saw things like DeepSeek, and China has really come to the forefront in doing a lot more, especially in AI, with a lot less that's available to them. So I think that's quite exciting. In Europe, some of the thematic is really around defense. How much will they spend on defense? Is this going to be an infrastructure spending as well? So even if you look at our portfolio, which was 40% US, 40% India, and 20% the rest of the world, it's now US is 25%. Now, I wouldn't read too much into it, because I think as we talk to investors, a lot of us are cautious near term globally, but long term, we continue to believe in some of the structural themes. The only other thing I would mention is sort of just from an asset class perspective. I think private investors probably over-index to private investments, family offices over-index to private investments, and that might change a little bit because liquidity and distributions has been limited there. So as I talk to families in Singapore, looking more at China, looking more at public market investments, looking more at tech.
And Tuck, what about you? When you think you invest very globally as well, when you think about where to put your capital this year, how does the U.S. fit into that, and how does Asia look right now?
We invest in endowment style, so we're based in Singapore, but it's an endowment style, multi-asset, international. So obviously the U.S. is also a big part of our investments. I mean, tech is very much anchored in the U.S. So in terms of the U.S., the growth equity beta part of it is heavily in the U.S. So AI is the theme of this conference. It's part of what we do there. And there are a few companies that we really like on the AI space. In terms of...
Just before you go on, what are the few companies, before I forget, that you like in the AI space?
Oh, my God. Okay.
You're actually putting your money in.
Okay. Well, in the U.S., in terms of AI and in data, just to be very relevant to the theme here, we're looking at the the middle layer, which is basically the data. So the data classification, that's actually even more important if you want to have good data coming out, not just garbage in, garbage out. So a name is Cognaze, for example, in the banking sector. It's gone. Just all got up. Cognaze. Another one is Conx AI for construction tech, low code, so for builders who are very tech non-savvy to do that. And finally, Super Annotate. So we actually have agriculture in Australia. We do livestock. And Super Annotate for visual data is a good way to figure out for visual data, is that sheep or is that a white bush? Is that a tomato or is that something else, right? So those are just two examples. But just on that theme, we're in Southeast Asia. And in Southeast Asia, again, you've seen the demographics, right? 600 million people. We deal with the West, we deal with China. And here in Southeast Asia, what we like is a company. Do you want to do company or just describe Southeast Asia, Jeff?
Yeah, just what types of companies are you investing in Southeast Asia?
Well, one really interesting one right now is a company that helps multinationals with the soon-to-expire inventory here in Southeast Asia. And the reason why it makes sense is globally, it helps their efficiency. It helps their profitability, and for Southeast Asia, it's helping them sell the soon-to-expire inventory to that marginal buyer in Southeast Asia. They'll actually are able to pay some price, or low price, and they'll take that very short-to-expiry order, right? So you can take a short shelf life for low price, and Southeast Asia, that's a big market.
All of this discussion of tariffs and the impact that it's having on confidence and uncertainty in the U.S., you seem like a very long time horizon investor. Has that not changed how you see the U.S. as a geography to invest?
Oh, no, absolutely. The U.S. is as big now because it's developed so much. And the U.S. dollar is a reserve currency. So I'd be lying if I said that we were aggressively putting more currencies into the U.S. dollars or keeping our U.S. dollar allocation right now. But we want to invest a lot more into Europe. We haven't in the past. So in Europe, right now, tactically, we like some of the listed investment, the more liquid markets, listed investment trusts. They're looking at very good values there. In Asia, on the listed side, we want to keep liquid. Indonesia is trading at COVID levels in the stock market. China is half the U.S. valuations, right?
And LH, UBS did a study of family offices. They surveyed family offices, and they found that by far the number one investment theme for 2025 is AI. 78% of family offices plan to put money into AI, and that blew away any other category. Do you see that with your clients, and do you think that will continue to drive family office capital that may be based here in Singapore, but finds its way into the US and to some degree Europe?
Yes, we believe that this trend, focusing on AI, will still continue. The clients that we talk about, and I cover the whole APAC region with hubs in Singapore and Hong Kong, and our family offices clients are focusing on this as perhaps the most interesting and important sector. Actually, a lot of our clients are globally diversified already in terms of their investment. So they are already investing into the US, both in the private markets as well as in the secondary markets. And of course, with DeepSeek, right, there's also a new sort of enthusiasm on what's going to come from the players in China, and this remains a very interesting space for investors.
Yeah, and Harry, you're kind of one of the old money family offices now in Singapore. Your family office is now like 15 years old, I think.
That's right.
Mandy mentioned the growth in family offices over the past 5 years.
Yeah.
What's it been like for you to be one of the first really active family offices here, and do you think that growth will continue that we've seen?
Yeah, no, I think Singapore is a very attractive jurisdiction to set up family offices. I think one is that you have obviously the government incentives. Outside of the tax incentives, I think you have really strong government support. We interact actively with Economic Development Board, Enterprise Singapore. They're really creating a family office ecosystem where we can share ideas, access global investment ideas. So we found this to be a really good jurisdiction. I think one of the things that's interesting in our dialogue with the government is that out of the 2,000 families, I think 10 to 20% are very active here. They have significant presence, they're investing actively, they're involved in the ecosystem. And I think that number is going to change. So even if you look at our journey, we started out just doing public market investing. Our team grew. Our average employee's been with us for 8 years now. Then we started doing private investments, invest in startups in Singapore and funds in Singapore. And then over the last 5 years, set a foundation to do philanthropy. So I think that's kind of a journey that many families will take. And I think Singapore provides, a very sort of good environment to do that.
And Tuck, we had Ray Dalio on yesterday, and Ray Dalio has been so powerful in helping family offices find skilled talent here in Singapore. He's working with the Singapore Wealth Management Institute to train workers in finance. I know you do a lot of it yourself, but how has that skill set and ecosystem in Singapore made it an attractive place for you to be based, even though your capital is all around the world?
To parrot Shree's, or to support Shree's comments, I think I'll give you, 4 words, basically, right? Location, ecosystem, convenience, and orientation. So if I work around that, what does location mean? We're right in the middle of Asia, right? We've got Southeast Asia, where we are. We've got East Asia in our east. We've got South and West Asia on our west, obviously. And down south, I'm Australian, originally Malaysian. We've got Oceania, Australia, right? One big market down there. So centrally located from a geographic point of view. Ecosystem, again, Shree's talked about the government, the transparency, the incentives. But it's not just about that. It's the fact that you can get these people to come, all right, to CNBC. And everyone's comfortable. Everyone's able to basically converse. I mean, I talked to a Kenyan pension fund last week. I talked to a Vietnamese fund manager yesterday. I'm talking to a Chinese family office tomorrow, and an American banker basically, right after that. So you've got that ecosystem there, and it's also difference in scale. Startups here, multinationals here in terms of headquarters. You've got a diversity of industries, the usual stuff: healthcare, business services, defense. Convenience. 50 kilometers, so everyone can get everywhere pretty quickly. No traffic jams, more or less. And it's pretty reliable. And then finally, orientation, and that's something that may or may not have been said, but what I mean by orientation is politically, Singapore is about as non-aligned as you can sort of get for a developed financial center.
Yeah.
And I think if you compare Singapore to other developed financial centers, none can really say they're that neutral, that non-aligned. So those 4.
Yeah, and LH, when you look broadly, there's this arms race around the world now to attract family office capital. You see, Dubai, you see New York, you see London, all making bids for trying to attract family office capital, because the growth, right now they manage around $3 trillion in global assets. That's expected to grow to over $5 trillion in the next 3 or 4 years. That's more assets under management than all the hedge funds in the world combined. How do you see that race playing out, and how do you see Singapore's role? It's been a strong leader in this space so far. What will they need to do to keep it?
Yeah. So on top of what Tak Meng just mentioned, I think the efforts by the government, the Singapore government, in terms of giving out all this incentive is also helpful. And this is also an area that it's quite far-sighted, right? Because they are not just giving tax incentive for the purpose of investment. Hari talked about philanthropy, right? So there is a philanthropy tax incentive program that was launched in 2023. And if we look at the report that came out from our Global Family Office survey last year, 45% of our respondents, who is actually more than 300 big family offices, are allocating into philanthropy. So this is also an area that would also enhance Singapore as a location. But what will continue to make Singapore stronger will be the fact that it is still underpinned by huge wealth growth, and not just in the ASEAN region, because ASEAN region will be a very natural place. Singapore will be a very natural place for ASEAN region. But we're also attracting sort of families from India, from Australia, and even sort of the Greater China region as well. The other thing that I thought is important as we talk about the statistics, why they grow to 2,000 family offices, it's actually beyond investment. One of the points that are often not seen as the most important is actually the point about succession and wealth transfer, right? Because now entrepreneurs are looking at actually setting more time and effort and resources into managing their own wealth, as opposed to in the past where they plow back everything into their own businesses, right? And to have a disciplined approach with the right governance and structure will facilitate this transfer of wealth to generations to come, right? So this will continue to make, with the stability in Singapore, will continue to make Singapore a strong hub.
And Hari, you have kids, and how do you think about the role that the family office plays in that next generation, and how you think about that?
Yeah, and I think it's quite interesting because I think, for first generation entrepreneurs or wealth creators, you're sort of thinking about how do you grow your capital, how you run your businesses. And at some point, in my case, my kids are in university now, and so you start thinking about, what does it mean to create sort of a structure for them, right? And it's not necessarily sort of just a easy place for them to come and work, but really sort of think about responsibility, think about legacy. And I think that's kind of the journey that we've been on. I think a lot of families, because I think a lot of the families that have set up in Singapore are also first-generation entrepreneurs and wealth creators. So we're actually looking to the West to see how we should do it, because I think Europe has a long history of creating multi-generational wealth. And, we're trying to find, we work with organizations like UBS to sort of create the structures really around governance, around being smart. And I think one point I wanted to mention to the earlier question was, I think Singapore is just a great place to live. It's very cosmopolitan. So I think both in terms of attracting world-class talent to work in our family offices, but also for family members, they're very happy to live here and be here, because it's safe, good healthcare, good education. And I think so from our perspective, when we create that legacy structure, it's putting all of those things together, thinking about what we want to achieve as a family, not necessarily in the next 10 years. So Lion Rock, we view ourselves as 15 years into a 100-year journey. And I think a lot of families we talk to are similar to that. I think your family is also like that.
Yeah, I'm always interested in the country differences and how they view next generation wealth. For instance, in the U.S., there's this culture where we don't like dynastic wealth. We don't like the idea that you have 4 or 5 generations of a family that are staying wealthy. We like to think we're a nation of entrepreneurs. Right. Europe is a little bit different, Asia a little bit. How do you think about each of when you look for where to go for lessons for you? I
think it's a combination.
Is it very different here in Asia versus the U.S. in terms of the attitude toward inherited wealth?
I think what I see in Asia is a little bit of a combination of both. I think that what we're trying to cultivate with the next generation is responsibility. So, we do, I think in Asia also there's a history where wealth does get passed on. So I think, business groups historically, the next generation would come and run the business group, inherit that wealth. So I don't think a lot is changing there, but because a lot of the new wealth is coming from technology entrepreneurs, you obviously have the giving pledge in the US, people are motivated by that. So they're not saying, I'll do 100% of my wealth, but they say, philanthropy is an important part. So let's have, between 10 and 20% of our income, or up to 30, 40% of our income going into philanthropy every year from an early age. And I think what we also see from the next generation, like, Indonesian families, and so the next generation is very focused on that sustainability, giving back. So it's a combination of both. I don't think, I haven't seen many families that go all the way to the giving pledge side of things, but it's definitely creating wealth that's sustainable both for the family as well as globally.
And it's so interesting, Tuck, to see the Singaporean government get directly involved in encouraging families and family offices to give to philanthropy through these new incentives. And it has to be a cultural thing. It can't just be a financial incentive. When it comes to the next generation, your multiple generations in your family, how do you see the role of the family office?
For us, the beneficiaries are in 6 different countries, right? Some of those are Anglo-Saxon countries, and some of those are right here, so Singapore, Malaysia. And so it depends on each pool of people and where they are. The ones in the West, I think, everyone's informed by their circumstance. So, for example, we've got 2 beneficiaries in the US, right? So for them, LGBTQ causes are very important to them as a way to make an impact. And so when it comes to the giving part, that's where they want their part of their distribution to go to. But they also do impact giving, where they say, well, should we be investing in certain companies that have for lack of a abuse term, DEI focus, right?
Or
so for them,
impact
it's very important,
investing,
right?
yeah.
Impact, right? Whereas I think the beneficiaries in this part of the world are not as focused on that. For them, it's a case of, in terms of the ESG bit, it's less about the E, to be very frank. It's probably more about the S. How do we help poor people? How do we help them with medical bills? How do we help them with education? So I have to say there's no unified goal. And we have to tailor it to each of those parts in terms of the giving part and in terms of the types of investment. But return and risk is still the overarching framework. And then the bits on top are basically that giving and that impact.
Right. And LH, when you think about UBS's role in that great wealth transfer, how do you structure that in Asia, and how might that look different from how UBS does it in the US?
Now, in Asia, because of where we are, of course, we take a lot of learning from Europe, from the US as well. Now, if we look at the second generation, today they are highly educated, right? They have varied interests. They are more conscious about impact, about sustainability. And so
you don't see that as a sort of fad or a trend that in the U.S. we're starting to see institutional investors like BlackRock dial back. You don't see that with your wealthy family office clients right now?
Dial back in which area, sorry?
Just in terms of impact investing, sustainability.
Right.
You don't see them pulling back on that.
No, they're not pulling back. But in the first place, I mean, the baseline is not high, right?
Yeah.
Right. and I'm talking about the attitude. Towards sustainability, towards ESG issues. And these are the areas that, of course, we at UBS spend a lot of time to build that expertise, and we can share those expertise with this second generation. We also provide forum that they can offer this connectivity so that they can exchange ideas. And we started this next generation program way before, right? 10, 20 years. Where we make sure that we help in the education process of this second generation, whether they are in the teens or whether they are in the university or subsequently, later in their life. And of course, we have a very established practice to help to structure, right? The family governance, even the legal structure. We don't advise on the legal structure, but we facilitate that thinking process such that they can do this transfer in a seamless manner.
And Hari, you have such vast experience from Goldman, from TPG, in all these countries. When you look forward, when we look ahead at what is the most exciting investment opportunity or thesis for you in the next sort of 3 to 5 years, what gets you really hyped, pumped to invest in the next few years?
I think it's a consensus view, but we continue to be excited by AI. I think like Tuck said, it's not just the equipment companies, the semiconductor companies are supplying for Gen AI, for Edge AI, but also sort of the software layer. I think what Mark Bonioff talked about yesterday, agentic AI, I think is the real use case, and figuring out which companies will do that and do that successfully, both in the private and public space.
But do you think there's an area where family offices have any kind of advantage versus because everyone's pouring in that space? The retail investors are pouring, the institutional investors, the sovereign wealth funds. Yeah. So when family offices are looking for their advantage, where do you see that on the stack in terms of startups, venture capital, private equity?
I think it depends on the space. So like in the software side, I think there's a number of private companies, so venture capital is an option. So I guess the biggest benefit for family offices is that we're very flexible. So obviously we have no benchmarks. We invest across asset classes, across public and private. So, in the software side, we may be looking at investing in private companies and software through fund partners like Sequoia or Accel or Lightspeed. But on the public side, we can invest in anything that's interesting in the semi-cap space. So we kind of have that broad horizon. I don't think we're necessarily smarter or different. I think we just have a little bit of a different perspective. And we definitely, I think, like Tuck said, we do invest over 5-10 year cycles. We're looking to build capital over 10, 20, 50-year cycles. So that changes the perspective a little bit.
And Tuck, other than the companies that you mentioned already where you're doing some direct investing, what are you excited about in the next few years that you're either about to invest in or just did?
Just on the AI theme, given the conference, maybe extending that into the hardware side. So Ada, I think everyone saw the lady robot.
I found Ada a little creepy. Did you meet Ada? Amazing.
It becomes dangerous when you don't find Ada creepy and you go, I'd rather leave my girlfriend or wife, and I'm spending all my time with Ada. And we already have that. There's a few from China. virtual friend chatbots, right, that you can see where a lot of my Chinese friends said my kids are spending a lot of time talking to a fake social media person, right? And those chatbots do it so well that I go, why can't we use that for basically just chatting? Why can't I see that in really useful chatbots in insurance and banking and logistics? Because when I go and talk to someone from logistics, their chatbot is not the same standard. They're still saying there are only 3 outcomes that you can choose. I'm going, well, I'm sorry, that's not AI,
and
right?
do you guys both I use the word technologist loosely, but you're not technologists. Do you feel equipped to invest smartly in AI?
Me? Him?
Go ahead.
Both of you, yeah.
Oh, okay. I do have a software engineering background, so a little bit of a mea culpa, but very old. I think we know enough to know what we don't know. I think that's, and we don't, then we're very open, and just like Sri, we spend a lot of time getting to know people. It's not just the tick the box due diligence. It's getting a bit of a channel checking, asking friends, asking other people. Do they even have the certificates? You'd be amazed the number of people who don't check whether the other person actually has the background that they say they have. Yeah, let's fail.
Yeah, no, I think the technology is complicated, right? Like especially the semiconductor side. I don't think we can say we know exactly what's happening. But I think what we can do, like Tuck said, is back great founders. And so even in the startup space, that's really the key. A startup was going to pivot so many different times. So as long as you think there's an end market opportunity and this is the right founders and they can understand the technology, that's who we back.
Right. And at UBS, we have great research from our CIO that will be helpful.
That's true. That's true. Well, guys, thank you so much for this morning. We really appreciate it.
Thank you.
Thank you. Thank you. Thank you.
Thank you. Thank you so much to CNBC's Robert Frank, who'll be back later on this afternoon. And thank you also to Tuck, Srihari and LH. I thought it was really interesting the way that we were discussing up here on the stage how family offices aren't just helping people grow and generate their wealth and transfer that wealth from generation to generation. It was also really interesting and I thought encouraging to hear how family offices are really helping to shepherd that money towards important causes and philanthropy as well. But while we're setting up here on stage for the next segment, I'd love to bring up another quiz, shall we? We've got one for all of the F1 fans who might be here in the house today. Here is the question for you, and it'll just be a show of hands to vote for the answer. What is the most revenue-generating race on the F1 calendar? Is it A, Abu Dhabi, B, Las Vegas, C, Mexico City, or D, Tokyo? Hands up if you think it's Abu Dhabi. Okay, quite a few for Abu Dhabi. B for Las Vegas. Okay, about the same amount for Las Vegas. C, Mexico City. No one for Mexico City. Oh, poor old Mexico City. And what about D, Tokyo? Okay, we've got a little love for Tokyo. Well, the answer was B, Las Vegas. You were bang on. The 2024 Las Vegas Grand Prix apparently generated a cool $1.5 billion for the city. And the F1 season, by the way, I should say, just a little home bias here, is going to be kicking off in my hometown of Melbourne in 3 days' time. We're going to be watching Ferrari because it's got a new driver at the wheel in the form of Lewis Hamilton. Now, if you want to hear all about F1 and this new driver, Lewis Hamilton, who I'm sure many of you know, we're actually going to be hearing from the Ferrari CEO himself later on today, so make sure that you join us here at Main Stage for that. But first, I can see that Emma is waiting in the wings here, and she wants to come back up on stage and do her thing. So let's give a big hand for CNBC Catalyst's Emma Crosby to talk about sustainability. Emma.
Mandy? I have to say, I did have my hand up for Mexico City, but you couldn't see me. But never mind. Ladies and gentlemen, thank you so much. Welcome back. Thank you so much for joining us. As Mandy said, we're going to switch focus now and talk about sustainability with critical infrastructure in mind. I'm talking about power, water, and waste management. All of these things are critical need for any modern economy. And the challenges for nations to manage critical infrastructure are immense. But there is one ASEAN country, the Philippines, that is tackling these challenges head-on with a really dynamic partnership with one of the most dynamic companies in this sector, and it's called Prime Infra. And I'm delighted to say we're joined now by the CEO, Guillaume Lucci, the president and CEO of Prime Infra, to hear more about what they're up to. A big round of applause, please, for Guillaume. Come and join me.
Thank you.
Guillaume, come and take a seat there.
Super.
Thank you so much for
Thank
joining
you.
us. It's lovely to meet you. I know you've come in from Manila.
Absolutely. Pleasure's all mine. Good afternoon.
Okay, so Prime Infra, 8 years old. It's a relatively new company, and I believe that you are employee number one, and yet it is one of the fastest growing companies in the sector or in the industry of critical infrastructure. Tell us more about it.
Well, Prime Infra is focused on providing essential services via critical infrastructure. So as you mentioned, this is water, waste management, sustainable energy. And here we need to attend to that infrastructure gap. You know, the Philippines has been stuck in an infrastructure deficit for a number of decades that needs to be attended to, because should it not be attended to, it will continue to be our really number one roadblock to sustaining our economic growth. And it's not only about infrastructure in the Philippines, the region as a whole is in need of a tremendous amount of infrastructure. As you know, Asia will be probably by 2040, 45% of global GDP, over half the world's workforce. So we have a tremendous regional challenge to accomplish. So this is where Prime Infra comes in. We get things done. We are relentless. We execute. We deliver that critical infrastructure. And all of that is the DNA that comes from, of course, the founder, Mr. Enrique Razon, very successful entrepreneur across many different sectors worldwide. So we try to address those fundamental needs. And I think the growth rate speaks for itself. We 8 years, as you rightly pointed out, I'm employee number one. Today we have over 3,500 employees and closed last year with $1 billion in revenue and continue to accelerate on that pathway.
And what you've done is you've spotted a critical gap, haven't you, within your sector. So tell us about that and tell us about the areas in which you focus on.
Yes, sure. So we focus our attention on power, gas, waste management, and water. What that means is that for each one of those sectors, we try to address a fundamental need. So I can take you through some of these elements one by one. So in the water sector, we actually just acquired a very large utility. And through that, we're actually building also as a separate project a very large dam, which is called the Wawa Dam. The Wawa Dam is here to provide water and to compensate for the dependency we have for one water source, which today delivers 90% of the water needs of Metro Manila. And it will attend to about 3.5 million Filipinos in terms of water supply. So that's a significant project.
Should we bring that up?
Yes,
about the
please,
Wawa Dam.
Bring in the Wawa Dam, that would be great.
You've got some pictures. We would love to have a look at them now. They'll just doing their magic over there. And I don't know, we all know what a dam looks like, don't we? There we go.
There we go.
Because Guillaume, you're an engineer, aren't you, by training?
Yes.
And I mean, this is a feat of engineering.
Well, it's the first dam that has been built in the Philippines in over 50 years. It's a significant piece of infrastructure, reservoir of 120 million liters. And as I say, capable of supplying water to 3.5 million Filipinos. Highly instrumented, tremendous amount of technology done in the Philippines in harmony, in a sense, with the watershed. As we, of course, need to nurture the watershed to produce as much water as possible and be able to supply that to our customers. Right?
So you're also solving critical issues in terms of sustainability at the same time, aren't you? Because you're supplying a regular water supply, but also you're helping with flooding.
Absolutely. So the Wawa Dam actually plays a role in terms of flood mitigation. We were very fortunate, in a sense, when we impounded the Wawa Dam last October with His Excellency President Marcos. A couple of days later, there was Super Typhoon Karina that came in, and we managed to actually absorb the brunt of the flood, which turned out to be a very good thing for Metro Manila, in spite of all the other problems what we couldn't catch caused.
I love photos and pictures. They really bring the story to life. So let's have a look at another big project that you're working on. This is to do with storage, isn't it? Tell us about this.
So the Wawa Dam created a reservoir from which we will be pumping water up into an artificial storage. What you have on the screen is the intake. Actually, that's our chairman there inspecting the facility. We're building a pump storage, and for those of you who don't know what a pump storage is meant to essentially enable the deployment of renewables at scale. What do I mean by that? Renewables are variable by nature. As we deploy more and more renewables, the grid tends to be unstable. An example will be you have a very large solar farm. A cloud comes over that solar farm, it stops producing power. So someone needs to react to that power fluctuation, and that's what pump storage does. So when there is an excess amount of power in the grid, we pump water up. When there is actually a lack of power in the grid, we release water and produce hydroelectric power. Those two projects are integrated. The Wawa pump storage is a 600 megawatt facility, and it's not the largest. We have actually a 1,400 megawatt facility also being built in parallel.
Another massive feat of engineering.
Absolutely.
And we have one more example to show you as well, and this is to do with an offshore rig that you have,
Yeah, so
which
in
again is equally as impressive.
Absolutely. So in addition to these two projects, we are engaging into a drilling program. What you have on the screen is the Malampaya gas platform. We'll be drilling this year 3 new wells, 2 development wells, which will produce gas in 2026, and 1 exploratory well that hopefully will yield a tremendous amount of gas. The objective here is really to produce indigenous gas and support the demand of the country. Keep in mind that the Philippines hasn't achieved energy independence, right? So to achieve that, we're really looking at 2 streams, producing as much indigenous resource as possible in the form of gas. The second one will be, of course, renewable energy, which is by nature an indigenous resource. So that's where our pump storage projects help through that transition to renewable energy, and our indigenous gas production, of course, supports the production of power, price stability, and some resistance from external shocks like the recent Russian-Ukraine war.
Which is all fundamental, particularly for the government, isn't it? If they can provide cheaper energy for the Philippine nation, then that is a big bonus, isn't it?
Absolutely, and it's not simply an issue of price. It's an issue of stability, predictability, reliability. You know, to attract foreign direct investments in the country, we need to be able to offer these essential services. When water is reliable, we have dependable energy, we treat our waste the way it should be treated, which is an increasing environmental and health issue. Certainly, we create an ecosystem that's more conducive to foreign direct investments and economic growth.
You talk about economic growth, you talked about sustainability. How do they work together, would you say?
Well, so we don't look at sustainability and growth as competing interests. Sustainability and growth for us are one. When you work in infrastructure and you project yourself 20, 30, 40, 50 years, you build assets that will last 50, 80, 100 years. The concept of sustainability is paramount. It's ingrained. It's intrinsic to the project itself. When I talk about sustainability, I mean about environmental sustainability, social sustainability, and so on and so forth. Right? The relevance of the project in the ecosystem is quite important.
And yet the fundamental need to be profitable as well must work alongside.
That's something you can't compromise on. That's part of the process, and that profitability is what gets reinvested into new infrastructure and fuels the economic growth of the country and allows us to serve our customers.
Yeah. Let's talk about the capital that's needed. How do you approach financing and investor confidence? I know you come to Singapore an awful lot because it is a financial hub for the region. Tell us about those partnerships.
Well, first and foremost, Pram Infra Capital is a very healthy company. We've developed this company with a tremendous amount of pragmatism and discipline. We have a good mix of greenfield and brownfield assets. So assets that are cash accretive already, while we're continuing to build assets like the Wawa Dam that you saw and the pump storage that will yield cash flow in a couple of years. The pump storages will be ready in 2030. Total investment pool is somewhere between 7 and 8 billion US in the next couple of years. So we have a healthy business. We're capable of facing this capital demand. Of course, we have a lot of other plans that take into consideration in the medium to long term, and at the right time, we'll seek capital when it makes sense.
Okay, and partnerships with the government are critical.
Absolutely.
But also partnerships locally within local communities, because you are affecting their lives for the benefit as well. How does Prime Infra approach partnerships?
Well, our relationship with government is very harmonious at every level, from national government to local government, indigenous communities, and so on and so forth. I think it's important to realize that the purpose of Prime Infra is to create better lives and resilient economies through critical infrastructure. It's an extremely aligned mandate with the mandate of government. So we're very aligned in our objectives. We collaborate constantly. One of the most recent collaborations is what we're doing with the Department of Environmental and Natural Resources, where we're taking over 4,000 hectares of watershed, and hopefully that will increase to tens of thousands of hectares very soon. The idea is to really protect the watershed, nurture it, improve it, and seek that it behaves in the way it should be behaving for the next 50 and 100 years. Without a healthy watershed, there is no rain. Without rain, there is no storage. Without storage, there is neither pump storage, the bulk water supply, and we really can't attend to neither our water supply needs nor energy demand. So our relationship with government is really productive and will continue to do so.
What do you think the lessons are for good partnerships? Because it's not easy. You make it look easy, but around the world it can be quite challenging working with governments at different levels. What is the secret to success, do you think?
I don't think there is any secret. I think there is alignment in purpose. Government mandate is very clear. It's nation building, it's uplifting the quality of life of Filipinos, it's improving the standard of living, supporting a rising middle class. That's what we do for a living. That's the essence of Prime Infra. So I think if there is a secret, it's just making sure that we have aligned purpose.
You work in a region that is massively diverse. We were just talking about that, weren't we, before we came on stage. With what you're doing in the Philippines, I'm sure is being watched very closely by other ASEAN countries that could probably benefit from your expertise as well. Do you see yourself as a company moving overseas or taking your expertise overseas?
Well, I think in the short term we have a lot to do at home,
yes.
As you can tell. So we're going to get all of that done and done very successfully. That doesn't mean, as you can appreciate by now, that we project ourselves in terms of decades and years. So we're always looking at what's coming around the corner. In our three verticals, water, waste management, and power production, we will be looking to, of course, expand and produce, for instance, more gas. We're looking at new service contracts at home or abroad. We're looking at certainly expanding our water business when it makes sense. But I think for the time being, worth saying that we'll focus on what we have as work at hand before we turn the corner and start trying to conquer other challenges.
And as we go into the close, it's a big year this year, isn't it, 2025 for you? A lot of these big projects coming on tap. How are you feeling?
Well, I'm feeling great. I think we'll have a very successful year. The challenges are significant, but we've created a team that's extremely talented, absolutely equipped to execute. It's a big part of what we've been doing the past 8 years. Make sure that we put ourselves in a situation to have growth-enabling skills in the organization. At one point, we'll be taking that offshore. We're very strong operators at the source. That's part of the DNA of the organization. And then taking that strength offshore after we deliver on what we have on hand is obviously the objective.
It's been great chatting to you. Thank you so much for joining us.
Thank you, Emma.
Wish you the best of luck for the year ahead.
All right.
Guillaume Lichy, a big round of applause, please, for Guillaume Lichy from Prime Infra. Thank you. Mandy, back to you.
Thank you so much. Thank you very much. Thank you very much, Emma. I don't know why that happened. I do apologize. Was I the only one who just lost my hearing? Sorry about that. Okay, let's hope that we're all calm and settled now. And if you can all hear me still, thank you very much to Catalyst's Emma Crosby and also to Guillaume from Prime Infra. I thought it was very interesting to hear about their project vision and also their purpose to try to create better lives through the various critical infrastructure projects that they have. We're going for a break right now. You've got 15 minutes to go and grab something to eat, something to drink, go and stretch your legs, go and make those 5 connections that I challenged you to make at the beginning of the day. And we'll see you back here for Steve Sedgwick's panel on the circular economy. Go and enjoy, and can't wait to see you back at main stage in 15 minutes' time. Thank you.
The world. Lately, it's as though everything's been turned upside down. Not here, though. Here in Singapore, you'll find a safe space for all kinds of ambitious risk-taking. Our clockwork precision, it leads to some radical innovations. And because we're oh so predictable, you can confidently venture into the exciting unknown. Because nothing today thrives without trust, stability, and safety to make your next bold move. Was that bold enough? Good. Your business needs Singapore.
Please take your seats. We are about to begin. Please take your seats. We are about to begin.
Look at the dream team. Behold.
It's a country that has strong institutions.
We said we will compress payments away from US dollar and euro. We have done exactly that.
So we are pretty well protected against changes in interest rates.
Very rare interview from the CEO, that's first ever to an English-speaking media.
Is that volatility being understated?
Why wouldn't you be generally constructive against a backdrop where the U.S. economy continues to outperform?
It's your brand and my politics, and those two worlds have come together.
We meet those celebrating Asian arts history.
I think could fetch $20 million US.
When you walk out onto the pitch, Son, as the captain of South Korea, how does that make you feel?
And thank you very much for this exclusive conversation. I am in the headquarters of the Hong Kong Monetary Authority.
We're live from Davos. What is it, day 364? Ontario COP29 in Bandar.
I can say it's still early hours here in DC.
Cannes Lions is in its 71st year.
But for the first time in several years, we are witnessing a new chapter here.
If there were no trade barriers on Chinese EVs, they would demolish the competition.
We've increased many of our targets because we're ahead of target.
Then behind closed doors, it was a completely different story.
I think watch AI. It's going to be really important in the future. It's just business as usual.
Global resource extraction has increased from 30 billion tons in 1970 to 106 billion tons in 2024, according to the UN, putting pressure on both supply chains and ecosystems. By 2060, this could rise another 60%, making resource scarcity a business risk. And yet only 8.6% of the global economy is circular, meaning most materials are wasted. But this doesn't have to be a challenge. The World Economic Forum highlights that circular economy represents a multi-trillion-dollar market opportunity that could allow companies to reduce costs and unlock new revenue streams. But with already challenging economic conditions in many parts of the world, how can businesses today scale within circular models while driving superior returns? To explore this issue, please welcome CNBC's Europe anchor, Steve Sedgwick, along with distinguished panelists, Svanika Balasubramanian, co-founder and CEO of Repurpose Global, Jacob Dua, CEO of Alliance to End Plastic Waste, and John Graham, CEO of Zulik Pharma.
Hi, John. Thank you very much. You're on the end there. Svanika, lovely to see you. And Jakob as well, thank you. Well, you saw the introduction, and I'll do this very quickly because my panel has said, we know what the problem is. We want to... Please sit, sorry, beg pardon. We know what the problem is. We want to get straight to the solutions. Every single one of them just said that to me. Let's forget about talking about it. Let's get to how we can solve it. And I think that is really refreshing. So thank you for putting me on the straight and narrow. Can I ask anyone here? I'm going to do a little quiz to start off with. My boss didn't know I was going to do this. How big is Singapore? Kilometers squared. Yes, sir. 600 so? No, bit bigger. I think we're roughly there. 715 to 725 square kilometers is the size of this magnificent place that we are in today. The Great Pacific Garbage Patch, in relation to that 720 kilometers squared we just mentioned, the Great Pacific Garbage Patch, 1.6 million kilometers squared. Do we need anything else to know how big this problem is? What we really need to do? 1.6, that is the size of Western Europe. That is 4 times the size of Great Britain. And I'm going to give you one more terrible stat as well, which Svanika just shared with me. Every single week, we consume, is it a credit card's worth of plastic? You, me. We can do better than this, everybody. We can really do better than this as well. Now, you've already heard the introduction of the panel as well. I'm going to get straight into the issues, having just wasted the first minute and a half with some staggering stats, I think, as well. Let's get to you, Jacob, first of all, as well. You can discuss the importance of collective action in plastic waste sectors. Why don't you just kick us off?
That's correct, and it is all about creating solutions to a problem I think all of us are faced with on a daily basis. We see plastic waste in the environment. We see it in our communities, and it's something that is a product and a material in many ways that we are dependent on in society. But we all have the ability to be part of solving that problem as well. And the Alliance to End Plastic Waste, which is a global nonprofit, was established a few years ago exactly to do that, and focusing in particular on creating solutions on preventing the leakage of plastic waste into the environment and creating a circular economy for plastic.
I'll just come up with a follow-up on this, because straight away, I wonder if I've fallen into a trap, and I really want to know what you think about it, and the rest of the panel as well. I've mentioned plastic a couple of times. You've gone in with plastic as well. Are we talking that is the hardest to abate? It's the biggest problem? It's gaining the most focus, but isn't the only issue out there? Just tell me a bit plastic versus everything else.
So there's a range of challenges out there, from upstream in terms of the use of plastic. We need to make sure that we use plastic where it's needed only, and where there are opportunities for potentially other material, we need to look at those solutions as well. But the bottom line is plastic waste ends up in the wrong place very often, in particular in emerging economies. If you're looking not only at Singapore, or not in Singapore, but looking outside, going to Indonesia and other places, we see a significant portion of the waste generated by households that ends up in the environment. One of the biggest challenges is that in these countries, often we don't find waste management infrastructure solutions. Around 3 billion people on this planet have no access to waste collection. This is at the core of solving the leakage.
3/4 of the people on this planet have no access to waste management, waste collection.
So without addressing that, any waste, not only plastic waste, will continue to end up in the environment. It may end up in the environment through ending up on beaches or ending up in the ocean, as you talked about.
Ending up in us.
Yes.
and our unborn children. Svanika, you talked about how it can cross through the placenta.
Yeah.
I mean, this is a problem for our generation, our children, our grandchildren. Svanika, I mentioned to you earlier, I've been to a lot of COPs. I've been to Paris, been to Glasgow, I was in Dubai, and very often, why don't we just say it how it is? The rich West talked at the global South, talks at those 3/4 of people in the world who haven't got solutions. And it says, well, we'll sort it out. We'll throw money at the situation. Well, sometimes they do, sometimes they don't. But Svanika, this is a global problem that needs global solutions, and it needs the West to stop talking at the global South.
Absolutely. Also, hi, everyone. It's such a pleasure to be here. Thank you so much. There's so many different ways to talk about the plastic issue. I'll first answer your original question. Is it about plastic? Is it about something bigger? I really see plastic as a little bit of a Trojan horse because the majority of consumers understand plastic waste, but they don't understand the idea of other waste because you've seen the turtle with the straw up its nose. You know, you can talk about it, engage with it. And I really see the circular economy as being enabled by the consumer momentum and knowledge around plastic. So coming from that, I think for me, the transition to a circular economy, it's not a plastic problem, it's not a material problem, it's not a global north versus global south problem at the end of the day. It's just a financing problem. It's really just misaligned incentives. So when we talk about the global north exporting waste to the global south, when we talk about there not being waste collection for 3 billion people on this planet today, it's really just because it's not profitable to do that. And so at Repurpose, our goal is not to think about the transition to a circular economy as a philanthropic initiative at the end of the day. We exist to allow private companies to participate profitably in that transition. And then it's no longer, a question of are we doing the equitable thing, because it is inevitable if we align financing incentives the right way.
Yes, and this is exactly the conversation I had on a different part of the energy complex with Jean-Pascal Tricoire yesterday. If you make it profitable for companies to do so, it doesn't become about, my ESG commitments, my net zero commitments. It becomes something that's part of the DNA because, let's be brutally honest about it, most companies, if not all companies, are still about making profit.
Absolutely. And I think there's so much, financial gain to be had from the circular economy because the majority of resources that we put into the life cycle of a product is actually in the creation of the product. So the amount of water, the energy, the manpower that goes into building up a product, and then we go use it once and throw it away in this linear economy. It's like, every time you want to go watch a single game, you buy a season's pass every single time. Like, it's just, not a good use of resources.
Right. We're going to get to some more solutions. Thank you very much indeed for that. John Graham is able to look at this from a healthcare supply chain perspective as well. Whilst we have two amazing advocates here for the circular economy, we have another advocate, though, but he's actually doing it at a corporate level. Just talk us through your experience.
Yeah, so, Zulik Pharma, good afternoon, everybody. Thank you for inviting. Zulik Pharma is the biggest distributor of pharmaceutical products in this part of Asia. And if you look at the supply chain of pharmaceuticals from the manufacturer to the end user, these products are packed and repacked several times along that supply chain, whether it's in Europe or when the arrival in Asia or when it arrives at the end user. And so much of the product that is packed and unpacked, the packaging material is very often plastic-based, whether it's a sack or a box or a packaging that is used to protect the product. But in addition to that, many of the products that we use are also temperature controlled. So not only are we adding plastic, but we're also adding energy to that supply chain. And what we're doing as Zulik Pharma is working with our partners to reduce the carbon footprint, to work on ways of disposing or utilizing less packaging materials along that supply chain. And to Svanika's point, it's essential that there's a profit motive behind that, because you want a sustainable solution. And private companies that are focused on profit will actually need a profitable solution to this. Right?
Are you repackaging several times your products from manufacturer to consumer?
When we receive it from the manufacturers,
yeah,
we will sometimes have to unpack the product to store it in our warehouses. Then we'll pull it out of the warehouse, repack it for delivery to the final consumer.
Yeah.
And so there are several steps in that, and we're looking to see how we can reduce that in collaboration, of course, with our partners.
Am I being really dumb here? Is there a really easy solution to this? And that is working with the manufacturers and the end user and getting them together and saying, we don't want to do this. We don't want to add this layer of plastic, take this plastic off, put this new on, put this new health warning on in this language or that language. Just seems so obvious. Get the manufacturers to have something ubiquitous that the client can use, and then you don't have to change the plastic.
Yep, and that's what we're doing. We're working closely with our clients to work on it. But it's not as simple as it might seem.
Why isn't it as simple as that? I know that's a really dumb question, but why?
So most products go through a regulatory process.
Yeah, the product, not the packaging.
Yeah, the packaging is part of the product. And so when you have a temperature-controlled product, the packaging is part of that regulatory approval.
Yeah.
And just to change the packaging is not as simple as it looks. You have to go through revalidation of the packaging, revalidation of the transport of the product. Yeah.
Swanika, how does that make you feel when you hear that? There's some low-hanging fruit here somewhere.
You know, I think I'm a solution operator at the end of the day, right? So my bread and butter is out there in landfills and in dump sites, not in these, big fancy boardrooms where a lot of these decisions are made. And then there is a lot of low-hanging fruit. I mean, Jacob was at all the INCs in Kenya and Paris, the Global Plastics Treaty negotiation. And Steve, I can't tell you how long the different governments spent just debating on what the definition of recycled was, or the definition of reuse. What is the definition of virgin plastic? It takes so long to get everyone aligned on these very basic foundational things before we can, even progress to the kind of questions you're asking. But eventually, I think I'm optimistic we'll get there, because it often feels like each brand or each company needs to be in charge of their own idiosyncratic supply chains because they're designing it. But at the end of the day, the downstream effects, what happens after a consumer uses it, that entire supply chain is shared. It doesn't matter if you're competitors, it doesn't matter where it was manufactured. If you use it here, there's only one supply chain for it to go somewhere. And so we do need to get to a place where it is very interoperable between borders, between, even municipalities and between companies.
Did you want to come in on that?
And that's exactly what it is, right? You can't solve this problem alone. No government, no organization, no company.
Sorry, I should explain. You work with 90-plus member companies,
That's
strategic
correct.
allies and supporters. So
yeah.
you do have a group which
so we are a member-based organization. We are working with around 90 companies and partners from different parts of the world. And the reason why they came together was the realization that this is a problem that requires that everyone comes together around trying to create solutions. Not only private sector companies, but working with governments, and equally important, working with development finance institutions.
Okay.
One thing is to have a solution, one thing is to have the right policies in place, but you're only going to be able to take that to scale if you have access to capital. And that access to capital is absolutely fundamental.
We'll talk about finance in a moment in time, because in our conversation off stage, financing came up a lot as well. And we'll talk about scale as well. A small reveal here that these are the answers, by the way, to the problem. More financing and getting it at scale. And I presume more knowledge and education as well. What are you actually doing in terms of providing solutions that then can be put forward for financing and then put forward for scale? Give us a very tangible example that our audience can take away.
So I'll give an example of what. So we're working right now in around 25 countries. We have a portfolio of projects of around $250 million. One of our biggest areas of intervention right now is in Indonesia, where we are working with the government of Indonesia. We are working with the Asian Infrastructure and Investment Bank and the Alliance. So pooling capital, so what we call blended financing. So philanthropic capital is what we are sitting on. It's public and private capital coming in from the bank and from the government. And what we're putting in place here are large-scale waste management infrastructure solutions. So working in communities at scale, here we are talking about 10 million plus citizens that would benefit from our work. So really trying to move the needle in preventing leakage, getting the sorting in place at the level of households, getting it to the centralized sorting centers, and then getting out the material that contains value so we can recycle.
I'll come to John on this point in a moment as well, but 90 plus members is impressive and it's great, but I don't know how many tens of thousands of companies there are out there as well. I guess part of the solution from my point of view is finding out why there's resistance to joining bodies such as yourself. Why are you not 90,000 members, 9,000 members, 900 members? What's the reason you're hearing they don't want these solutions or they're just not engaged?
I think everyone wants solutions, right? And just because you're not a member of the Alliance doesn't mean that you can't collaborate with us. So we are working with companies in the plastic value chain. We are working tendentially with the very large corporates, from the resin producers to brands, retailers, recyclers, waste managers. We continue to grow our membership. When we started only 5 years ago, we were in the early 20s. Now we are around 90 plus minus. So we are constantly growing our membership. And of course, as we go forward, as we demonstrate the impact and the results and the solutions that we are creating as an organization, we continue to attract members.
I want to see that exponential curve of growth. You can send that
to everyone who is here, please join us in our efforts on ending plastic pollution.
John, just from a corporate point of view as well, are you finding resistance to some of the measures that you want to push through at all?
No, I think there's a lot of interest in collaborating across the entire supply chain. So we focused initially on areas where we know we can influence, which is from our warehouse to the end user. But we're now working with many of our clients, manufacturers, to look at the earlier part of that supply chain as well as the later part. I'll give you a good example.
Yeah.
Maybe 2 or 3 years ago, we were transporting vaccines in styrofoam boxes with dry ice. So now we've translated that mode of transport and packaging to reusable packaging and phase-changing coolants that are then returned after we deliver the product. Yeah. In doing so, we've saved something like 1 million to 2 million styrofoam boxes that would otherwise have been discarded, and there's no dry ice involved.
And that is a cost cut.
That's a cost cut and a benefit for the environment.
Appealing to the better nature of businessmen and women, certainly the CFOs out there. Svanika as well. Let's go back into the financing as well. The numbers are staggering. I've already given you some big numbers today as well. I'll give you one more number that Svanika's furnished me with as well. Over the next 20 years, $5.2 trillion are needed for this problem as well. How far are we away from those kind of... I presume we're not at zero. I hope we're not at zero.
I feel like we're a few percentage points in.
So we're nowhere near the billions mark.
No, and I think, we did a lot of studies on this because I think it's important to put a number on it, because without a number, we're just talking in generalities, right? And it is really disheartening because there's a stat that came out that says all of the existing commitments put together, right? Like every 2030, 2050 reduction, recovery, goal that you're seeing out there, even if met, and we all know 100% of them are not always met, but even if 100% of them achieved completion, will only make a dent in the problem by 7%. So we have a 93% delta right now, and that's really what the big financing gap is.
If the money is needed, it has to come from somewhere. I'll ask the same question to all three of you now. Where is the money going to come from?
It's going to come from a combination of sources. So it has to come from the private sector, it has to come from financial institutions, it has to come from private equity, and it has to come from governments. Each of these sources alone won't be able to fix it when we're talking about the numbers here. But I also think we have to look at how far we have come in record time. You don't need to go back more than 5 or 6 years. The plastic and the plastic waste agenda was nowhere really to be seen. So in a record time, we have come from an important topic to a critical area that has strong focus from governments, financial institutions, and private sector. If you're looking at energy transition, climate change, renewable energy, that took us 20, 25, 30 years to get us to where we are today. So I'm extremely hopeful that because of the focus on this agenda, and because it is a tangible agenda everyone can relate to, we are going to move forward really fast, including through raising resources.
Because we're here with some amazing people in Singapore as well having this conversation, that is progress. I have never had a pure panel on circular economy. I've had panels where it's come up, I've been to many COPs, I've been to many World Economic Forums. We have mentioned it, but the fact that we're on, that's a small win. It's a small win. It's about recognition, and this is going out on across the world as well. It's on our social media channels, so people are getting the message. John, do you want to come in on the finance side of things?
I think obviously there's a need for startup capital to get a lot of these new innovative ideas up and running. But once the solutions are there, I think there's a great deal of willingness within the private sector to come in and look at the business cases and to finance them internally, because it makes a lot of sense to everybody when you can actually make these solutions work. Yeah. And in the end, it's good business.
I've got about 5 minutes left, so I just want an indication. I'm not going to ask you to put your hand up yet, but well, actually, I am going to ask you to put your hand up. Does anyone have a question for our amazing panel as well? If you don't, that's fine. As my colleagues at CNBC know, I like to hog the questions. But if anyone wants to get in, I might find a little bit of time for you at the end as well. You're all so shy and polite. This gentleman will ask a question then. Hold the horses, sir. I will get you in as well. Now, one thing that... Actually, no. Let me start off. I've got two questions. Tell me about scale. We've talked about financing. Obviously, knowledge. We just sent about. People need to know more about it as well. Incentive as well. Give me apart from financing, the other way we can scale this up and make this enormous solution. Svanika, why don't I start on you on this one?
Yeah, I think that's a really good question, and I think it's one that we should be thinking about a lot, because to your point, I do think the financing is there, but oftentimes there's not the right solutions to put the financing into, because we do have, all of us are seeing at any given point, this researcher came up with this bacteria that eats plastic, or someone's figured out a way to take plastic and turn it into shoes. I don't know. There's so many of these that keep coming up on social media, and then they disappear. And I think there is this execution gap that we see in the circular economy as well, because oftentimes a lot of the innovators are not empowered with the right resources, the right incubation, the right acceleration to get their idea from something that works in very pristine conditions in a lab or in one village or in two villages and get it to a place where it can work across coastlines.
Yeah.
And so I think in addition to that catalytic financing, there does need to be a lot more of that sort of support as well, recognizing the realities of the world that we live in, right? Even things like how do you help someone deal with child labor or bonded labor in the global south, which is extremely prevalent in the waste management sector. No one's going to invest in a supply chain that has, those sorts of issues. And so I think that I see to be an extremely large hindrance to scale.
Yeah, it's very interesting. I was going to finish on a very upbeat note about the Japanese scientists who have discovered a formula where the plastic can dissolve in seawater. That's funny because they're already ahead of me on that one, so I won't finish on that upbeat note. I'll find something else to think about. John, scalable solutions.
Look, I think that there's a limited amount that you can do on your own, and collaboration across not only within your industry, but externally to other stakeholders, to regulators and financiers, etc. That collaboration is essential to actually scale up any of these solutions. We can do what we like here in Asia, but it's a tiny part of the world. We can also work with our clients on end-to-end supply chain management, but at the end of the day, that's also only a small piece. So it's really more collaboration, more public-private partnerships, and partnering also with the sources of finance, as innovative as they might be.
Yeah, Jacob.
Just building on that, I think an enabling policy environment is important for going to scale as well, right? And again, you mentioned it, governments are negotiating a global treaty on plastic pollution. When they conclude those negotiations, that's going to be critical. We're going to start driving a pull as well in terms of demand, going back to talking about circularity, right? We're hoping to see recycled content as an element of a future treaty as a requirement. And the second that you start putting that in, then you're going to see the capital coming out, you're going to see the collaboration happening, and then you're going to start moving to scale.
I feel I should give a warning to the audience. We haven't mentioned AI yet in the whole panel so far. I mean, God forbid. We will mention AI briefly at the end, but I want to get this gentleman's question in. If we can get a microphone to this gentleman here.
Yep, got one.
Okay.
Hi, my name is Sanjeev Kumar. I'm at Natixis. I just want to pick up on Jakob's point earlier, but it's a question for the whole panel. The speed at which change has happened in the plastic space in the last 5-6 years. Do you feel that speed can be maintained into the next 5 to 6 years? How are you seeing the current forces that are perhaps sort of pushing back a bit on finance that's available to these sorts of sectors, including aid?
Thank you, sir.
I'm happy to start. I think it's actually going to accelerate further, in particular when we are looking at financing. You're seeing private equity funds being established on plastic circularity. The Alliance established one a few years ago. You see an incredible growth in terms of startups. You talked about that earlier. I mean, the whole investment opportunity space. You see the development finance institutions. So the priorities are there. Governments are willing. We see governments concluding eventually the treaty. And so it's going to continue. I don't think the population and citizens are going to let go of this agenda, independent of what happens in certain countries. Speed and acceleration will be at the core also going forward.
Monica, then John on this.
Yeah, I completely agree. I think I share the very same sentiment. And I think there are two very important catalytic events that are happening, or just things that are happening. One is that there are companies now that are coming in, like the Alliance, like Repurpose, that are really proving the ROI case. And so we're no longer thinking about this as a philanthropic initiative, in which case it becomes really difficult to raise that money, but rather one of there's a very clear financial ROI over here. And so as we see more and more of those proof cases coming in, I think we're definitely going to see the uptick in financing. And the second point that I'll quickly mention is that it is really bolstering to see the idea of the circular economy as a bipartisan issue. I think unlike a lot of other issues to do with the environment or society at large that often can be polarizing in terms of how we solve for it, I think the idea of the circular economy being beneficial to businesses in things like EPR taxes on plastic production, shifting the burden from governments to the private sector, there's a lot of reason for all different political spectrums to be aligned on the need for it. And so I do see that accelerating momentum.
Oh, if only the debt ceiling was as bipartisan. I'll come to you, John, for the final point there.
I'm going to jump on the bandwagon. I think it's also accelerating. I think the key change that has taken place over the last few years is the fact that sustainability and circular economy was seen as a cost to businesses in the past. I think we've also seen now that good business can be run by making these changes. And as soon as you see that motive in place, you'll see it accelerate and momentum pick up. Yeah.
Brilliant. I'm going to go over by 1 minute because, as my colleagues Mandy, David and Sarah know as well, you can't have any conversation at CNBC these days without talk, and of course you as well. We must talk about AI and the benefits it can bring as well, and technology. 30 seconds each.
I think AI has broad applicability in our industry, and I think we will see better data, better analytics through the use of AI in these sustainable solutions.
I think you'll probably cover the recycling benefits and the sorting benefits. So I'll do two quick things. One, I think AI can be instrumental in safeguarding people. There are tens of millions of workers out there in landfills and dump sites who are manually, going out and sorting and collecting. And I think AI can really bring change from a socioeconomic perspective. I also do think I would love to see material passports for AI, right? So just like you can take my passport and know where I've been. In the future, I do think you can tell where this plastic came from in my jacket or my outfit.
Absolutely. Final word, Jacob.
We've already made investments into AI and waste sorting in particular. We see higher quality coming out of the waste stream, improving the business case for circularity. So it is going to be critical, but you do require certain systems to be in place, and you don't find that in all parts of the world.
Okay, so AI part of the solution. Let's scale up. Let's have more knowledge, let's have more collaboration, and let's stop talking to the Global South rather than with the Global South as well, and give them more solutions as well. John, Svanika, Jacob, thank you very much indeed for your time.
Thank you.
Thank you.
And thank you so much to Steve Sedgwick. Oh, I'm so sorry. Didn't mean to bump into you there. That's my fault. Traffic control. I'm supposed to be the traffic controller here. That's the MC's role, but here I am crashing into the traffic. But thank you so much. That was a wonderful panel. And Steve, thank you for managing to find the nugget of positivity and upbeat tone to end that panel on, because I was starting to feel a little bit depressed about what was going on. I think Svanika said it when she said it was disheartening, the gap between the problem and the solution when it comes to the global waste issue that we're faced with. But it does seem like there are some paths towards a solution. As John said, we just need to find a profit motive to create a sustainable solution. And Jacob really summed it up by saying, fundamentally, we just need to have access to capital. So that was an excellent conversation. Thank you very much. But now, ladies and gentlemen, it is now time to start your engines and make way for the prancing horse.
It began with an engine and a dream. Enzo Ferrari's early race teams dominated Formula One and the global circuit. Road cars were just a way to fund the race team, but the beating heart of every prancing horse was the famous Ferrari engine. A roaring 12-cylinder work of art. Ferrari has continued winning on the track and off through innovation, beauty, emotion, technology, and drive. CEO Benedetto Vigna is building the ultimate luxury brand, driving record profits with hybrid engines and soon a new era with the first all-electric Ferrari.
Woo!
Benedetto, it's so great to see you. Thank you so much for joining us. I realize that you are the man that everyone wants to take a selfie with. Wherever you go, everyone wants to take a selfie with you. So it's great to see you. You know, at the end of that video, we talked about the first all-electric Ferrari. And there are some people that say that the secret to a Ferrari is that sound of that engine. I know you've kept it very secret about what that EV Ferrari will look like and sound like, but just between us.
Between us, yes.
Between us. Is there anything you can tell us about that all-electric car, the first ever for Ferrari that's going to be launched sometime in October?
Maybe a couple of things. It will have, will be a car with 4 wheels.
Okay, that's good.
And a steering wheel, because you never know. Today you may not even have a steering wheel, but it will have a steering wheel, because I believe that, we believe that our Ferrari must have a man behind it, not a computer.
Do you think, I mean, there's a lot of questions about demand for EVs. Ferrari is its own thing. It's not a car company. But do you think there'll be demand for an all-electric Ferrari?
I think this is one of the decisions that we are more proud of, because during the last Capital Market Day, we as a company said we will make 3 kinds of cars. The traditional one, the combustion, the hybrid one. Just to give you an idea, last year 50% of the car we sold were hybrid and 50% IC, and we'll make also electric. This week, I was in, 2 days ago, I was in Milan, and I met 52 CEO for an event, and I did a kind of survey, and out of these 52 people, 20% of the people, not our client, were willing to take an electric car. Because I believe that we will have our client, some of them will never take electric. Some of them will take also electric, and then we'll pull in clients that are new.
So are there clients that will only take an electric Ferrari?
Yeah, there are. There are. We are. This is a big opportunity for us. You know, there are some clients telling us, I cannot take a combustion engine because I would not be coherent with what I'm teaching to my son and my daughter. Sometimes it's funny because I have the father and the son. I have to tell you, once there was a father, the mother, and the son. I made a question for the kid, and the father was asking, and the wife said, wait, don't reply. It's a question for our kid, not for you. Because different generation, different kind of, let's say, interest. So we are on track, and we will unveil electric car in October this year.
It's very exciting. We can't wait to see that. And one of the things we're seeing in the U.S. right now, which is your largest market, I think the United States is largest market, is a lot of volatility in the stock market, questions about whether we could enter a recession. And the wealthiest consumers in America are really supporting the consumer economy. Your clients are, your average sale price is now, I think, over $500,000. So these are the very wealthy, typically less affected by what's happening in the daily economy. But do you see any impact yet on demand, on orders, on people coming to the Ferrari showroom, on people maybe canceling their orders for things? Are you seeing any impact yet?
We don't see any impact on this direction. If you want, it's surprising, but we don't see any impact because of this uncertainty. On the other side, we still have to see what is going to happen really. So we are careful, and we are watching what's going to happen in the next months, next weeks. I don't know. I think we are on the same boat, right?
Yeah. And also related, we're in the same boat in terms of tariffs. We don't know what's going to happen in a few months or tomorrow. What kind of impact could that have on Ferrari, particularly for the U.S. market?
Look, it depends on the tariff, on the scenario. There are different numbers that are ongoing. We are ready with some countermeasures, but we wait for the official number to be published. We don't know, 10%, 25%, 50%, I don't know. So we'll see. It's an area of attention.
The prevailing wisdom is that, Ferrari buyers are so wealthy, they won't care if it's an extra 10 or 20%. Does it matter?
I think that, look, when we look at the client, we consider that these people, to buy a Ferrari, they had to work. Maybe they had the capital to work, but in any case, they took a risk. So we have to respect them, because for us, the most important thing is the client. The most important thing in Ferrari is the client. So we need to make sure that we treat them in the right way. So we'll see when these numbers will be publicly agreed.
Yeah, we'll wait to see that. And the last time you and I were together, it was in Maranello. You were opening your new factory there where you can build, as you just mentioned, any of the 3 engine types that you produce, the powertrains. And you told me that a luxury company is a company that is using technology, innovation, storytelling, and heritage with the ultimate goal to feed that emotional side we all have. You have reminded me since the day I met you that you are not a car company, you are a luxury company. Those first 2 things you mentioned, technology and innovation, how do you apply those at Ferrari?
That's a good point. I think that for a company like ours, luxury company, technology is key. Because you can also be a luxury company with not a lot of technology content. So, and I have to say that one of the reasons why I also selected to join Ferrari is because you have these 2 dimensions. The technology innovation and the luxury dimension. Because you can do something with the magic of the technology, something that is touching the emotion of the people. The car is a beautiful object because you have many things you can innovate. It's not only about electric, it's not only about a computer, like it is in the mass market car. There are many other things you can innovate, from the material, from the let's say the leather.
So what's an example of how you've used technology to improve the emotional component of a car or the performance?
It's very simple. Look, if you look at ourselves, okay, how we interact with the external world, with the body, with the hands, with the eyes, with the ears, there are something, even materials, that you can experience differently with the hands. There is the sense of the weight of the car that you can feel with the body. If you enter in a heavy car, you realize it. If you enter in a sports car, you realize it. If you enter in our Puro Sangue and you go on a track, you don't feel the weight. Why? Because we have technology innovation that enable this car to be very agile. So you feel it. Our sensors, they're pretty good. Take 1 million of years to develop. It's okay.
And you've also been able to use innovation and technology not just in the cars, but as a company, in terms of how you manage production? How else are you using technology outside of what's in the car or the driving experience?
I think innovation is fundamental for all the companies. I think that the only way to cope with a future that is uncertain is innovation. For us, we do innovation in different ways. We do innovation on the product, and if you want, this is the one that can be more easily explained, but we do also innovation in the way we work. Just to give you an idea, when we talk about innovation in our company, we involve everyone, the blue collar and the white collar. From the blue collar, we get a lot of proposals. Thanks to them, we've been reducing the carbon footprint, scope 1 and scope 2, by a factor 3 with a zero capital investment. Thanks, listening to the blue collars. So this is an example of innovation, thanks to them. But we have a mechanism we are collecting feedback from the people, because one of the typical mistakes, companies do believe that innovation is coming only at the helm of the company or from outside. No, it comes also from inside. You have to listen to it. And that's what we are doing. But clearly, we are also very open to external innovation. To give you an idea, in 2024, we signed more than 700 NDA, so two per day, with companies that are coming to propose mostly ideas of product innovation. So open innovation, but also internal innovation, listening to everyone. I think this is key.
Well, it's clearly working. If you look at the stock price since you joined in 2021, it's more than doubled. The market capitalization of Ferrari is now over $85 billion. You made only 13,700 cars last year, and yet your market cap, your value is more than Volkswagen. It's almost more than GM and Ford put together. And part of that is because you said from the beginning it's going to be about quality of revenue, not quantity. What do you mean by that?
First of all, I'd like to take this occasion, you raised the ball, because if we do this, it's because of the people in Ferrari, it's because of the suppliers, because during these years they've been supporting us, because of the client, because no client, no company. So I am a small gear of all these pictures, but without what I said, would not have been possible. I think the quality of sales versus quantity, it means that we have to keep our product exclusive. When you said, tell me a little bit more about electric car, I was in the electric car yesterday before taking the plane to come here.
You drove it?
I took the plane at 1 o'clock. I was in electric car from 9:30 to 10:30. You cannot read in my brain, so you don't know. But keep this secrecy. This desirability is fundamental in a luxury company. So you have to keep things limited. Very often when I go around and I talk with clients a little bit in different parts of the world, they keep saying, don't increase too much production. No doubt. We could have been, there are some luxury companies that are selling more than 50% of their volume with one car. We don't do that. It's more difficult for us because we have to put more R&D money, because we have to do more models, but I think it's important that we give more freedom to our client, because we like to say different Ferrari for different Ferraristi client, different Ferrari for different moments.
And part of that quality of revenue versus quantity is because personalization has just taken off. I think it's now 20% of revenue last year was people picking their own paint color, their own leather, their own stitching. What's driving that?
People like to personalize what they buy. I was on the plane here this morning, and I met a client of ours. He's here in Singapore, and he came to Italy to personalize his cars because he wants to have more carbon finish. Because the carbon looks like the knitting of the textile, Yeah. So it's very, very nice, very interesting. So the people want to come there, want to have the experience to decide how to design their car. It's part of the experience, There are people that putting the name on the shirt and people that want to put their name on the full car.
But you've said another part of that experience, in a positive way, is waiting for your Ferrari. And there are so many people that I know that go crazy with how long they have to wait for the Ferrari. If they can get one, it's very hard to get one. 3/4 of all buyers are existing Ferrari owners. You are sold out through 2026, at least in the U.S. What do you say to all those clients that come to you and ask you, Benedetto, make more cars. Benedetto, why does it take me until 2028 until I can get my Purosangue SUV?
There are some answers. I have a client. He became our client. I have a different kind of client. One client at 78 years old decided to buy a Ferrari. And he said, look, I cannot wait 2 years. No, come on. I said, this is a motivation for you. So this client is 84. He has 2 cars. So we give him motivation.
Stay alive.
There are other people. There is another guy, younger, 37. He said, I place an order. I would like to get the car when I'm 40. I said, don't worry, you will get when you are 39. No, I think that it's part of the experience because when I left yesterday...
But that's not a pleasant experience.
No, it's very pleasant. You should try it. It's,
I would like to.
Yesterday on our track in Fiorano, where is our main location, there were a lot of 60 clients, new potential clients from some region in Europe that were trying our Ferrari. And, we have also the pre-owned. That is a way for us to start to have in our community the prospect.
Yeah, it's interesting. A lot of companies, car companies, certainly leave the pre-owned used car market to the dealers. You've started to really engage those pre-owned buyers because that's the only on-ramp, so to speak, to a new Ferrari. So how are you engaging with those pre-owned program?
Look, here we did some step forward in the last year. We need to keep improving. Today, 50% in average of the car, pre-owned car, go through our dealers. The remaining 50% goes through the grey dealer. We want to raise this ratio.
I see.
So there is a way to improve over there. There are some countries where this ratio is 60, 62, some other countries where it's below 40. But there's an area of opportunity for us because we consider all the cars, the new and the pre-owned, as all equal.
And you're also doing a lot with the Classic K program where people can come bring a vintage Ferrari and you can restore that. One of the things that I've noticed in the years of covering wealth is that a lot of spending by the wealthy has shifted from things to experiences. And I've been fascinated to watch Ferrari turn a car into an experience. How have you done that so far? And what do you think you could do in the future to make that experience even more part?
I like to say that we are lucky because you can fit in a car with full body. There are other luxury objects you cannot fit in.
Yeah.
So you, by definition, you experience the car with the full body, with all the senses. I think we have, in different parts of the world, we are organizing events where the people can come with their own car. So, for example, before announcing our latest supercar, F80, we organize an event where the people owning the first supercar, 2880 GTO, is a car of 1984. They could bring their car and be part of the community. So we do sometimes an event with something that is linking the people together. So it is a car. We have a women tour in different parts of the world. We have events, for example, here in China or in Arizona, in the desert. So the marketing people are able to find always interesting, innovative concepts so that the people are together. The last one, last week, was in Utah. So, and the people like to do that. I just got a message before with one client called John, who was telling me, meet you soon in Sevilla, where we will do our cavalcade. So this
the cavalcade, for those of you who know, it's where like 100 Ferrari owners
more or less,
make a giant parade and they go around the country. It's beautiful. It's
very beautiful.
Amazing. Yeah. And you just mentioned the F80, which is your new supercar. So you're making 799 of these. The starting price without the personalization is $3.7 million, and you sold out immediately. I think we have a picture of it.
It should be, yeah.
But how has... That's partly a reflection of what you learned in Formula One. There's the F80.
Yeah.
And Ferrari seems to not just see racing as dedicated to the racetrack, but it drives a lot of what you do inside the company. So That value of competitiveness off the track, how do you apply that inside the company and even to the road cars?
I mean, this is a concept that took me a while to understand, because when I was not in Ferrari, I was a Ferrari fan. So I was looking at the Formula One racing, endurance racing, only with the eyes of a fan. But when you go in Ferrari, you understand that Formula One and endurance, because when we race, we have Formula One, but we have also the car that won Le Mans.
1, 2, and 3.
Last 2 weeks ago, 1, 2, and 3 in Middle East. In the last 2 years, we won Le Mans. But the racing for our company, and as I said, you understand when you are in, has 4 meanings. One, the simplest one to understand is what you said. We developed the hypercar, the car that won, for example, Le Mans. And after that, we have the sister, that is the F80, the car for which you saw the picture before in Melbourne. There will be a race in a few hours, let's say. First one. So technology platform to develop innovation, innovative cars. The second is a great commercial platform to have link with other sponsors. So we have the sponsor IBM, HP, Ray, different kind of sponsors. 3 is a way to remind that we have a platform that can help a lot on the communication of the brand. It's universal. Very often, the sport platforms are pretty much local. This is a universal platform. One of the reasons why the sponsors select us. And the fourth one, we always say that people have to be with 4 wheels on the ground. The people have to stay humble, because otherwise success can let you lose the contact with the ground. When you have a sport team in the company, is the best reminder for everyone that you can win, you can lose. Competition is there. You have to use the competition in a way to improve. Because otherwise, you have the risk that as a successful company, you start to levitate and forget and depart from what the client is. So these are the 4 meanings. And that's, I understood. Took me some time, but I understood. And I'm pushing especially on the last one.
And finally, I can't end without talking about the big race coming up this weekend in Melbourne, the first Formula One race of the season. You have an exciting team this year. How do you feel about the team, the new addition to the team, and the car?
We feel very excited. I think the team did a good job. I think we have a competitive car. We'll see now when everyone will put on the table the card, because we don't know what the competition did. And this is coming to the discussion of the beauty of the competition. But yes, we have Charles, we have Lewis. Last week we had an event in Milan with one sponsor of ours, UniCredit. We had 40,000 people. Many people in Milan were upset because we closed the metro. Anyway, but this is part of the fun, you know? So we had a lot of people, and I like to see the way they work together. So let's see. I think we will have our fun to have fun.
Yeah, and it's great to remind that it is a team. This Instagram post by Lewis Hamilton became the most popular Instagram post ever for Formula One. Got over 5 million views, likes, as soon as it went up. Again, it is a team. You have two drivers. But how has it been to get even more attention to a brand that's already got super fans around the world? What has he brought to Ferrari as a company?
I was looking at the numbers. If you go on our social channel, you pass easily tens and tens of million views. We have hundreds of million fans. I'm sure also here there are fans. I think it's, as you said, it's a way to put together unique people that can contribute to make unique things for unique client. But don't forget that I was having in the road show, I'll share with you this, it's very important. And he was making a benchmark between us and another luxury company. I don't tell you which one. And he was telling, everyone in the world knows Ferrari. Not everyone knows that company. And this is important because Ferrari is exclusive and inclusive. exclusive because we make only 14,000 cars, but we are, and we have to be inclusive because we exist, because we belong to racing. We are a company that started as a racing company in 1947. By the way, yesterday was the 78th anniversary. March
Wow,
12.
happy anniversary.
You should have been arranging different agenda.
Should have been.
Anyway, so we are inclusive and exclusive. And we care about our client, the Ferrarista, and our fan. So this is very important. We have always to keep these two, let's say, souls together, and we can do this with all the things we do.
Lastly, does it ever, all that pressure where it's such a famous brand, it's got this incredible legacy. You became CEO, you came from the electronics world, you spent a lot of time here in Singapore because your company had a large operation here. Was it intimidating to be the CEO of Ferrari, and how have you grown into that personally?
I think that when you change a job, if you don't have some fear, I'm not a kamikaze, okay? So it's normal to have some fear. But I have to say that I found a great team that made much easier the job. I also have been, I had a board that has helped for the onboarding. And then on my side, I have been always exposed to do new things because the activity I was doing there was in a completely new activity where I was not in a B2B business, but was more in a B2C business. So in Ferrari, I have the opportunity to do two things. One, to do some technologies with the team that touch the rational part. And two, luxury that is touching the emotional part. And for me, the most important thing in a human being is the emotion. The rational part clearly is important when you have to do math or whatever, but at the end of the story, when you buy our Ferrari, you buy because the emotion that we deliver to our client. So 3 years and a half, I had a lot of fun. I learned a lot of things. I'm sure I will learn other things. So it has been easy, let's put it this way, or natural. I don't know. I miss Singapore because I was coming, as you said, every 3 weeks here. I had a big team. But you invite me, I come. It's okay.
No, I appreciate it. Thank you so much for coming. Good luck with the race this weekend. We appreciate it.
Thank you.
Thank you very much to CNBC's Robert Frank and also the Ferrari boss here, Benedetto. I was really enjoying that conversation. It was very entertaining. I learned a new word as well, that a client is called a Ferrarista, with the correct pronunciation. I'm not sure whether that's the correct pronunciation, but a Ferrarista. I also was thinking there were two things that came to mind, old adages. One was less is more, and number two, good things come to those who wait. So I hope you enjoyed that conversation because we've got a whole lot more coming your way. Let me just run through a couple of the people who we have on deck for you. We're going to be doing a fireside chat with Olympian Michael Johnson about his life and his legacy. We're also going to be joined by His Royal Highness Prince Faisal bin Bandar Al-Saud, the chairman of Saudi Esports Federation, who will tell us about how the kingdom is planning to grow the sector and also use this as a pillar to diversify their economy. But before we get back into the session and those guests, let's just center ourselves for a moment and take a collective time out. Let's bring back Ashley Ray once again. I hope you all enjoyed yesterday, the mindfulness session. I certainly did. So we've brought Ashley back again to come and do another session for us right now. Ashley, thank you.
Yeah. Hello, everyone. Oh, can you hear me? Hello. Hi. Hello, everyone. I'm Ashley Ray. I'm here to talk to you about meditation and mindfulness. I work with executives and leadership teams around the world at Fortune 500 companies and professional athletes, helping them self-connect so they can better connect to others and lead their companies. And for athletes, helping them get to this place of flow state so they can better perform. So I work with companies like Intel and Pfizer and Mondelez and Sesame Street. I'm Canadian, so I work with the Canadian Olympic Committee. Just moved to London. Now I'm working in the Premier League, both with footballers, management, and with the executives in the business of sport. Okay? So Ray Dalio yesterday said one of the secrets to his success is meditation. So we're just going to do a quick meditation and see if we can find some of that Ray Dalio magic. Okay? Let's put our feet on the ground, roll our shoulders back, your palms in your lap. Maybe roll out your neck for a moment. You can close your eyes. Just take a few deep clearing breaths in through your nose, out through your mouth. Another deep breath. One more. We're going to relax the space between our eyebrows. Kind of unclench our jaw. Maybe taking a breath into our heart. Sending ourselves some love for being here. Taking a breath into your lower belly. Into your hips. Down into your knees. Your ankles, your feet. Just taking a moment here to settle in. And taking a few deep breaths again, as we did at the beginning. Coming back to this moment. And when you're ready, you can open your eyes, come back to the room, and see how you feel. Hopefully better, hopefully not worse. Yeah? How many of you had your mind wander a little bit? Is this almost done? My foot hurts, I'm hungry. Yeah, it's normal for our mind to wander in meditation. I think a common misconception is that we're not supposed to think during meditation, that we're supposed to have no thoughts. We're not setting ourselves up for success with that belief. So I offer the reframe in, we're going to have thoughts, but how do we return to ourselves again and again? We're coming back to ourselves over and over, and we're building this muscle of focus. In my experience, the most successful people I've worked with in the world have extreme focus. They have extreme clarity. When you have 10 priorities, you don't have a priority. Just like we have all these thoughts, these distractions, these opportunities and chances in business and life, how do we come back to our focus and stay clear on what's important to us? So when your mind is wandering, can you come back again and again and again with kindness, with self-compassion, and we start to shift how we speak to ourselves, which impacts our external communication, how we show up as a leader, how we connect to our partner, our kids, our colleagues, our baristas, our doormen. So this practice of focus, this practice of clarity, the practice of self-compassion. So we'll take a final breath together here. Inhaling in through your nose again, out through your mouth. In through the nose, out through the mouth. One more, your biggest breath of the day. And remembering that this practice is a practice of 1,000 new beginnings. You can always start again. You can always practice kindness, just returning to yourself again and again. Thank you so much.
Thank you very much, Ashley. Wasn't that wonderful? I feel very relaxed, and I hope you do too. We're going, apart from the how around. But anyway, we've got to wake you up for the second session, haven't we? We're going to return now our attention to the global energy transition and talk about effective leadership strategies and how to navigate to a low-carbon economy, particularly when it comes to supply chains and their operations. We have a fascinating chat with an executive who's at the heart of the matter for one of the companies who's really, really leading the way forward. So would you please join me in welcoming onto the stage now Manish Pant. He is Executive Vice President, International Operations for Schneider Electric. Manish, come and join me. Nice to see you, sir.
Thank
How
you,
are you
Emma.
doing?
I'm good, thank you.
Take a seat there. Did you get a chance to do some meditation?
Actually, no. But yes.
We'll try that
I
later.
hope that the audience had a good opportunity to break.
And now they're ready for you, that is for sure. Okay, let's get back to the road to net zero, the carbon emissions. Let's start with a big headline, shall we? We know that the UN Climate Accord and the UN forecasts are trying to not have global warming exceed 1.5 degrees by the end of the century. A huge amount of effort is going into it, but is it enough? Do you think that we will hit that goal or not? Because currently estimates suggest that we are way above it.
So yeah, I think let's, I would start by saying first that the good news is we have over 150 countries that have committed to net zero. That is between 2050 and 2070. At the same time, there are over 10,000 companies that have also committed to net zero and are working towards it. But, you know, just making commitments is not enough. We've seen that in 2024, we are already at 1.5 degrees, a little bit ahead of that in terms of the curve. So it's true that we need to do things more. We need to do faster. We need to bend the curve faster so that we are able to get that. As technology company, I think we are an optimist, and we truly believe that we have technologies today, and we'll have more in this period of time that could be deployed to make that happen.
I was going to ask if you're an optimist. I suppose you have to be, don't you, the job that
That's
you
right.
do. You talked about technology. Of course, Schneider Electric is very much a technology firm. You're at the cutting edge of this climate technology. You say the technology is here, which is fantastic news, and reasons to be optimistic. What are the challenges, though, in the barriers in adopting that technology?
Well, today what we find based on some of the surveys that we've done is there is need to have a lot more of internal alignment. There is a need for more data that is required so that we are able to manage it better. There's need for more financing. There is need for more training and upskilling in order to deploy those technologies. And then there's a need for data and understanding of the climate evolution, which is going to help us, manage those opportunities. So, still, there are a few challenges around it, but we are here to work together to see how we are able to find solutions to them.
So you've listed quite a few needs. Then the list of needs is pretty strong. In terms of prioritizing those needs and also prioritizing the solutions. What would you put there in place in order to increase the decarbonization process?
Well, I think what we would say is that we need to deploy these technologies faster, right? And if you look at it, there is the supply side and then there's a demand side. Sure. How we are able to make sure that we are addressing both of them. Today, if you look at the economics of investment into sustainability, decarbonization, or energy transition, most of the solutions have a payback in the region of 3 to 5 years. I can bring some examples here for Capgemini, for example, which is one of the large employers in India, and they have been using technologies around their 23 campuses and 70 buildings. They've found that they've been able to save up to 30% of energy across these campuses using the technologies that are available today. Velo, which is an industrial company making pumps, and not so far from here in Indonesia, they have been using our solutions, and again, able to reduce the downtime by 30%, save energy by over 25%. So there are clear benefits which are there. When we have to look at deployment of these technologies, it is a lot about looking at the full life cycle. And yes, there is an upfront investment, but then the benefits are going to accrue over the life cycle. And therefore, the financial models have to be a bit different when we are looking at deploying these technologies.
Just going back to the supply side, because you mentioned supply side and demand side, and there are challenges on both. But on the supply side, there's some promising signs when you look at the fact that renewable energy costs are coming down significantly, aren't they? What impact is that having?
Well, what is happening is that we have seen that the growth of renewable is quite high. If you look at it in terms of the energy transition and the decarbonization, supply is 50% of the solution. So here we have the renewables, which is one of the lowest costs per unit, and therefore there's a deployment there. At the same time, there is a demand side, which is we can further break it down into energy efficiency, which is thanks to digitization, we are able to get up to 30% saving, and I gave some examples of that. Then you have electrification. So the more we electrify, the more we are able to decarbonize, because electricity is the cleanest vector of decarbonization, the cleanest form of energy. So, there is supply side, which is renewable, but at the same time, if we focus also on the demand side, the two together is where the acceleration is going to come.
And as you mentioned, on the demand side, there is energy efficiency, which is a big issue, isn't it? Is enough attention being paid on using energy more efficiently, would you say?
Yeah, thanks for saying that. What we say is that digitization is at the base of the driver for energy efficiency, but it's more than just energy efficiency. When we are digitizing, you are able to collect data, and then you are able to overlay that with artificial intelligence and drive more efficiency. So it's a very positive flywheel that you are building as you digitize more. Now, once you're doing that, you are able to do things like digital twin, which are able to help you actually reduce the capex, the initial investments that you're making, because you could model and see what you need, and you are able to right-size your asset. At the same time, when you look at the operate stage of any asset, you're able to do predictive maintenance, you're able to bring better safety, you're able to look at managing equipment in a much more efficient way. So there is an increase in productivity, there is an increase in efficiency, there is an increase in the life cycle, across the full life cycle. So yes, digitization has multiple benefits, and clearly something that we need to make sure that we are doing more of.
Steve was talking about the COP summits just in the last session or before. Quite interesting, actually, just to read out one of the facts. At COP28, countries reached a landmark agreement to work together collectively to double the global average annual rate of energy efficiency improvements by 2030, which is not that long away. How does that help, do you think, when you have pledges like this when it comes to energy efficiency?
Well, 25% of the solution, we can save up to 25% or 30% of energy through digitization, through efficiency. The problem of carbon is a problem of energy. Okay, so if you look at it today, 80% of the solution is lying with energy, and 80% of that could be resolved with the solutions available today. And what we are saying is 30% energy savings are possible. So the math is that you are able to get up to 25% savings right there. So, and this could happen across segments, whether it's about data centers, whether it's about infrastructure, whether it's about industry, whether it's about buildings. So, there are examples. I can bring some more. At Schneider Electric, we drink our own champagne, being a French company. Here in Singapore, we have our office, which is 20 years, it's a 20-year-old building that we have been able to, using our own technology, reduce the consumption by 1/4 in a period of 5 years. And the payback for that, thanks to energy efficiency and also through design, is about 3 years. So this is what is possible. And the more that happens, the faster we are able to bend the curve.
When it comes to your technologies, which ones are you most excited about?
Well, all of them.
Or which sector?
Well, it is, I would say that, this is across all segments. I mean, I mentioned that before. Maybe what we would like to say is how to deploy those technologies. What we say is it's about strategizing. It's understanding the baseline of, the carbon that you have. It is about digitizing, and we talked about that. And once you digitize, you know how much you can measure, you are able to know how much you're using, and then after that, you're able to decarbonize. So it's about strategize, digitize, and then decarbonize using the solutions.
You've got a big job, Manish. I mean, you are Executive Vice President for International Operations at Schneider Electric. I mean, you've got oversight of the whole of the Global South. It is huge, isn't it? I mean, in terms of the regions that you look after, can you give us a brief idea of the challenges and the opportunities that you see on a day-to-day basis?
Well, thank you. I think I'm humbled to be in this position where you have almost 50% of the world population and 18% of GDP of the world. I think the challenges here are twofold. One is we have about 3 billion more people in this part of the world that are going to be, coming in the next couple of decades. At the same time, we have the big challenge of access to energy. We still have about 1 billion people who don't have access to energy. Another 1 billion of those have intermittent access to energy. So how we are able to bring this access to energy to the 5 million people that would be added in this part of the world is, I would say, is the first challenge. And we need to make sure that we are doing that in a green way, in a decarbonized way. At the same time, with this, there is, the wealth creation is happening today. People want the same access to lifestyle that everybody else has. And therefore, there is a huge investment in infrastructure build that is happening in this part of the world. If you look at it, in Africa and India put together, you have the same amount of construction that exists today in Europe and China that is going to happen in the next couple of decades in Middle East, Africa, and India put together. So that's the challenge. But at the same time, you have the old buildings, which will still be there. The old infrastructure will still be there. So how you're able to marry the old and the new, make sure that you're able to bring the old into using the technologies into being decarbonized and green. At the same time, what you start making afresh, which is a lot of it, is green right from the beginning.
What's easier?
Well, I would say we have to do both. And the good news is, again, that the technologies are there, both to retrofit, which is a large part of the challenge in the developed world, as well as using the technologies for what is new.
Is finance there? We talk a lot, don't we, about the funds from the global north need to flow into the global south. You must spend a lot of your time looking at that. Can you give us an update on finance?
Well, clearly there is need for more financing and more money to be deployed.
Is it getting easier?
Well, on the supply side, yes. I mean, if you look at the investment in renewables, that is there. We clearly need more to come on the side of the demand side with new models. And this is how we'll have to approach it. And here, again, there's a big call out to the financial institutions and to companies to say how we are able to bring new models that are going to bring in the returns that are going to help us deploy these technologies faster in this fast-growing area.
So as we go into the close, Manish, what is your message to business leaders who are kind of navigating their own companies to net zero, particularly in the global south? What do you say to them?
Well, the message is that, this is a great opportunity for us to rethink how we are building things, how we are going to look at deploying and innovating as we build this new era. At the same time, it is great that we are able to use the purpose of decarbonizing, electrifying, as well as creating new profitability and resilience for our companies.
Okay, well said, Manish. It's been a pleasure to talk to you. Thank you very much. Big round of applause, please, at Manish Pant from Schneider Electric. Thank you so much. Okay, ladies and gentlemen, we've been talking a lot about the energy transition. We're going to have a look forward now to a net zero future. Take a look at this video.
The journey to achieving net zero emissions by mid-century is continuing at pace. Many governments across the globe continue to invest heavily in sustainable infrastructure. The world added 50% more renewable capacity in 2023 compared to the previous year. The private sector also has a vital role to play by investing in sustainable practices, supporting policy changes and setting their own ambitious targets.
So the ability to pull in not just private sector money commercially, but also philanthropic capital and other sources of capital will be vitally important.
Climate pledges are fast becoming standard practice across sectors. What are the key challenges businesses must overcome to deliver on these commitments? Almost 2/3 of the world's largest 2,000 publicly listed companies have net zero targets in place.
In the 6 years following the Paris Agreement, a lot of companies were actually making substantial progress. But I think that as the energy system, continues to be slowly transitioning, it is harder for companies to actually get those kind of low-hanging fruits in terms of energy efficiency and other kinds of operational efficiency.
How can leadership strategies successfully navigate towards a low-carbon economy while availing of the opportunities in scaling to clean energy solutions?
If I can get my consumers to prefer my brands because I am somehow more environmentally friendly and I can convince them that that's the way they want to live their lives and make their choices, I'm going to be very successful.
What investments and technologies can help unlock the adoption of more sustainable supply chains and operations? And what role could regulations play in paving a clearer path to a net zero future? Welcome to CNBC's IoT, powering the digital economy debate as we focus on accelerating the global energy transition.
I mean, I have to say, I've covered a lot of panels over my years, and a lot of energy panels specifically, and my job, and the way my career has changed, has actually been in parallel with the energy transition as well. I started off as an oil equity trader and then equity derivatives, and I moved on to being the OPEC reporter, the oil correspondent for CNBC International. And guess what? I moved on, like a lot of us, to covering broader energy, to the energy transition, to the move to net zero as well. And it's been an amazing education. And I promise you something. Over the next, since 30 minutes here, we'll have as long as we like. I'm watching Mandy, I'm in trouble already. But over the next 30 minutes, I guarantee you will learn something about some extraordinary initiatives in the transition, and just following on from that amazing conversation just now. Let me get my guests straight on stage as well. In no particular order, we have Mitesh Patel, who is the interim CEO and Chief Operating Officer of Sun Cable International. Oh my goodness me, what this company is doing is going to blow your mind potentially as well. Mitesh, no pressure at all on that one as well. Christina Shim is the Chief Sustainability Officer at IBM as well. We've had a couple of great conversations. She's as passionate about this as I am, I can assure you. Please take a seat. And Chen Kalpa, this gentleman has had the mispleasure or whatever it may well be of meeting me many times over the years as well. And I can tell you, at the heart of Sabanci is sustainability. In fact, I'll tell you straight away already, no profit decision, no investment decision is made at Sabanci before it passes the first gate, which is sustainability. It's got to be profitable as well. And that, I hope you'll realize, has been the thematic of my conversations and other conversations you've had here at CONVERGE, that actually this isn't about net zero or sustainability without profit. If there was one message I would want you to take away from this conference, and other people want you to have other messages, it's that actually profit and the move to sustainability, guess what? They go hand in hand. These three amazing businessmen and women wouldn't be here if profit wasn't involved. Do you think IBM would be doing that? Do you think Sabanci would? And as I say, Sun Cable got some extraordinary moves as well. I will start off with you, Cenk, actually, because I just almost took away your thunder by saying about the gates you have to go through. Just explain to this amazing audience what you mean by that.
Yeah. So we have an investment holding company investing in 5 different verticals: digital, material, mobility, energy, climate, and finance. And we have many options, but we have to find a common denominator. And for us, the common denominator is sustainability. So we are investing future technologies with the common denominator of sustainability. And our investment criteria, we first look to strategic fit, second look to sustainability fit, so whether any addition to the portfolio is diluting my carbon footprint or not, and then we look to the financial feasibility of that project. And guess, in the last 5 years, we have hundreds of projects. our investment committee meets every week, and we find out business cases that are profitable, sustainable, and scalable.
I would like to be. It's like a dragon's den every week at Bagchee, isn't it? or the Shark Tank. I think that's our own version, isn't it? Yeah, I've got to get on message here. But actually, just explain to me one thing, and it suddenly came to me as you were talking. Has that job of sifting your metaphorical Shark Tank, has it got easier or harder as the transition's gone on? Because one thing that's going to come up a lot is technology is moving apace. And we're not there yet on so many technologies. But the technology moves quicker, it gets scale, it gets cheaper. So investment decisions a couple of years ago were different from those investment decisions now with similar technologies. So is the job getting harder or easier?
Easier. Because as you get scale, costs are getting lower.
Yeah.
But what we do is we do invest the current scalable, sustainable technologies of today, but also we are developing an ecosystem of around new startups on climate and energy, for example. We have already deployed, $60 million to, 10 direct and 6 funds of fund investments just in energy and climate technology, to fusion, to deep geothermal, to battery technologies, to smart grid technologies, because the biggest problem of renewables is the interruption. You have 8 hours sun and then you are closed. But we need, especially with AI infrastructure, with new data centers, we need continuous base load, but clean energy. And we have to find them out.
I've got a man in a moment who'll be talking about what one of the solutions might be for continuous base load as well. But we'll come to that after Christina. Because IBM, what a journey your company is on as well. But it's not just about what you can provide for clients in terms of energy solutions and technological solutions. It's about what you can do on your journey yourselves as a company. Do you want to just explain to us how that's going?
Yeah, absolutely. So we actually put our first environmental policy in place back in 1971.
1971. I was a young
chap. A nice chap. I do think it's one of the reasons I only joined IBM about 3 years ago, but it's one of the reasons I joined. I think just the fact that it's such a core part of the legacy and the DNA of how we think about the company. I took over my role as Chief Sustainability Officer about 8 months ago. And as part of that, my mandate is to embed sustainability in everything that we do internally and everything that we create. So to your point, externally, and how that supports our partners in the space. But I think the critical part of this is that a lot of CSOs, myself included, actually are increasingly coming from the business side. And why that's important, exactly to your introduction, is that these are things that should go hand in hand. It's not something that's a check the box. It's not something that's so nice to have, or let's just be a nice corporate citizen. This is really, data shows, right? Companies that truly embedded into what they're doing and all of the decision making, you're able to decrease your costs, you're able to create innovation and revenue growth, you're able to attract more talent, and I'm sure my colleagues here can attest to all of this. So it's just good business, right? And so at the end of the day, we have been doing this a lot within IBM in terms of the net zero goal, yes, and our journey with pollution and environmental management and all of the things, but increasingly just making sure that it is part of how we think about our mergers and acquisitions, how we think about our treasury, our investors, all the different stakeholders that are really critical as part of our success, in addition to building it into our products from a sustainable perspective, and then the use cases of that to support the energy transition. All of those angles across the spectrum, I think, is where we need to get to globally, across enterprises, across industries, to make sure that we're doing this the right way.
Yeah, and especially now, and we don't have to go into the politics now, we can maybe touch upon it a little bit later on as well, but being a CSO, being a Chief Diversity Officer, being somebody who's not necessarily one of those core old-fashioned functions,
right.
It's under attack now as well. But I think, and I'll just make the point one more time, your answer says this isn't about hitting ESG targets.
No.
This isn't about a nice to have for those investors who consider themselves stakeholders. It's about investors actually making cold, hard, logical decisions, and a
Correct.
CSO is part of that.
Correct. I will say one of the critical factors here is actually where we sit within the organization.
Yes.
So I report to our chief operating officer. My peers are the CIO, the chief procurement officer, the people who are responsible for cash. I mean, like all of the core operations of the business. And I think that's really important because that means that as we think about transforming the organization and making ourselves more productive and you know, more innovative, et cetera, that it's core to how we think about the operations of the enterprise globally. I think if you're a CSO and you're sitting in other areas of the organization where it's not core to how the business is being run, it's much more difficult.
And I'll just come back to you because, Mitesh, I will come to you in a moment. That is absolutely, and I hadn't thought of that before as well. There's a CSO and then there's a CSO. You know what I'm saying here as well? There's a CSO which reports to so-and-so, so-and-so, or you who's straight into the COO at peer level with Chief Investment Officer and all. That makes such a difference. So that you can have a CSO but not give them the power and not give them the rank and position. You feel that you're empowered by IBM to have an equal voice as other those critical roles as well.
Yes, because I think that the challenge is, and I say this a lot, especially in the US, I think, which is a little bit further behind in the way they think about this topic compared to the EU or parts of Asia, is it used to be very much like, oh, let's just do more recycling, or let's make sure we're turning off the lights more, we're more efficient in our energy practices, and increasingly it is, again, part of our operational decisions. And so the fact that for me personally, coming into this role, it was really important that I did report into either the COO or the CEO.
Yeah.
I mean, it can be in a couple of different places. It doesn't have to be the COO, but I do think it makes a really big difference to be taken more seriously in terms of how it is going to be embedded within the organization.
That's really, really important as well. I'm going to ask you a little question. I've decided that engagement is the way forward as well. Just a quick question, and you can be honest. How many of you have heard of Sun Cable International before this event? Okay, so we're talking a small percentage as well. I am going to blow your mind now with my conversation with Mitesh. I promise you, you're going to hear some stuff which, if it works, it's just extraordinary. Mitesh, I did some research on your company, and to say that you've got some grand ambitions is putting it politely. How about if I said to you, maybe building up the biggest solar operation on the planet, and maybe having the largest submarine interconnector line on the planet, and maybe having one of the biggest storage facilities on the planet. And if I said to you, this company's trying to do that, then you might get, wow, this is fascinating. I've taken a bit of your thunder, but just tell us all about it.
Yeah, so as I mentioned, we are bringing 1.75 gigawatt of solar plus battery storage power from Australia, from all the way Australia to Singapore. It's 5,000 kilometer transmission line. Or 5,000 kilometers.
Again, he's understating it. I'm going to do it. 5,000 kilometer line.
Yep, and of which 4,300 kilometers is undersea. And some of it will also go up to the depths of 3,000 meters, so it's quite deep. It's the first of its kind of a project, but there are different elements of the project that have already been done elsewhere. So Europe has about 420 interconnectors. Maybe they're not as long as this and not as deep as this, but we have the technology readiness now, which will allow us to do something of this scale. What we are trying to do here is that, as you would have noticed, mankind has been moving energy from where it is found in abundance to where it is needed in abundance. So we have been moving coal, we have been moving oil, moving gas through either ships or long-distance pipelines. Electricity is just another form of energy, which we haven't yet started moving across continents or across long distances, but is no different than moving any other form of energy. We have now technology which allows us or enables us to do this kind of long-distance interconnectors, and that also means that you can scale the global energy transition where you can remove the intermittency of renewable energy. When you do this kind of long-distance interconnectors, you can do 24/7 or full 24 hours of renewable energy supply. Puts less pressure on the grid. It increases the reliability on the grid and the management of the grid. So those are quite a few significant advantages for countries or nations to scale up their energy renewable energy mix in the portfolio of generation. And the last part is that when you start doing this, it also helps the AI or the new tech, because you will have a lot of spill. We call it spill. When you are doing 24/7 generation and you're putting everything in a battery storage, there will be a certain power that you will not be able to store, and it's called spill. You can use that spill at the solar farm for the AI learning models, because the learning models don't need 24/7 electricity. They can be trained few hours or certain number of hours a day, and that's an extremely cheap energy. AI is going to need a lot of energy as we kind of see the penetration and adaptation, and this could be also one of the additional benefit from doing this kind of long distance interconnectors.
If it was easy, it would have been done already. So I really want to know, and I'll start off with you on this project, because I just, as I say, I find it mind-blowing, and then we'll work our way down as well. But what are the biggest barriers to getting this project going? I know that it's had speed bumps. We think it's on track. I can think of a few questions, but I want you to tell me, what are the biggest barriers to what could be one of the most phenomenal projects on the planet?
I think, first of all, it's about having that vision. So you need to think at a very grand level, bold vision. We have that in our investor, and that's why we're kind of moving forward with this project. The biggest barrier, in my view, would be the global supply chain and the geopolitics, because this kind of project will need huge amount of, for example, cable, panels, battery storage, and so on. And one of the examples is cable supply. In and around 2022, 23, there was relatively enough cable supply in the market for the kind of cable that is required for our project. And suddenly we had Ukraine and Russia conflict. Right. The European TSOs, the transmission system operators, decided to scale their renewable energy plants, and they went out with framework agreements to procure cable, which now has a waiting period of about 5 to 7 years. Wow. So this kind of geopolitical events could certainly bring a major risk to the project.
I didn't expect you to say that. So the Russo-Ukraine war has been detrimental to this project.
It added more challenges to the project.
Yeah.
We're still working with the manufacturers, and even manufacturers are stepping up to kind of scale up their production.
Christina, what are the biggest barriers for IBM and for you to develop products sustainably and at scale?
So I think if I can just take a step back in terms of context, one of the things that you mentioned was how much more energy will be required as part of this AI revolution. And I think one of the biggest challenges that we see with our partners is how to think about leveraging AI from a more intentional perspective, and that includes from a sustainability and environmental perspective. So for us, thinking about this across the full stack of AI. So I'm talking about everything from the chips to the infrastructure to the models, fit-for-purpose models that are not the big sledgehammers that you need to do a particular use case or an outcome, but you have a fit-for-purpose model that is the size that you need to get the job done. And then the applications of all of that, right, around how you can do this in the most energy-efficient way, but also how you can think about management of energy grids and infrastructure and all of that. Thinking about the intentionality across that entire stack is quite challenging. I think in general, the adoption of AI, I mean, you've heard about AI so much, but the adoption of AI is not the question. It's a matter of how and in what capacity, if you will. And the challenges that we see, as well as what we're trying to make sure we're addressing with our partners, is how do you think about the sustainability and the mitigation of this across that stack? How do you and your organizations think about that as part of your adoption? And that's, at the end of the day, a change management and a people and a culture question, and that's always challenging, right? So I think from a technological perspective, we're making a lot of progress. I mean, chips that are literally 99% more efficient than they were 15 years ago, and it's just accelerating at a faster pace in terms of how much more sustainable a lot of the technology can be. But, it's all about how humans and leaders are making those decisions and thinking about it more intentionally.
Yeah, we'll come to leadership decisions in a broader context in a moment as well. You've encouragingly said, Cenk, that actually those sustainable decisions at the first hurdle, and then the second hurdle, making them profitable, it's easier to make those decisions now than it was 5 years ago as well. Where are the biggest barriers for you to have a faster and wider adoption?
Yeah. So right now we are already constructing 2 gigawatts of renewables in Turkey and 1 gigawatt in United States. You know what? The biggest problem is still governments, the permits. Because from licensing to making a project shovel ready, that total time is longer than the construction time. You have to go and apply 100 different authorities to get permits to install renewable projects.
Sorry, I'll jump in there. In the States?
In United States, same. You know,
Europe?
the total project development time is changing.
But I'm going to jump. This is nonsense, isn't it? And I'm not talking about the States. I'm going to talk about Europe, for instance. You know, we had the Russia-Ukraine war. We're all living with the devastating effects of that as well. I spoke to the CEO of one of the biggest turbine companies in the world, and he said to me, my permitting's taking 5, 10 years for some of these as well. But funnily enough, and he was angry, he said they managed to actually get the permitting for an LNG terminal on the north coast of Germany within about 6 days. Wow. Just shows you what can be done if they really want to move on. He was spitting blood about this, and I share his frustration as well. Please carry on.
I think that's still the biggest issue, and as you rightfully said, in Europe it's really worse. Sometimes we have projects that the panels or the windmills are ready, and they wait grid connection for a couple of years. That's, I think, loss of energy, loss of value for the planet, for the nations, and for the companies.
I spoke to a CEO within the last couple of weeks, and I am not going to name his name. He said to me, I am a pretty important cog in the wheel in this energy transition, and I haven't spoken to my government once in the number of years. Again, I'm going to make this as opaque as possible so none of you can do any forensic work. I haven't spoken to my head of state once in the last 5 years plus about this. This was a fast-growing energy transition company that was stunningly profitable. What is it with the politician? I mean, we'll bring it back to Trump, but we always have to ask a Trump question. But what is it with the, when you speak, you are a very influential businessman, Cenk, as well. Right. Well, there was a little Gulffair advert, which I wasn't expecting. I'm sure they're incredibly sustainable at the same time. But in terms of what these... You speak to a lot of senior politicians. I know you do. What do you say? What do they say? What's the problem?
You know, the politician you talk, he has always the answer. He says that I support you fully. But the problem is the coordination between the different bodies in the organizations. Because you have Department of Sustainability, Department of Energy, Department of that, and the coordination...
You know what they need to do, don't you? They need a CSO at a higher level. We've already established that.
And then the second problem is the continuity, because, you know, you have a policy for 4 years, 5 years, and then the government changes, everything changes.
Yeah.
So the continuity at the governments right now is also a big problem.
I'm not here to knock democracy. I love liberal democracy. I'm a fully played-up member as well. But the longer-term planning of a more central authority that can think in the medium to longer term, it's undeniable. They get things done quicker.
Look what China has done. In the last 5 years, the total renewable investments of China is higher than the rest of the world.
Hang on.
That's, I think, something...
The Chinese investment over the last few years is higher than everyone else put together.
Yeah.
Well, good on China. I mean, bad on the rest of us. Let's be brutally honest about it. There's a lot of things we can criticize China for. For that, double thumbs up. I'm going to ask you the question. We've talked about politics as well. Is it changing? Are you having to change your language with it? I mean, it's been 100 days plus. It feels like 10 years already. But I mean, the speed of policy announcements is phenomenal. There's some amazing things coming out of the administration. There's some tough things coming out of the administration. How has it affected how you do your job?
I'll go back to what I said in the very beginning, which is that I think when I first came into the role, and increasingly a lot of CSOs are coming from business backgrounds. And I say that, and it's really important because if you can show the business value of what we're doing for the organization, it doesn't really matter what other language you need to use. That being said, I think, look, there are some triggering words now, depending on where you sit around the world. And I think the more that you can quantify business value for what you're doing and tie it to, again, the business operations and business decision making is only going to be more and more important.
Yeah.
At the end of the day, as long as the outcomes are the same, you just need to make sure that you're communicating in the appropriate way with the right stakeholders. And I would say in general, coming from, let's see, seeing organizations that have CSOs that are a little bit more like corporate social responsibility or philanthropy, like those are not, I think, the ways that you're going to be most successful going forward. But it's the same if you talk to your CFO versus your investor versus your procurement person, you kind of have to talk about things a little bit differently.
Yeah.
Similarly, I think just like from a sustainability perspective, depending on who you're talking to, and I think even more so in the US now.
It's about volume, isn't it? And we have a big sound desk in our control rooms, and the buttons go up on one part, they come down on another. I, as you might have noticed, only have one volume, which is why I'd be a rubbish CSO. But it's how you talk to people in their own language. It doesn't matter if it's a blue state, a red state, a purple state, speak to them in their own language as well. I can honestly say, and my bosses all know this, I love being here in Singapore. I think it's an amazing place. I think it's a can-do place. The developments and the speed of which actions can get done is phenomenal as well. Is that your experience with Singapore? Because obviously they are a major part of you putting this jigsaw together, Mitesh.
Yeah, so look, I think we're talking about the political support and the political will. Political will is absolutely essential for our kind of project, which has to cross few jurisdictions. So we have been fortunate to get support from Australia, Indonesia, and Singapore. Singapore has been very efficient in how they run some of their procurement exercises. You have a certain predictability of their policies and procedures, which is not often the case in many places. So that's something really that Singapore can be proud about, and we're thankful for. I think the other aspects besides what was earlier said by my colleagues here is that ensuring that the benefits of the projects are shared across your jurisdictions or with the people or the society or the community. And because for politicians, voters are their constituencies, not your project or not your company. You have to help them translate what benefits your project will bring to the constituents, which is your voters. And once you start doing that, we have seen that a lot of politicians and political parties get excited, and there is a certain level of traction that you can build around that. But I think that has to be done over a long period of time and in a consistent manner, a very focused message, besides doing all your regular CSOs and community work and helping out the underprivileged or the communities around your project.
Yeah.
Can I add in one thing to that? Because I think that what I'm also hearing, though, is like it's a communication thing, right? Like I think in general, there's so much of this that ties back into communication. How do you communicate with your internal stakeholders, whether it's different functions? How do you communicate with your constituents about the benefits of the different projects? How do you communicate? I mean, and I think I forgot, it might have been actually at Davos, this past Davos in Baku, where one of the threads that came out was that CSOs have a big communication problem. I don't think it's just CSOs, actually. I think, politicians, I mean, some people are just much better at this than others. It's at the forefront. Increasingly, I think from project perspective, business perspectives in general, I mean, you do a phenomenal job of saying, like, this is our number one thing, and then we have to think about the commercial value behind that. I don't think that we are at the point yet where it's being communicated in the most effective manner.
Yeah.
In a multifaceted way where a lot of people can make sure that they're thinking about the long-term.
I hear you. It's like everything has to be 3 letters on the acronym, doesn't it? Chief 1, 2, 3. But actually, it should be GPSO, Chief Profit and Sustainability Officer almost. But it's not 3 letters, so they can't have that in the boardroom. You were going to say?
One final thing. Energy transition is measured by 3 parameters because there is a trilemma of energy transition. It should be equitable, so affordable energy and everybody accessible energy, because for most of the developing countries, energy is not there yet. Forget about transforming it. Second, it should be secure, so there should be constant supply of energy, especially it's more critical right now with AI. And third is it should be sustainable, so decarbonized. And the country's performance is measured based on these three parameters worldwide for many years. And leading countries in the world is the Nordic countries. And guess what? Despite its size, China is stepping up heavily over there. Yeah, but we need, and unfortunately, most of the financing goes to the developed countries and China, not developing countries where people need energy.
I'm really glad you said that, because that came up on our last panel about the circular economy as well, about the global south needs to be talked to rather than at. It needs to be solutions for the global south rather than for the rich northern hemisphere or western countries. I realise I'm actually in the territory where it's almost my last question of Converge on air, which after 5 panels and round tables is a very sad moment for me, a moment of joy for many of you as well. So I'm going to end on a very positive note as well, and that is, what area of the transition, what area of innovation, and I need one snippet of each of you as well, are you most excited about as well? It's going to be all kinds of things coming from Mitesh as well, given the scale of the project. But I'll start off with you, Mitesh, as well. What is the most exciting part of innovation on this journey, and you can combine it with how it's becoming more profitable, that you're most excited about?
I think I'm excited about the axis between AI and energy. AI is going to really transform, or it is a transformative technology that will change the world. And together with that, you will need a lot of energy to support that. I am aware that eventually AI will get smarter and will be more efficient in the energy that it uses. But it has to go hand in hand, where you look at your energy solutions. And I think right from nuclear to fusion to flow batteries and the plenty of stuff that is going around. The best part of that is the product innovation cycles are getting shorter. And therefore, the time to market is really getting faster.
That's great. Christina?
Yeah, the key word for me is innovation. I'm really excited. I mean, the pace of innovation is just incredible. One thing we didn't mention is quantum.
Yes.
I think quantum and the work that's being done in quantum.
That's because it blows my mind, and I really can't comprehend the quantum. That's why I daren't talk about it. I'm struggling with AI and fusion and SMRs. Quantum's just not there for me, but
it's just incredible. I think the applications of some of this technology, regardless of whether it's quantum or not. I mean, I'm not a particularly technical person either, but I think just the pace of accelerated innovation, what that means for sustainable chemical formulations for your makeup, or what that means for the infrastructure and for the grid, and just the applications across the board. I think we're just starting to see.
Right.
I mean, it's going to be incredible.
That's great.
Yeah.
Cenk?
For me, most exciting thing is the investment or innovation around clean baseload energy technologies. And what enablers are the new material science, AI and digital. The output is energy. So I think this is the most exciting thing.
Well, what's most unexciting for me is I've got lots of zeros here, which means I have to rap for once, and the lady's standing up to my left, to your right, so I know that I've actually got to be well behaved. Look, I really want to thank Mitesh Patel, Christina Shim, and Cenk Alper for a brilliant conversation, and actually a really optimistic way to finish it as well.
Thank you.
And thank you so much. And Steve, you can always take as long as you like, so long as you stick to time. Look at that. Thank you. He did a huge amount of work here at Converge over the past couple of days. Let's give him a massive round of applause. Great job, Steve. Always bringing it, always bringing it. Thank you. And thank you very much to the panel as well, to Christina, Cenk, and Mitesh for really hammering home that concept that profit and sustainability do need to go hand in hand. And we also heard Steve ask the panel, are CSOs under attack? But I actually would really like to thank Christina, because she highlighted the fact that increasingly they need to be part of the key decision makers amongst the operations, and they can't just be, as she put it, someone who says, do more recycling or turn out the lights. So I thought that was a really good thing to just let the audience know about. So thank you to the panel. Okay, well, Steve said earlier that AI cannot be ever left out of any conversation of a CNBC anchor. So I also think that crypto, if Arjun Karpal would like to come up from behind the wings, crypto is another one that we certainly can't leave in the dark. We have to do an in-depth discussion about crypto here at Converge before we wrap things up. So, of course, Arjun Karpal, known to many of you, hopefully loved by many as our chief technology correspondent who's come out from London. You know, a week ago, we saw President Trump in the United States sign that executive order to establish the strategic Bitcoin reserve. And it was really interesting, wasn't it? The reaction, not just from industry, but in the price of Bitcoin itself. You'd have thought that, you know, the US was saying, we're dumping Bitcoin, we're not going to establish a strategic reserve, and we don't want to become the crypto capital of the world. Why was that the reaction that we saw?
Well, I think there was so much hype when Donald Trump was elected president around this pro-crypto campaign that he ran on, and the talk of the reserve. But when the actual details of the reserve came out, what was actually in the reserve was Bitcoin that had already been seized in criminal investigations or civil forfeitures, and it wasn't the US buying new Bitcoin, which many had hoped. So it was less aggressive a plan, I think, than many had hoped for. But there are still those in the industry who are about to speak to who still think this is quite a bullish move. So, because it's saying that the world's biggest economy is on board with crypto.
But do you think there are actually more announcements to come on this front, that this is just the tip of the iceberg?
There's a lot more in terms of, I think, legislation, and the crypto industry for a long time in the US has been asking for clear rules of the road for crypto. I think we are going to see some legislative move this year around things like stablecoins and other things as well.
Arjun, you're a smart guy. You've been following crypto since before we even knew what crypto was. You say that, you know, we need clearer legislation, clearer guardrails, and clearer regulation. But crypto's been around for ages. Why have we not got our act together on regulation?
It's sort of been sidelined a lot, I think, by regulators, not taking it that seriously and kind of not understanding what exactly they're dealing with here. And I think there's been an educational process with the regulators over the past few years about crypto, what exactly it is, how it works. And I think you're at a point now where you're starting to perhaps see them wake up to crypto and figure out, right, actually this is here to stay. It is serious. There's billions of dollars pouring into it. We kind of need to get this thing under control.
Okay, well, shall we pick those crypto minds? You want to bring your guests up?
Absolutely. Let me just introduce to the stage now Richard Teng, the CEO of Binance, and Chao Deng, the CEO of Hashkey Capital. A round of applause. And Richard's bought his suitcase in case I ask him some hard questions and he needs to jump on the plane.
We're at a Singapore
quickly.
airport. Come on. I need my luggage around.
When I interviewed Richard in Davos in January, he had a Binance gilet on. And I thought, oh, that's probably, you know, that's a good amount of swag. I didn't realize there was the socks, the luggage, the T-shirt, and the pocket square as well. Right, just a quick warning as well. We are doing a live recording of the CNBC Beyond the Valley podcast. If you're interested in listening, search CNBC Beyond the Valley wherever you get your podcasts. Are you both ready? Good. Crypto markets have been volatile since Donald Trump was elected president in the United States in 2024. He campaigned on a pro-crypto ticket, promising to make the U.S. the crypto capital of the planet. With his presidency now underway, is he living up to the hype? We'll be talking about this and much more, and I have two of the smartest minds in crypto with me today, Binance CEO Richard Teng and Hashkey Capital CEO Chao Deng. Thank you both for joining me today on this special recording of Beyond the Valley from Converge Live in Singapore.
Thanks for having me.
So let's kick off with the macro situation here. Bitcoin off its all-time highs that we hit around the election of Donald Trump. How much is this about disappointment over Trump's policies so far, and how much of this is a macro situation? Chao, do you want to start?
Sure. I think before or around the time when Donald Trump was elected, the market, including both the institutions and the retailers, they all had very high expectations. But we all know that for a regulator or for a government policy, from an idea, from expression of an instance to action plans, it takes time. And given the volatile nature of the market, it's in some extent very sentiment driven. When the regulation is not as clear as expected, or when it's not a strong support or actionable action list, the market will be a little bit disappointed in a way.
Richard?
So if you look at the long-term drivers, and if you ask anybody in the crypto industry, right, people will prefer the current administration compared to the last one, right? Last administration, you have Operation Choke Point 2.0 in progress. And then, you have regulation via enforcement, which is extremely tough for the industry to grow. And President Trump came in very pro-crypto, came in and introduced a strategic reserve for US and crypto. I think that's a very landmark issue on that front. And we're going to come, and he has appointed many smart administrators to the respective agencies. He has the Senate and the House behind him with very pro-crypto legislators. So we are very bullish on that front. So long-term drivers are strong. But crypto market, as with any asset class, is not immune to macroeconomic situations, right? So what we believe we're seeing is a tactical retreat rather than a structural decline, right? If you remember 2022, Bitcoin, after several rounds of Fed rate hikes then, also went below 20,000, but it bounced back up. So again, this is one of those situations.
With the Bitcoin reserve, Richard, was it what you expected? Because it was obviously just the seized Bitcoin rather than new purchases, which many in the market had hoped for.
Well, I think it's a good first step. I think the positivity coming out from that is much stronger, right? The messaging is, look, the largest government, the largest economy, the biggest capital market in the world is now holding Bitcoin as part of a reserve. It will cause many other governments to think through the issue, to sit up to say, hey, should we start doing allocation into crypto and Bitcoin, right? So many sovereign wealth funds are already starting to consider those issues. We were at Davos together, and Larry Finn spoke at that and said, in his conversation with all the big sovereign wealth funds, it's not a question of whether to allocate. It's whether allocating 2% or 5%, right? So we are having a lot of those important conversations now, and we are seeing, the long-term drivers are very, very strong.
And Chal, from your point of view, do you agree with what Richard's saying? It could be a catalyst for other governments to look at this as well?
Yeah, that's for sure. From what we observe from our other jurisdictions in Asia, in Europe, and even more in the emerging markets, the regulators are looking up to the U.S. regulator. And I think, in a way, there is a regulatory arbitrage amongst multiple jurisdictions.
Yeah, we'll definitely get into the regulatory question. But there is a big, I guess, question mark over whether the U.S. is expected to buy more Bitcoin. And I think David Sachs, the AI and crypto czar in the U.S., was saying that actually we're looking at a budget-neutral ways to buy more Bitcoin. Do you expect the U.S. to go on a Bitcoin buying spree? Is there a way to do that in a budget-neutral way?
I'm not an expert of the U.S. legislative system, but from what we read and from what I strongly agree with Richard shared, that the long-term driver, the momentum is building. And the institutions, the retail adoption is immense. It's very obvious.
Yeah. And sorry, Richard, go ahead.
My view is just by holding on to the seized Bitcoin for now, the US is going to be much better off in the long term. If you look at every government that sold their assets, their Bitcoin over time, Germany, the US in the past, if you look at the value of those assets now, it's so much higher. Yeah. Their budget deficit problem could go away.
Yeah. And Richard, when you look at what the US is doing in terms of crypto, the thinking about stablecoin regulation, about various other pieces of regulation, there is a view that if the US creates good rules of the road in crypto, it could be a blueprint for the rest of the world. So how significant is it that the US gets this right?
Absolutely important. So we have moved from a period where there's big regulatory uncertainty and in many sense some regulatory hostility towards the industry to one where the largest economy of the world said we want to embrace crypto, we are going to be pro-crypto. President Trump has appointed AI and crypto czar, highlighting the importance of these two fundamental industry, in these two fundamental technologies, driving all economic subsectors going forward. So it is very important. If US come out with very pro-crypto legislation, which I believe they will, it forces the rest of the world to look at that, to say, what am I doing to bring the best talent to my economy? How do I draw new foreign direct investments into the country? And how do I create new economic value? Because the US is really doing it, you can't be afford to left behind.
Yeah. And Chow, you're operating in Hong Kong, and Hong Kong's been a market that has been quite positive towards the crypto industry and try to figure out the best way to regulate exchanges and trading and all these other areas as well. Do you think what happens in the US will have a bearing on what happens in Hong Kong going forward too?
Sure. It's very obvious. Hong Kong's government has expressed their strong support of Web3 industry starting from as early as 2019, and there were follow-up policies carried out in Hong Kong at different levels. I think the U.S. recent move will be a strong booster to Hong Kong's stance and stronger support to the industry. We run regulated exchange in Hong Kong, custodian asset management in Hong Kong. From our conversations with the regulators, I think there will be more stronger support to the industry in Hong Kong from the regulators.
You mentioned regulatory arbitrage. Just unpack what you mean by that, because I think what you're talking about is the fact that the regulation is fragmented globally, right? In so many different jurisdictions.
Regulatory arbitrage might not be the accurate term, but I think to put it more neutrally is that regulators are now changing their instance to be more accepting of this new industry. And they're coming up with policies, more favorable policies, which is unique to their local strengths in terms of the talent, in terms of the technology, and the local market.
Okay. Richard, the fragmented nature.
Yeah, it's going to be a huge challenge going forward.
Especially for a global business like yours,
especially
right?
for global business. So we have moved from a period where there's somewhat regulatory uncertainty, regulatory hostility, to one where the regulators and the policymakers are now taking notice of the crypto industry and say, hey, we need to come up with proper frameworks, smart regulations that embrace the innovative aspects of it, while managing the risk aspect of crypto. But the challenges is there are so many, even within the country. Singapore is quite unique with only one regulatory agency, right? Monetary Authority of Singapore. But if you look at most countries, you have a central bank, you probably have a banking regulator, you have insurance regulator, securities regulators, commodities regulator, which is the issue that US is struggling with. Where should the primary legislation reside? Who should be the primary legislator? So if you can't even decide it at the country level, how do you bring about harmonization at a global level, right? It's going to be challenging. Today, crypto is regulated for those that regulate it. In some places, it's considered securities. Some consider it a commodity. Right. Some, in Singapore, it's a digital payment token. And in some places in Middle East, come up with dedicated framework, naming it a virtual asset regulations, right? So, and the rules and regulations are totally different. So when we do global deployment, I mean, we are the most licensed exchange globally now, with 21 different countries where we are regulated. It's extremely challenging. You have to operationalize every aspect of your business to do local deployment, to make sure it complies with the local rules.
Do you think Anywhere's got it right?
Anywhere, sorry?
Anywhere's got it right?
I think Middle East is pretty much there, coming out, because it understands the different nature and characteristics of crypto, right, which is unlike any other asset class, right? And it's very unique. It built calibrated framework which are bespoke, that understand the characteristics and risks of this area. So I think they are pretty advanced in that whole conversation and in the regulatory framing.
Chow, give us a sense from the perspective of Hong Kong and also mainland China, right? There was a moment in time mainland China was such a key driver of crypto markets way back when, and the regulators really clamped down on trading, on various activities in the crypto space. But Hong Kong decided to create a framework, given it is a big financial hub. Do you think what's happening in Hong Kong right now opens the door up for mainland Chinese regulators to perhaps re-enter the crypto market and allow mainland investors to re-enter the crypto market?
You know, Hong Kong has always been a gateway to the Chinese mainland market, starting from very early times and across multiple sectors, either in the capital market or in new tech sectors. But when it comes to crypto, I think in a long time, the Chinese leaders has always stopped crossing the river by filling the stones. They have to do it step by step. Hong Kong is always like the window. It's the research lab. For Hong Kong to start, based on the one country, two system arrangement, it might be a good way for the mainland government to better understand the industry, to better understand the regulatory schemes that that's been adopted around the globe. If everything goes well, if the regulator in mainland China see the progress in mass adoption, there is a likelihood, there is the possibility.
Richard, how do you see that equation? Do you think the mainland gets back into it?
I think there is a delicate balance on that front. Every country has their own policy consideration, and so does China, extremely China, such a big country. So on the one hand, China is looking at what's happening elsewhere in the world, including the United States, that's embracing crypto, that's generating new activities and growth on that front. And on the other hand, how do you balance that with things like capital controls in China? So I think it's going to be a very delicate balance. They're probably going to see how the experiment is going to take root in Hong Kong and how Hong Kong can blossom and prosper as a crypto hub while managing some of these other risks before they decide what's the next step.
Let's talk a bit about the growth beyond crypto enthusiasts, beyond retail as well, because you've spoken a lot, and you too, Chow, about institutional adoption and how things like the Bitcoin ETF in the US was very helpful for that, clearer rules of the road as well. But is that institutional adoption coming from more traditional institutions who perhaps, a few years ago wouldn't even touch the stuff?
Absolutely. So last year was a landmark year because last year we saw two important shifts that didn't exist before 2024, right? So firstly, with the approval of Bitcoin ETF in the United States, and then subsequently around different parts of the world, I think that gave crypto the credibility that it always deserved. So that's one thing. And then you have a lot of financial institutions that say, hey, this has become mainstream. I'm willing to support this. BlackRocks of the world went from crypto skeptic to crypto believer, and that's huge messaging, right? So we on our platform today, we have about 264 million users globally. We are the largest platform on that front. Last year, we started the year with 170 million users. We ended the year with 240 million. So we grew about 70 million new users throughout the course of last year, and that numbers continue to spike up quite quickly. Institution users spiked up last year. So we sort of doubled the number of institutions onboarding last year because a lot of trading desks that used to trade just commodities, FX, stocks and bonds are now adding crypto, and they're onboarded with the deepest and most liquid platform that we offer. And people know that's best execution, best bid-ask rate. You have family office starting to allocate. You have trust foundations, corporate treasuries, right? All looking to allocate into this sector. So we saw a lot of movement from last year, and that momentum is continuing into this year.
So even amongst more traditional institutions,
yes,
you say?
More traditional.
Right.
And I think the more people learn about crypto as a journey, the more they understand all the important utility and use cases, right? Be it stablecoin. I mean, today if you do bank remittance T+2, then you receive your money. Crypto is instantaneous. You receive your funds at a fraction of the cost of what traditional financial institutions charge. Same for payment space, etc. So there are so many important use cases, and we are going to see that coming through. Crypto trades 24/7, and I see news that Nasdaq is trying to emulate that now.
Yeah. Chow, from your point of view as well, the institutional part of the equation, are you seeing similar things to what Richard's seeing in terms of higher adoption?
Yeah, very similar. We launched two products last year. We launched the two ETFs in Hong Kong, the Bitcoin spot ETF and Ethereum spot ETF. The investor profile is very similar to what Richard just described. Also, we launched our MES regulated fund here. According to the regulator, there are some restrictions, but still, when we look at the investor profile, it's very similar. Sovereign funds, institutions, corporate, and also you read from news, some nation states are also getting in. aside from what Richard mentioned about the hurdles of crypto or blockchain adoption, I think currently all the eyes are on the Bitcoin strategic reserve and stockpile. I also would like to mention one important change is the OCC's encouragement. The OCC, the U.S. banking regulator, they encourage and they allow banks to involve with the crypto. This is a very huge step for the crypto and Web3 industry. Before that, the banks were very conservative about serving the crypto space. But after this, they feel more comfortable to deal with crypto-related clients.
And does Bitcoin remain the gold standard for institutions? They don't want to touch any other stuff, or is it Ether as well and other cryptocurrencies?
I think this is the natural learning curve for that. They started with the major and more well-known, well-studied.
In financial services, there are a lot of companies who actually have AI centers of excellence, if you will, American Express and Prudential and others, in Singapore.
Yeah, I think Minister Teo talked about Singapore as well, Singapore Airlines as well, in terms of the revolutions it's going through with AI, which is extraordinary.
Absolutely.
And Sam, OJ, could you give me a sense of the conversations that you're having? You live on an aeroplane. I mean, you're literally in charge of the rest of the world when it comes to open AI. But particularly with this region, when you're going out and talking to companies about their AI adoption, what are the things that they should be doing?
I think there's a couple things that come to mind. The first thing I'll say that's really interesting to me is, unlike the previous technology kind of platform shifts, cloud or SaaS, where you see early adopters and you see late adopters, I think that what Yiming said earlier was really interesting. We're seeing AI being adopted everywhere all at once. And whether it's, of course, you have the tech companies I mentioned Grab earlier, but you have manufacturing companies that are now taking advantage of our reasoning models. These are models that are very, very capable in thinking through hard problems. And so I have the joy of flying around the world and throughout Asia and really understanding deeply what is the core operations of a company, right? And I just see potential in so many different areas. I think about financial services, banks, and think about their KYC process, right? There's so much potential to streamline that. Think about insurance companies that have always wanted to redo, streamline, automate their insurance claims process, right? There's pharmaceutical companies are using ChatGPT to find relationships between genetic relationships to help accelerate the identification of compounds, right, and therapeutics. So across any of these businesses, there are ready-to-go use cases with just where the intelligence is today, and we think there's still much more to go.
Because you talk about having an offensive and defensive program or strategy when it comes to AI adoption. What does that mean?
I think in a way, I think it's two sides of the same coin, in that companies need to adopt AI to go on the offense, but at the same time, very likely their market competitors are also adopting at the same time. And so if you don't, right, you almost need to adopt the best defense is the best the offense is the best defense here, right? And that is what is really, really interesting about AI and this platform shift is you can't snooze, all right? Now, herein lies the opportunity for companies in Asia, I think.
Okay.
Because this is the first time where I see Asian companies potentially can take a leadership role on a global stage, right? Traditionally, you see technology adopted in Silicon Valley first, and then maybe Europe, and then it kind of makes its way over the world. Now, when I look at any industry, we talked about insurance and airlines, I get to see the whole world a little bit, and I think in any given industry, there could be a company from Asia that will be the most innovative, the most pioneering, right, and get on that global stage. So therein lies the opportunity to, if you want to go on offense, this is the time.
You're nodding, Yiming, would you agree?
Yeah, I think so. I mean, I made the point earlier. It's very empowering, I think. It's a real force multiplier for small businesses or even individuals who understand a problem statement or an issue, right? I think ultimately, from an ecosystem perspective, we want to try to connect people, give them the access to not just compute capacity or the tools that are obviously available from startups, but also a way to use those tools and apply them, right? And ultimately, experimentation is nice. Translation and revenue generation is nicer.
We talked about the ecosystem a lot, actually, when we talked about deep tech yesterday. So tell us about the ecosystem. What's there and what's lacking still for AI companies?
Well, I think there's a lot of stuff going on already, right? There's upstream research going on. I think the real opportunity is in a hyper-focus on solving a real-world problem that someone's going to pay you for. Right. I think there's very legitimate interest and energy around skilling and reskilling and training. I think that's great. I think there's experimentation, also great, but ultimately it'll be about what are people going to pay you for.
Fair enough. What would you say, OJ? In terms of the ecosystem, what do you need? What challenges are still present for you at this stage?
I think the biggest challenge right now is certainly not market demand. There's a lot of enthusiasm, but converting that enthusiasm into real life production ready use case is hard, because working with large language models it's a new paradigm. It's not software. It's not, right? You need to build guardrails. You need to think about safety. You need to think about how do you moderate, and you need to build agents. I mean, these are like foreign languages in a way, and so I would say the gap is AI fluency to know how to turn these concepts into actual business products. Mm-hmm. But this is why it's been great to work in Singapore and to partner with the EDB, because they have a lot of great programs to bring in and attract that talent. And so we're really optimistic about that, and this is an area where I think Singapore really differentiates.
They've also got a lot of great people. I mean, just to big you up a little bit, Yiming, your CV is extraordinary in terms of your background, and you spent how many years working in Silicon Valley?
6 years.
Yeah, so the level of expertise is extraordinary, isn't it? Would you, OJ, would you agree?
Absolutely. It's a pleasure collaborating with the Singapore government, because there's not a lot of education needed. We can get straight into the core of what needs to get done.
And you didn't have to pay him to say that. Isn't that extraordinary? Okay. All right. We have to leave it there. Gentlemen, thank you so much for joining us. It was really fascinating, and we're looking forward to seeing how the future develops for AI here in Singapore. Chan Yiming and OJ, thank you very much.
Thank you.
From OpenAI. Thank you. Come on
Thank you. Thank you so much for that Catalyst Spotlight. That was absolutely fantastic. Well, before we move on to our next panel, let's do a quick quiz, shall we? This is for the Super Bowl fans out there. Hands up if you watched the 2025 Super Bowl earlier on this year. Do we all enjoy the advertisements? Like, do you actually prefer the ads to the sport? I mean, I'm probably in that camp, but anyone else out there who prefers the ads to the sport? That's a bad confession on my part. But here's the thing about the ads. They cost a lot of money. The question is, what was the average cost to air a 30-second commercial during the most recent Super Bowl? Was it A, 4 million, B, 6 million, C, 8, or D, 10 million? Let's show hands for A, 4 million for 30 seconds. Anyone? No? No one for 4 million? Okay. B, 6 million? Who went for 6 million? Got a couple for 6, a few for 6 million. What about C, 8 million? Got lots of people with lots of conviction throwing up their hands for 8 million. And D, $10 million. Okay, about the equal amounts for $10 million. Well, the answer was C, $8 million for a 30-second ad for the 2025 Super Bowl. Well, of course, one of the big themes that we're talking about here at CONVERGE is the intersection of money, technology, and sports. But it's really not just technology that is disrupting the sports arena. It's also new entities that are coming in and changing the way that games are played. None more so than Live Golf. Let's now put our hands together and please join me in welcoming to the stage Scott O'Neill, the CEO of Live Golf, along with, once again, coming back to us, CNBC's David Faber. Let's give them a big warm welcome.
All right. We're getting close to wrapping up. You're one of the big finales here. You ready?
Yeah. Whoa. Whoa. Hello, everyone. Okay.
All right, good.
I'm thrilled to be here, David.
And we're thrilled to have you. Thrilled to have you. Talk a little golf here. I do want to start off. We're not going to dwell on this, but we got to get an update. You know where I'm going.
I have no idea.
Of course
I don't know.
Jay Monahan, the counterpart, or the guy who runs the PGA Tour, was a guest yesterday on CNBC.
Yes,
and
I didn't see the interview, but he's a good friend and a wonderful guy.
He was asked about where things stand with Live Golf and the PGA Tour, and he said we're continuing to focus on two things, but number one is making certain we're doing everything we can to drive to reunification. Can you tell us anything about that drive to reunification? Is it getting closer?
Well, I can tell you that the powers that be in golf all want the same thing. And to some extent, we've had a fractured ecosystem in golf over the last few years. And I think what we all want is what's best for the game of golf, to grow the game of golf. And my view as the CEO of Live is that the way to do that is to take some of the great superstars of golf to the four corners of the world. And I think that there's a place for everyone that wants to live in that mission. To the extent that there isn't a deal, His Excellency, Yasser Al-Rumayyan, who's the chairman of PIF, is leading a negotiation, and anyone that knows him or has met him, I know you know him and have met him.
I do, yes.
Then you have a pretty good sense that the game of golf is in really good hands, and Live Golf is in really good hands.
Well, I will say, when it comes to deals, because I've followed them for much of my career, when they go on as long as this potential talks have, they typically don't end in a deal. I mean, it was June of 2023 that I sat down with Yasser, your boss, Yasser Al-Rumayyan, the chairman of Live and the PIF, and Monahan, and here we are. Do you still think there really is a shot that you're going to somehow get to this, and these are Jay's word, reunification?
I hate to play the new guy card, but 60 days into my job, I feel like there are a lot of good things happening out there. I think there's an opportunity for us to come together. I guess it comes down to how you define reunification. If there are opportunities for players to play across different platforms, I think that's really wonderful. I think the PGA Tour has done some amazing things. I think they've got a great center in the continental U.S., and I believe that the world needs to see more golf and more great golfers, and I hope we can be that platform.
All right, you've had a long career in sports and entertainment, most recently actually running Merlin, a company that owns a lot of different amusement parks around the world, Legoland, things of that nature. But before that, the Knicks, one of my home teams, Rangers, Devils, Harrison Blitzer, obviously the Sixers. So why make the move to Live, as you said, just a couple of months ago, 60 days into the job, but why do it at all?
Well, first off, I've been in the sports business almost 30 years, and I know what you're thinking. You look so young. How could it be?
You actually do look very young.
No.
Want me to keep going? Very athletic looking.
Charming. No, I really honestly think the opportunity to run a sports league is very rare. So that's one. Two is, after meeting His Excellency, I was blown away by his vision, his EQ, his IQ, and his humility. And I think that's such a rare combination. And then when you look at our platform of superstars, whether it be Dustin Johnson or Brooks Koepka, Bryson DeChambeau, John Rahm, some of the great stars of the game, taking them to the world with a real mission to grow the game of golf, kind of gets me popping out of bed in the morning. So this was the easiest career decision I've ever made.
It is. It was that easy.
Yeah.
So what's on your list of things? When you took the job day one, not that long ago, and you said, all right, I got this number one priority, what would it be?
Yeah, one is just to engage in the golf community and be part of the community. The golf community is relatively small, and so I spent a lot of my time going to those who, kind of the golf royalty, if you will, So the U.S. Open, the RNA, PGA of America, Augusta, and they all kind of welcomed Liv and me with open arms, which is just a wonderful, wonderful way for me to learn and take into business. Secondly was to kind of reposition us from golf but ladder to long live golf. So what's the essence of who we are and what we're about? Try to drive home the narrative that we're about growing the game around the world. That's pretty special opportunity. So I talked a lot about that. And then there's like the basics, the meat and potatoes of the business of any sports league is television distribution. And we were fortunate enough in the last 60 days or so to land Fox,
a Fox
deal,
deal,
in the
right?
U.S. and ITV in the U.K. And we're now in 800 million homes. You wake up and you think, okay, that's a heck of a start. The second kind of lifeblood of a sports league is sponsors. And we've had quite a bit of success in the last 60 days. And knock on wood, that'll continue. And so I think, mostly listening and learning, walking into the golf establishment to connect and make sure, we understand how it all works and how we can be part of the family and align on a mission.
How important is that Fox Sports deal to you guys?
Oh, it's pretty special and important. We are different, though. We're a global sports league. So our first 4 events, we were in Riyadh, Saudi Arabia. Then we went over to Adelaide, Australia. And then most recently in Hong Kong. And now we're in Singapore. And so for those of you who've spent time in New York, you might know that some of our events are played at 3 in the morning. And so it might not register on traditional rating scales as you might register a U.S. sports league. And we're quite okay with that, especially now that we're starting to get more and more distribution around the world. We're getting quite a few viewers in the time zones we are. And so I think over time, this notion of being the F1 of golf is one I like a lot.
Yeah, is that you liken yourself to F1 in what ways? And
well, it's other than Live, it's the only truly global sports league. They have teams and we have
teams. Yeah,
they have teams and we have teams. It's very different from golf to have a team sport. You're like definitely playing in a premium market like F1 has. Our hospitality experience is clearly like the paddock or a level better in terms of opportunity. Walking the pit row is very akin to walking our driving range before an event. Like it's as close a parallel as you can find. But remember, we're 3 years in, and I bet they're 80.
They are. Obviously, a lot of reinvention in the last, let's call it 5 to 10 for
yes.
F1 as well, or F1. But you're not reinventing the game. I mean, that remains the same. 54 holes, I guess, instead of 72. But
well, there are some things we're changing quite a bit. We mentioned the teams. We also have a shotgun start, which for those who aren't golf fans, that means that everybody starts to play at the same time. And why that matters, at least from our players' perspective, is one, pace of play has been an issue with golf for 20 years, 30 years, 40 years. And our events last 4 hours, and in Hong Kong, they were 4 hours and 17 minutes for a round, which was fantastic. The second thing it does, probably more importantly, especially when you get into some of the different climates that we play in, is it normalizes the competition. So if you were to play in wind and rain and you happen to get a morning tee time, and it was beautiful and sunny, you're at a disadvantage to those who get an afternoon tee time. So we really, truly believe that shotgun start is a transformational shift and move for golf to equalize the competition and also to move the pace of play along. I'd just say one more thing.
Sure.
The golf is who we are, but it's really about the festival around golf that makes us different. So if you came to a live event, and those of you in town, I'd love to invite you over. We're at Sentosa Golf Club. You can be my guests. My good colleagues right there are going to raise their hands. Let them know. Flag one of those 4 over there. They're happy to invite you. You can be in my suite. It's a wonderful experience. But what you'd find is, you won't find a lot of signs that say, shh. It's quite the opposite. We have a DJ playing during the event, a DJ. We have music throughout. Our players on holes 1 and 10 actually have walk-up songs like you might find in baseball. It's fun. You can bring your family. You can bring a date. You can bring friends. It's the kind of experience that's a festival. And while that's not the case, aside from the music, we also have concerts after the events, which are a lot of fun. In Miami, we have actually a music festival, an art festival, and a food festival going on. And so it's something for everyone. And how that manifests itself is that 30% of our attendees, believe it or not, have never been to a golf event before. Our average attendee is 15 years younger than a competitive golf tournament age set might be. And so in terms of reaching a new audience, introducing more people to the game, I think we're a pretty interesting study.
All right, but still I would assume players are a very important draw. You mentioned a couple of your stars. Obviously, you paid a lot for them. I mean, how do you view them, and how do you view acquiring potentially new superstars to join the tour as well?
Well, we have quite a few stars in this game right now. I mean, you know, it'd be hard to argue with John Rahm and Waco Neiman and Bryson DeChambeau and Brooks Koepka aren't some of the best players on the planet right now.
They are, but aren't they? I mean, they're free agents in a way. You know, they sign deals, I guess, but those deals then expire. I think Brooks Koepka I asked about something the other day, and he sort of indicated, I don't know what I'm going to do when this deal runs out, whether I'll stay or whether I won't.
Yeah, I do love Brooks. He's a heck of a player. And I think what he said was, hey, you know, I've got a couple years left on this deal. I'm really enjoying it here. I don't know what the future holds, which is it's probably the right answer for all of us.
Yeah, of course.
You know? And I feel like...
But how do you think about it? I mean, how important will it be to keep these guys, let alone sign new guys?
I spend quite a bit of time with them. I have a lot of time for them as athletes. And what's a little different about us than maybe other sports leagues is these are my business partners. So they own percentages of their teams. They're equity holders in our league through our teams. And so it's a bit different. So I like that element of it. I think having star power is critically important. I also think that, you know, the young talent, which won't register to casual golf fans in this league, is absolutely outstanding. And so I think you'll see a combination of infusion of young talent, extending some deals that have not been announced yet, and then continuing to search and hunt to make sure that we have the best players in the world. What's really interesting, which I love, is that in many ways, some of our teams represent regions. So we have Ripper GC as an Aussie team. It's led by Cam Smith, but it's 4 Aussies on the team. And that gives, like when we go play in Australia, there's so much nationalist pride there. Similar to Sergio Garcia, he's got mostly a Spanish team. Right. When we land and play in Valderrama, it lights the market on fire. And I do like that. So as we think about new markets, we're in Mexico City for the first time, and we have a couple great Mexican players in our league, Carlos Ortiz and Abe Answer. I love that notion. We have extraordinary Korean players. We're going to Korea for the first time this year, which is a wonderful golf market. We just announced an international series event in Japan. And so I think the key golf markets, when you think about U.S., Canada, Sweden, UK, Japan, Korea, China, Australia, like I think you'll see us spend more time in those markets.
Yeah. How many tournaments do you have now?
We have 14 live events, and then we have another 10 what we call international series events, which allow more opportunities to play where you can kind of earn into live.
You have any expectation you're going to expand that, or is that a good number?
It's really interesting. Golfers, like the best golfers in the world, typically play between 22 and 26 events a year. So if you have 14 live events and the 4 majors, that's 18. Then you have like another 4 where they're either going to play our international events in their home markets or play a couple opens. So we think that's about the right market. It might go up or down here or there, but I like the number.
Yeah, I mean, you've mentioned a number of innovations you've made in terms of sort of advancing the sport. I'm curious, the team concept, can you trade players in season?
You can.
Does that actually happen?
Yeah, we have traded in season before. It's not common, but sometimes it's just like you're looking for a different spark, or there's a personality conflict change, and there's an opportunity to do something else. We might see that. I'm in and around some talks. You might see that this year as well. Look, trades are good for sports. I mean, that goes back to my NFL, NBA, and NHL days. Free agency is good, which we have, as well as trades are very good for the game.
And what about, I mean, we talked about F1, obviously. The sponsors of the teams are very important. So what's the relationship there for you guys, and what's the opportunity, perhaps?
Well, I think you'll see a day in a not-so-distant future that we sell equity in our teams.
You do?
Yes. I think that's going to be a big driver over the next 5 years to actually demonstrate the value that we've created in this business. So I think you'll see that relatively shortly.
So the teams themselves are a participant in the underlying revenue, or would be? I mean, Or what is the
way the team works
going to produce then?
Yeah, the way the team works, they can drive revenue in 3 ways. So one is performance. So we have a prize pool, and a percentage of that prize pool gets allocated to the top 3 teams of every event, of every tournament, okay? So that's one revenue stream. The second one is really simple. It's like every sports league in the world has sponsorship as a driver. And you've seen this year, we just announced Callaway, for example, with John Rahm and his Legion 13 team. It's a big brand, you know. We have another announcement going out today with Asia Air, with our Ripper GC. So brands are coming into our teams at a pretty good clip and rate. So that's another way. And the third one is merchandise, which what I've really been impressed with. Now, we have some traditional, like Grayson, which is a great brand, partners with a couple of our teams. And we have a couple other great brands coming in. But we have some entrepreneurs running these teams that want to build their own brands from scratch, leveraging the players, which I just absolutely love. And so they have a canvas and a platform to go build and grow.
Yeah. But unlike the NBA or the NFL, they're not participating in the revenue from sports.
That's right.
From the
Not yet, no.
Not yet. So do you think that's possible?
I think that when you're the steward of a sports league that's 3 years old, you don't really ever say never, never, never to anything. You know, we're actually trying to build a special place. For one, it's like the greatest place in the world to work and play, whether that be players or caddies or executives or people in the golf industry that want to come work and play. We want this to be the best place in the world. And the second thing we want to make sure we do is build a real business. And to do that, you know, at 3 years in, a small business, we have to be very nimble. Yeah. You know, we have to have our eye on it's almost like, think of a golfer, right? I get up on the tee box. If you're playing with me, you're likely going to be in the trees or in the rough, which is where I hit the ball. And then as long as I just keep focusing on the pin on 18, everything will be fine. But it doesn't mean I don't zigzag on my way there, because I do.
Well, where are we in terms of the business, in terms of returning actual profits or getting to profitability for your owners?
Yeah, now you remember, it's like I'm dangerous because I've spent a lot of time in professional sports. And what I've seen over time is they're not often measured by cash flow. They're often measured by value creation.
That is true.
And so a lot of the focus that we have is like, what is the brand of Live? Like, how can we grow the brand of Live? You know, I've seen my dear friend Adam Silver, what he's done with Brand NBA. I mean, there's nobody like him. And so how that translates to profitability over time, of course, there is a connection. But we don't feel short-term pressure, but we have a lot of urgency to drive this business. And so far, again, I'm 60 days in, I've been blown away by the progress.
You have? Why?
Because I expected it to be harder. I expected more resistance. I expected more pushback. And all I'm finding is open doors and welcome handshakes. And this is a platform that is so different. If you want to go to the world through sports, it's only F1 or us. That's it. And so we have a really, really interesting platform, and that seems to be resonating.
And your demographic, I would assume, is different than the PGA Tour as well in terms of the. Is that fair to say?
Just younger.
It is
younger. It's younger. Right? We have the same disposable income numbers, but a much younger, affluent set.
How real was the uptick in sort of interest in the sport, post-COVID?
Yeah, pretty amazing. I mean, but just to tell you what's happening in APAC, just in 24, it was up over 25% in terms of participation over 23. So it hasn't stopped.
Right. It's funny, just listening to you, Scott, all the things that are coming your way and obviously the excitement of trying to build something. Why would you even bother with the PGA Tour?
Anything that's good for the game of golf, we will pursue with like an ardent passion. If it's great for the game of golf that we come together, we'll find a way in some way at some time to do something really fun.
Yeah? Yeah. Social issues sometimes figure into big deals. Who's going to run the company or something along those lines? Have you thought through that at all? Would you want to run a combination if that were to occur?
I'm so driven and focused on what we're doing now that if a deal comes, we'll have those conversations at that point. But I will tell you, the key players in golf who I speak to relatively regularly, we all are saying the same thing. Let's grow the game of golf. Let's do what's in the best interest of golf, and everything else will take care of itself. And I think when you have the leaders of a sport all deciding to put Humpty Dumpty back together again, good things will happen, and it'll happen fast. And I think that's what we're seeing.
All right. How's your own golf game, by the way?
Not very good.
No?
No. But I run a golf league, and that's not inspiring. but I'm working on it.
It may be inspiring, actually. You want the boss to be focused on work, not necessarily out.
That's what the players say, but I do get to the range. I feel like, I know we're running out of time, but I will tell you this. You have to ask yourself, like, does the world need golf? And I would say yes. It's like you learn humility, and that's good for some of us, you know, maybe more for others. You learn consistency, like the power of consistency, like how much you have to practice to be good. You learn resilience, especially if you're me, and you put the ball right, and you put the ball left, and you're in the sand, and you're in the water. And I think those are traits that we need in the world. And so if we can have more people playing golf, I think the world will be a better place, and I think that's a good place to be in.
All right, that's a great place to end it as well. Scott, thank you so much.
Thank you, David. I appreciate the time. And thank you to CNBC.
Thank you so much to CNBC's David Faber, and also thank you very much to Scott O'Neill. Wasn't his passion for the game palpable? It was absolutely infectious. I don't know whether anyone noticed as well, but you know how yesterday a number of our guests up on stage and even a number of our people in the audience had those really bright, happy socks, bringing some sunshine into the room. Did anyone notice that Scott had socks that actually said happy socks? And this gentleman, once again, thank you. You've brought your happy socks as well. There you go. Well, let's move along and stay with the theme of sports, because I would like to now welcome to the stage His Royal Highness Prince Faisal bin Bandar Al-Saud, the chairman of the Saudi Esports Federation, who's joining us on stage with CNBC's Sarah Eisen to talk about Saudi Arabia's bid to enhance the role that esports plays in the country. So welcome, and thank you very much for joining us.
Thank you. Thank you. Woo. All right. It's loud. This is a fun one because I think you must have one of the most fun jobs, right?
Well, I always tell people the best part about my job is when my wife comes home and says, "Why are you still playing?" I get to say, "No, honey, I'm working."
Yeah, exactly. Is that why how you became the chair of the federation? Because you're a gamer yourself?
I'm sure it didn't
You're
hurt.
also part of the royal family, of course.
It's one of the first conversations I had with the president of the General Sports Authority at the time, which is now the Ministry of Sports, was, you play games, right? I said, yes. He goes, well, we're creating an esports federation. And I told him, I said, how can I help? He said, well, you're president. I'm like, wait, time out. What does that mean? So we sat down, we discussed, what is a federation? What does it do? What am I doing under the Olympic Committee? What's my job? And I have not regretted it a single day since.
So tell us, what is your job?
So I actually am a part of 5 different things in Saudi. So the Esports Federation is responsible for the professional players, the professional leagues, and their participations internationally, supporting them, making sure they can do what they need to do. I'm also part of the National Strategy for Gaming and Esports, which is the overlying and overarching part of Vision 2030 to build a global hub for gaming and esports in Saudi. We've also got Savvy Games Group, which is a PIF company that I'm vice chairman of. His Highness the Crown Prince is chairman of. And we've got a fund with the National Development Fund, which I'm president of for gaming and esports.
So it's really important for the kingdom.
Yes.
Why? Why esports? How did that come to be?
Well, 67% of our population consider themselves to be gamers. 70% of our population are under the age of 35, the prime age for gamers. So when you talk about diversifying the economy, what are the main areas for diversification of the economy? You've got tourism, you've got entertainment, you've got sports. And this is one area that covers all 3 of those. We just had our major flagship event, the Esports World Cup, last summer, July and August. In 2 months, in the first edition, we had 2.6 million people visit our location. We had 500 million people participate online, and over 200 million hours watched of our content. And our second edition is going to happen this summer. And you have the lead up to the Olympic Esports Games. You have the participation of youth, talking about schools and universities. I mean, there's just so much around building this as an industry. And really, esports for us is a gateway to building the greater gaming industry, which is what we're looking at over the long term. So,
and it's all part of the bigger effort to diversify the economy, Vision 2030, right?
I mean, one of our KPIs under the strategy for gaming and esports is a contribution to the GDP by 2030 of 50 billion Saudi riyals. which will be roughly 1% of the GDP by 2030, which keeps me up late at night, I must admit.
Sure, because it's a pretty ambitious goal. Are you taking market share from places like, I don't know, Korea, it's very big, some of the other Southeast Asian countries, or are you just growing the sport?
It's growth. I mean, gaming in general has been around for a long time, but it is still a young industry. And esports in particular is a very young industry. And so what we're looking at doing is how can we be additive to this industry rather than taking something away? And the efforts that we have are actually strengthening the industries in other places. Our collaborations, the things we're working together. I mean, I was in Japan recently talking to a number of companies on how we can help them not take business away and bring it to Saudi, but how can we help them grow their business in Saudi through localization? You have the numbers across the region are similar to what is in Saudi, whether it's youth, high internet penetration, high, what's the right word?
Engagement.
Engagement. And it's roughly, I think the last numbers were over 250 million gamers in the MENA region, which is a bigger market than the US, than Europe. However, they all speak one unified language. So if we can help someone have a regional headquarters in Saudi, grow their business, help them localize into the Arabic language, we help you access not Saudi, not the 30 million people in Saudi, but the 500 million people in the MENA region and the 250 million gamers that are only growing in our region.
I mean, you mentioned the World Cup, which just took place last year, the first one.
Yes.
Right, I saw the Crown Prince awarded the winners. They were Saudi team, right?
Yes, Team Falcon.
Team Falcon. So you must have been proud.
Very
I saw
proud.
that the total prize money was $60 million. So this is no joke.
Yes, so it was 22 different tournaments over 21 different games. We did PUBG twice because there's PUBG Mobile and PUBG PC. And then we added on top of that, our innovation was a club championship, which is what Falcons won. And it was as a club, so Falcons, Team Liquid, there's teams from all around the world. If you participated in multiple tournaments and got good scores and did well, you could win an extra prize pool. So Falcons won an extra $7 million over the 3 tournaments that they won and the multiple tournaments they placed in. And alongside that, we have an innovative club enablement program. Well, what we're saying is to clubs, right now an esports club it's hard to become sustainable as an esports club. And so what we're doing is we're saying, we are not going to invest in you, but we will support you on the condition that you take part in the Esports World Cup. We will help you build your teams so you can take part in multiple tournaments. And that's part of your entry. Once you've become a part of the Esports World Cup, we'll help you grow your team. But that's a support program, not an investment program.
So what's the difference between the Esports World Cup and the Esports Olympics, which you're also gearing up for?
Well, the Esports World Cup are club teams.
Okay.
Esports Olympics will be national teams, which is a whole nother level.
So what is that that's going to be in 2027?
2027.
Which is a little later than people thought.
There was a thought process that it could be in 2025, and I was a big advocate for delaying that because the system that's there just isn't ready for it. If you're asking me, could we put on an event, an Olympic-level event in 2025, I absolutely could. What I cannot ensure in 2025 is, will the publishers be ready to do a national team event in their game? Will the National Olympic Committees be ready to qualify players for their games? Are the national federations ready to do what they need to do to get these players to the game as part of that ecosystem? And that I could not guarantee. And to do this when all of those pieces aren't ready means the event itself, while it would be as an event Olympic level, on the athlete and community level, it wouldn't be that level, and that would be a shame. The first Olympic Games that we do that has esports involved, we want to make sure that it is up to the standard of what an Olympic Games does, because these young men and women deserve to be at that level as athletes. The amount of time they spend, the amount of preparation they spend, they deserve those medals, and they deserve the time and investment taken to put into them before we do the event.
I mean, and you attracted millions of people, you said, for World Cup. I mean, probably even bigger for the Olympics. What are you aiming for?
We would hope so, but the infrastructure for national team games in esports isn't quite as strong as it is in other sports. You've had the Asian Games and the European Games and the Pan American Games just started really this year or last year to do something on a big, large scale. But the infrastructure from the National Olympic Committees to the fan bases it's more committed to the club teams and the players than the national teams. So building that ecosystem before we get to the Olympic Games is very important.
And you expect lots of tourists to come in and just watch people play video games?
Oh, yeah. I mean, it's watching people play their sport. The same people they would fly around the world to watch football matches. We expect them to fly in to watch. I mean, again, we had over 2.6 million people come in to watch the Esports World Cup and its first edition. I mean, I went to the League of Legends finals in the O2 Arena. It was maxed out, I think 30,000 people. I went to the KPL finals in Beijing, and that was full to the brim in the cold and rain. And yet people were sitting there to watch a live match.
Die-hard
gamers.
I mean,
it's amazing to see.
You mentioned demographics, and that's a big reason why you guys are so bullish and so invested here. One of the things, I was in Riyadh last fall, and one of the things that was amazing to me as part of the story and the transformation is what has happened for women in the economy, and the fact that they are entering the labor force, they are owning businesses, how it's all happened very rapidly under the Crown Prince. I do wonder what the demographics breakdown looks like on gender for esports, because it does feel very male-heavy.
Well, it is, internationally speaking, a very male-dominated sport. So community-wise, pretty much globally, it's almost 50-50. In Saudi, the community is 48% female, 52% male. However, in the professional gaming, the esports, right now we are 20% female penetration as professional gamers, which sounds like a little, until you realize the global average is 5%. The next closest after us is one of the Nordics, it's 12%. So we are the highest rate of penetration as professional women gamers in the world. And the reason for that is not because of me. It's because of our young women who have taken a leadership role. We had in 2020, Najd Al-Fahad won the Collegiate FIFA World Championship. And she was the first face we had where we said, look, this is a real career path. And through her efforts, she got signed by Al-Hilal to play in our professional pro league, which is one of the professional soccer teams, or football teams. And she was the first woman to have a professional contract by one of our professional football teams. And then soon after that, we had Team Falcons, had Falcons Vega, which is a Valorant team, who did so well in our region. They actually left our region and are playing in Europe now because they needed better competition, which has seen the growth of other teams. And those two have really set the stage for this as a career path. And then if you look at on an event and an industry-wide, we did an event, our first event as esports. In 2018, we had 1,500 players participate, men and women. And it was the first official sporting event in Saudi that had men and women participating against each other, had women participating as ushers, as referees, as management. And so I got the chance to be that first step. And we've taken that opportunity to showcase that esports and gaming is a real career path in Saudi. And it is a real career path with no baggage for women as well. And that's one of the things they enjoy the most is it didn't have that emotional baggage that other industries had as being male-dominated. Whereas what we started in Saudi, they had a platform for them from the very beginning. And so they've been a part of it. I mean, as an industry, we are almost 50-50, if not a little bit more leaning towards women industry-wide. But in the esports, we still have a lot of growth.
I mean, that's amazing. You know, another piece of this puzzle is the private sector. And certainly what you've done through PIF, the Sovereign Wealth Fund, and the investments you've made in gaming companies. How does that work? Because you're, as you mentioned, you are on the board as well.
So we have, Savvy is a wholly owned PIF subsidiary, which is doing investment all over the world. And we have some amazing companies in our portfolio, including a large investment in VSPO, which I'm very proud of. Danny will be speaking a little bit later. And they're doing some amazing things, and I know she's got an amazing story to tell later. We just finalized last year, just over a year ago, a purchase of Scopely, who just finalized the purchase last night of Pokemon Go, which I'm very excited for.
It was a more than $3 billion deal.
Yes. And there's a few Pokemon in there included for me as well. So I have to do something for my son.
That was nice of you.
But, I mean, there's so much going on in that aspect. But that really is a global gaming company that is based in Saudi. Alongside that, we've also created a fund under the National Development Fund focused on local growth. That's 1.8 billion Saudi Riyal fund. Roughly $600 million Riyals of that has been deployed so far. And the focus of that is GDP growth. And that's people who are homegrown, but also people who are coming to invest in Saudi or coming to have a base in Saudi. And we do debt, equity, and grants. And one of the things that we did with that, we did a lot of studies on what was happening globally. And one of the places that really caught our attention was Finland. Finland had a tech investment fund, a government run, and they saw some investment in gaming. But when they did a spin-off of that, that was a dedicated gaming and esports fund, they saw a 400% growth in private sector involvement and in industry growth. And so we saw that, we had funds that had gaming as a part of what they do in Saudi, but there was nothing dedicated to it. And we've seen it since we started the fund in 2022. We went from one game development company to now having almost 30. We had 2 esports teams. We now have over 100 esports teams, over 1,000 athletes because of that. We had, very little investment in the industry. I mean, I don't know what the numbers were in 2018 when we first started. In 2023, after the fund, the revenues from gaming in our region, in Saudi in particular, were just over $1.3 billion. And the anticipated revenues from gaming by 2030 are going to be over $6 billion because of the growth we've seen over the last few years. So what we've seen on the ground because of that has been almost miraculous.
I was going to say, how has it changed the perception of brand Saudi Arabia? I imagine for young people, making it a gaming hub is a big deal.
Well, it's our stated goal in the national strategy for gaming and esports is to become a global hub for gaming and esports. And I always get asked, what exactly does that mean? And for me, it's a very simple description. When you think about gaming or esports, there are certain places that come to the top of your mind. You think of Japan, South Korea, California. We want Saudi to be a natural part of that conversation, where when you think about gaming and esports, when you think about a career in gaming and esports, when you think about participating in an event in gaming and esports, you think about Saudi just as much as you think about any of those other places. And that means creating an atmosphere where people understand that it's safe, it's inclusive, it's a career path, a valid career path there. It is a place where you want to spend your time and you want to come and visit, and not that you're incentivized to come and visit. And we're starting to get there. I mean, the growth that we've seen in tourism, the growth we've seen in sports, the growth we've seen in the infrastructure, all of that added on to what we're doing in esports and the events, and having people just come and see for themselves on the ground. I mean, I can talk about the transformation and what I've seen over the last 8 years in Saudi till I'm blue in the face. But I can promise you, until you see it for yourself, it won't make sense.
Agree.
And what you see on the ground will be 100 times better than anything I could describe.
I agree with that. I mean, so what does success look like for you beyond just growing the revenue pie and the tourists and the gamers and the companies in the portfolio?
So that depends on what hat I'm wearing. I would say at its core, everything that we're doing this is an industry that changes on a daily basis. Not a weekly, not a monthly, not a yearly basis. And so the key to everything we're doing is keeping the community and the players at the center. Because they're the ones at the end of the day that are playing the games. They're the ones that are spending the money in the games. They're the ones that the developers want to play their games. They're the ones that the people want to watch their games. So if you can keep them at the center of everything you're doing, you know you're going to be ahead of the curve rather than following. So success for me is, are we doing enough to make sure that people are coming, watching, participating, and enjoying? And if they're doing that, then we know we're doing the right things. And we know we're making the right investments. We know we're doing the right events. We know we're bringing in the right partners. And the moment that starts to go down, we know we need to adjust course. And as long as you can keep one ear to the ground, one finger on the pulse there, then you know you're staying ahead of things. So success for me is, the line, I know someone else probably said it, but for me it's from, I can't remember the name of the movie now, but it's, if you build it, they will come.
Yeah, Field of Dreams.
Field of Dreams, that's it. If we are building it. And if people come, then we know we're doing the right thing. And if not, then we know we need to pivot. But we have to base it around the community and the players.
So what's your game? What do you play?
Yes. I play a lot of games. If you're talking about an esport, I know Ray's here somewhere. I play Mobile Legends. I wouldn't call myself a professional, but I'm quite close. I'm mythic level in that. But most of what I play is PlayStation, console games, Xbox, the story-style games. And one of the things that I get very excited about, what we're building in Saudi, when we talk about gaming, is game development. Because there is no better way to export your culture than gaming. You talk about mediums, any medium that you consume. When you watch TV or movies, you're watching someone do something. When you read a book, you're reading about someone who has done something. But only when you're playing a game are you doing it yourself. No one plays a game and says, oh, the character beat the game, or the character beat the boss. It's like, no, I beat the boss, or I can't do this, or I finished this. And so I tell people, and my wife hates me telling this story. One of my favorite games is a game called Assassin's Creed. And one of these games was based in Italy, in Renaissance Italy.
Yeah.
And we were on a holiday in Rome, walking around, and she asked me, what is this building? I said, oh, this is this building, and so lived here. And she goes, how did you know? I said, well, I had to climb that building to assassinate someone over there. She goes, shh, don't say that out loud. But the fact of the matter is, I got to walk around Renaissance Italy, see these buildings at the height of their grandeur, and realize what was there. I understood Chinese history and the unification of China before I ever visited China, because I played as each one of those generals in each one of those battles. And to give our young men and women a chance to finally tell our story through our point of view, through our eyes, and have people to walk a mile in our shoes, I think is something that is invaluable.
Is that already happening?
It is. So we've got now...
What's the best game to learn about Saudi Arabia?
Check back with me next year. A lot of them are in development now. There's 2 or 3 that should be coming out this year. And I think within the next 5 years, we will have a AAA game that will showcase who we are on the world stage.
I mean, it really is so interesting, because the United States, we don't have anything like this. Is there anyone else that's doing what you're doing?
I hope not. Well, I would say from a top-down level, I don't think there is anyone out there that has a national strategy that has the support from the government like we have. From a bottom-up level, I think there's a lot of people that are doing similar things. And the key to it is, how can we collaborate to all come up together? Because this is an industry right now that is young enough that anyone doing well is good for everyone. So, I mean, that's the biggest thing I would want to leave with, is anyone who is in this industry that wants to do more, we are willing to collaborate and our doors are open. And it doesn't have to be in Saudi. We're willing to collaborate across, back and forth. And really, growth anywhere is good for everyone. I was talking to someone a little bit earlier, and I was saying one of my favorite quotes ever is it's from Roosevelt, if I'm not mistaken. And he said, in any moment of decision, the best thing you can do is the right thing. The next best thing you can do is the wrong thing. And the worst thing you can do is nothing. And I believe in that wholeheartedly, and that we need to keep doing something. And the more you're doing, even if you're making mistakes and doing the wrong thing, you're learning from it, you're doing better, you're getting better the next time. But if we don't keep doing something, then we're falling behind.
I mean, that transcends well beyond esports. So my kids are allowed to play on the weekends. They play Madden. What's the next thing they should go for? If they want to train to become professional.
No, I think with the Olympic esports games, there's going to be three categories. There's going to be the traditional esports, so the MOBAs, things like Mobile Legends, League of Legends, Dota 2, the fighting games, Street Fighter, Tekken, those. You're going to have simulated sports, which are things like Madden, EAFC, eFootball, and things like that, NBA 2K. And you're also going to have virtual sports, where it's the cycling, the rowing, and things of that sort. So I would say just make sure they keep gaming. It's good for your brain in reasonable amounts.
Is it? Okay.
It's good for your eyes, as long as you don't overdo it. But I would encourage them to keep doing it, but make it a part of an active lifestyle. I mean, I tell my son he's allowed to play for 1 hour if he goes outside for 1 hour. And the more time he spends outside, the more gaming time he gets. So as long as it's a part of a healthy lifestyle, good sleep, good physical health, active lifestyle, gaming can be very healthy and very good.
They're going to love this. I'm going to go home and tell them. Thank you so much, Your Royal
pleasure.
Highness, for taking the time.
Thank you very much, and sorry for going over.
It was very interesting.
Thank you so much to CNBC Sarah Eisen and His Royal Highness. Thank you. And Sarah, do not let your kids know that it's healthy and good for their brain, because they're going to throw it right back at you and
I
say,
know, but he's the head.
I've got to do another 5 hours because it's healthy and good for my brain.
As long as he goes outside for 5 hours.
Exactly.
We're okay.
Anyway, thank you very much. It was a really great conversation. I mean, again, so much passion that you could hear up here on the stage. I learned some more facts. I always learn facts from all of our guests, but a couple that I plucked out. Number one, that esports and gaming are real career paths in Saudi Arabia. And number two, and this one I think might be surprising to some people, but it's really fantastic to hear, and that is that they have the highest rate of penetration of professional women gamers. So there we go. We learn something new every single day. So that was really great insight, of course, into Saudi Arabia's diversification strategy under their Vision 3030. Oh, 3030, my goodness, that's a long way away, isn't it? 2030, it's been a long day. Let's say 2030. But sports content is also undergoing a lot of changes. Naturally, we've got things like streaming, we've got social media, all of that is disrupting the space. So we'd love to know where the opportunities are when it comes to sports content. Let's bring up onto the stage once again CNBC's chief media and technology correspondent, Julia Boston, all the way from LA. Along with her guests, we have Hua Fung Te, co-founder and group president of One, and Deborah May, partner and co-founder at Rain Group. And of course, as I mentioned, hosting today's panel is Julia Boston. Give them a big warm welcome onto the stage and a particularly loud applause for Hua Fung Te.
Thank you so much, Mandy. Such a fascinating afternoon talking about sports in the future. And I'm really excited to have these two panelists who've known each other for years and are really at the forefront of the trends that are driving what sports is going to look like, not just in the Asia region, but beyond in the future. So Hua Fung Te, co-founder and group president of Group One Holdings, and Deborah May, partner and co-founder of Rain Group. I want to start by sort of means of introduction, explaining to us and those in the audience who may be less familiar with your businesses what it is that you're focused on right now. And why don't you start out? Because to those who are fans of MMA, they're going to know everything about what you're doing, but for maybe people outside the region are less familiar.
Wonderful. Hi, everyone. My name is Hua Feng. I'm the co-founder and group president of One Championship. So One Championship is the world's largest martial arts organization. We're also Asia's largest sports league in terms of viewership. We are in the business of combat sport, so very much like our counterparts in the West, the UFC, that some of you are live closer to. We do 60 live shows across the world every year. Most of those shows are in Asia today. Some of them are in the Middle East and the US. And we also broadcast in 190 countries around the world. In the US, we're on Amazon Prime Video. In the UK, we're on Sky Sports. Closer to home in China, for instance, we're on digital platforms, Douyin and Kuaishou. So yeah, that's the business in a nutshell.
And it's been growing dramatically. Before we get to you, Deborah, just think it's notable that you were working for TPG and you saw this opportunity in this business that was very nascent at the time. What was it that you identified that you wanted to be able to build and grow?
Yeah, so look, I've always loved sports. I grew up playing a lot of sports. My two sports growing up were basketball. That's how I got this injury this weekend. And my other sport was taekwondo, fighting, right, which is my business now. And the first time, actually, that I ended up dealing with sports, not as a hobby, but more as a business, was Formula One. I was on the government team that did the deal to bring Formula One to Singapore, and I was involved in organizing the first race. And ever since that experience, I realized that, wow, you can actually make a living doing this. So since 2008, which is when the first race was, I've always had an eye to potentially try and get back into sports. I went to business school, ended up working in private equity, had a great 7 years at TPG, San Francisco, China, and then Singapore. But at the back of my mind, I was always trying to figure out how can I get back into sports. So when I was in TPG, Singapore, and by the way, for those of you that don't know, TPG is a big American private equity firm. I think today they must have 150 to 200 billion dollars of assets under management. A buddy of mine, who was about a decade ahead of me at business school, basically had this thing called One Championship. It was very young, very small. They had a small office all the way in eastern Singapore. And I thought, wow, this is really interesting. But it was too early for TPG. But what I saw was an opportunity to build a real global business out of my home country of Singapore. Because, unlike other industries, we are in the business of media and content. And that type of business does not need road, rail, or air to scale. All we need is a good piece of content, a partner in country A, B, or C, the press of a button, someone there can watch our content. So I just saw this as an opportunity to really pursue my passion in sports out of my home country and build a global business.
And for you, Deborah, you co-founded Rain Group, and when you started, you came to China, and you spent quite a bit of time there, and you've been in Singapore for a couple of years now. What brought you first to this region and then to Singapore in particular, and what is your focus on sport right now?
Sure. So I've actually been in the Asia-Pacific region, this is going to mark my age a little bit, but close to 30 years. First at Morgan Stanley, and then left and became one of the founders of Rain. The thesis at the time is, if you think about it, like you found a company which is a U.S.-based company, not many people have an international strategy immediately. And our thesis was, let's look for those markets that are large, growing, and have technological innovation. And the view was that was North America and China at the time. And so for that reason, I launched our business now 16 years ago in China. And so the focus of our business, just to give you a brief introduction as to what Rain is, we are a boutique merchant bank. Very traditional sense of the word. We both invest as well as advise. The sectors we focus on are content and entertainment, music, video gaming, technology, and importantly, sports for this conversation. And when we think of sports, I mean, in one sense, in terms of sort of creation of a local league, what has been achieved by Huafeng and his team is almost unprecedented for the region, with perhaps the exception of the IPL. Yep. And cricket in India. But from a pan-regional perspective, there really is no other platform or sport IP that has developed in that manner. But the way we started, or I started with sports, actually was, interestingly, China's interest in sport. Perhaps 2015, I think, is when City Football, so owner of Man City, went out and raised capital, and we brought in China Media Capital-led consortium. So it was a Chinese-led consortium to invest in the company at the time for like a small 13% stake. I think it was one of the earliest investments out of China, perhaps the first investment out of China in European, or in this case, the EPL. We actually worked on the sale of UFC, which is early on how we got to know each other in the same space of the MMA. And obviously that went to Endeavor, but China was the cover bid on that transaction. So it really shows sport in many ways it's global for many reasons, but also from a transaction perspective.
So what are the big trends right now? And we were talking earlier, Deborah, about the trends we're seeing right now in Asia may actually give us insight into what's going to happen in the U.S. in a couple of years. So this is a window into the future. What's trending right now?
So I'm going to talk about two topics, and I know Huafeng's got a few ideas on others. I think historically we've always thought about, okay, everybody looks to the United States. We bring those trends and opportunities back to Asia. We localize, and we make money off it. I think increasingly, past 10, maybe even 15 years, that trend is reversing in many ways. It's happened in microtransactions, so payment platforms. It's happened in a number of areas. More recently, the things that I think are interesting is, for example, the intersection between content and commerce. And what does that mean? If you think about Pinduoduo, right, that is about social, community, gamification of buying stuff. If you think about TikTok Shop, It is about, a live engagement with people. It's about influencers, and it's about immediate gratification in terms of, making a purchase. These seem like, interesting trends. But if you think about it, in China today, those two plus Xiaohongshu, which is kind of community influencer, is about 15% of GMV. China's GMV for e-commerce. That's about close to $400 billion is generated by these content plus commerce. Today, TikTok Shop is number 2 e-commerce platform in all of Southeast Asia. So that trend has expanded. China, it's all across Southeast Asia. It's early days for the rest of the world. It's early days to see that in the U.S., but that's an example of something that we think is going to come. And again, initiated by this part of the world that is mobile first, young, technologically savvy, and an emerging wealth.
And Huafeng, how are you seeing those trends play out in your business?
Yeah, so I think in our business, and ultimately sports is a form of content, right? In the content space, traditionally, as Deborah kind of alluded to, Asia has been a net importer of IP, of content, of ideas. But over the past, call it maybe 5-10 years, we're seeing that Asia is now exporting content to the world. Think about what BTS and Blackpink, right, are doing in music. K-pop is a phenomena, is a cultural phenomena, not just in Korea, but internationally. You think about movie space, Crazy Rich Asians, Michelle Yeoh's Oscar, right? And the kind of audience and the kind of traction that is getting Asian-themed content, right, overseas. I like to think we are doing the same thing in sports, right? Out of the top 10 largest sports leagues in the world, we're the only ones from Asia, on that top 10 list in terms of overall audience. So there is a big trend now, I think, of international and global audiences really appreciating and engaging with Asia-based IPs, and I think it's great in terms of representation. People always talk about representation from the perspective of individual athletes or celebrities, but when you look at leagues and teams and other types of businesses, I think that's happening in a big way as well.
And if I can maybe add to that, I think there's another form of IP which Asia is actually a big generator of, and that's in video gaming.
Yes.
So if you think about it,
that's been going on for a while. Yeah.
That's been going on for a while. It's not new. But, to understand the influence, this region, just Southeast Asia, for all the downloads, games originated here are 12% of global downloads. Games originated in China, 33% of global downloads. I mean, so the IP is beyond how you traditionally think about it, and it includes also the video games.
I do think what helps in our specific sport, though, is that martial arts actually is from Asia. The NBA, and I love basketball too, right? The NBA and basketball, there's like over 100 years of history in North America. Martial arts has thousands of years of history in Asia. Every single Asian country has martial arts. China has different forms of wushu. Korea has taekwondo. Japan has karate and judo. Thailand has Muay Thai. The list goes on. Even India, that in popular culture, people don't necessarily associate with martial arts, has wrestling. It's huge in the north, right? So this is something that's been around for a long time. It's just that nobody really, before we came along, organized, commercialized it, and sort of expressed it, right, as a big global league.
So you mentioned games. What about this question of gamification of content and then also gambling? We've seen gambling increasingly become legal across states in the U.S. and have a really big impact on engagement with sports, including the NFL.
You want me to talk about it, or you want to?
You can go first.
I mean, it's an interesting thing. In the U.S., we invest in a company called DraftKings a number of years ago, maybe 2015 or so. At the time, it was about fantasy sports, so the gamification and the idea of a second screen around the consumption of sports. Like, what do you do while you're watching sports? Not everybody likes the lean back experience. People like to lean forward and engage, hence fantasy sports. The hope or view was there was going to be legalization of sports betting in the United States. It did happen in 2018, and we felt we were well positioned being with DraftKings there. Take that to this part of the world. We also invested in a company called Games 24/7, and I think in 2022, it's rummy. But in the sports side, it's also the gamification of cricket in the fantasy sports side with My 11 Circle. So I think that, with just the intersection of video gaming, or the convergence between video gaming and sports, or any form of IP, frankly, but here sports, is quite interesting. And from a sports perspective, is that one incremental form of revenue generation as you think about, your 360 degrees of how you're bringing in revenues for IP, at which you guys sit at the top of the
Yeah, I think
ladder.
exactly. Deborah hit the nail on the head. Ultimately, sports is an IP business. In the old days, you would engage with that IP by watching a live tennis match, a live basketball game, a live fight. Maybe you'd go back and watch it on TV the following week, right? Today, first of all, you can watch that stuff all the time, every single day. In between live events, we have social media, digital media, highlights. You have, videos of Kevin Durant walking his dog that people are engaging with, right? So today you can watch your favorite athlete, your favorite team, your favorite league 24/7. You don't have to wait for the live event or live show. The second thing is you don't actually need to engage with them through sports content. It can be a T-shirt. It can be a game, right? You could be selling data to a betting company. Ultimately, if you are a brand and an IP that people like, engage with, and identify with, there's many, many ways you can touch a fan and many, many ways you can monetize.
So how does this tie into two different things? One is this idea as athletes, as influencers, and then also these micro dramas. We were talking about the growing popularity of micro dramas.
I love them.
You want to talk about athletes? You've got a lot of athletes as influencers.
Yeah, look, I think today, what's happened with obviously the advent of internet, and maybe I'm beating a dead horse here, is fans today can get directly to an athlete. You can watch what they're doing, you can view them. Now, obviously, athletes that make the effort to promote themselves, to open up their lives to their fans, will benefit, right, from this trend. But today we live in a world where you don't necessarily have to go through an NBC to watch somebody. You can go straight to their podcast, straight to their Instagram page. You can interact with them, right? So athletes today are not just sportsmen and sportswomen. They are influencers and they are cultural phenomena, right, in and of themselves.
And maybe to take that, what's interesting, again, a trend in this region is how people engage, fan engagement, which is really this influencer. But if you think about K-pop as an example, and I'm going to bring it back to sports, but what's interesting about the superfan spends 6 times more than the regular fan on stuff related to the thing they are a fan of.
Yep.
And so the communities that are forming around that, and that in this part of the world, for example, Weverse, K-pop, community, it has the engagement you're talking about, direct engagement. It has exclusive content that you can kind of get. It has maybe streaming or the first drop of what's being done. And you have the ability to buy something that's, merchandise related to them. That related to, if you think about how you monetize, to your point of, IP at the center, it is just an additional way of monetizing that. And I think this part of the world, again, is in putting all of that together is actually quite at the forefront.
So we just have a couple minutes left. Do we have any questions? Because I have more questions. We have one in the front here. Can we have a microphone up here? Or do you want to just talk really loudly? Okay. Yeah.
I've always been fascinated with, let's say if you see a prospect, right? And, how could you buy them as a stock? Has there been any thought around that? Especially in the fight game, the pyramid is really large at the bottom, but to really break it to the top, it's quite hard. And I'm just curious if there's any thoughts or any kind of thinking around that. You could probably get financed by Deborah, right? And you can be executing on that side.
Yeah. I think, look, this, in terms of the impact of tokenization, blockchain, and that whole sort of universe, right, of themes, it definitely touches sports. I mean, so we don't necessarily have a fan token yet, but we have launched a mobile game called One Fight Arena. It's a blockchain-enabled game in partnership with Sui, the blockchain, and Animoca, one of the largest. So Animoca actually made the game. Sui came in and sort of sponsored and enabled the game. And it's a player versus player game. It's simple. It's on a mobile device. It's early innings for us, but it's definitely something that I think all sports leagues are looking at. Yeah, because it allows you to interact with a fan in a very direct and transparent way. And I think transparency builds trust, right? And economics makes sense. But, we're only scratching the surface right now.
So
because the core business is still growing, right? So
One thing that you said that was really interesting when we were talking about this yesterday is this idea that you're using AI to deliver custom clips. And I think we were both talking about this.
Yeah.
And the user experience is going to become much more personalized because of the data that you're collecting from the way people interact with content.
Yeah. So the application, so AI, so that's a separate topic.
Yeah.
But the application of AI, the applications are vast, right? I mean, one small example is highlights. Today, we do harness AI technologies to create highlight clips. In the old days, you need to manually go through the entire fight, look for the most exciting segments of the fight, piece it together, edit together. Today, AI can do that first layer for you, right, at 1/10 of the time. Even simple things like writing press releases, something that as a sports property we do a lot of. We can use AI to do the initial draft. Humans now just need to basically proofread and edit, right?
Mm-hmm.
So it impacts us in even the most basic things and saves a lot of time.
Yeah, so we're talking about blockchain, we're talking about AI. Before we wrap it up, I'd love to get final thoughts on what the technology trends are beyond mobile first, beyond the shift to streaming, that you believe are going to continue to be the cutting edge here and we may see more of around the world as well.
So from this part of the world, technology, I think you're seeing some interesting, to your point around AI early, actually cricket in India has done some interesting things. One, around performance, right, in terms of kind of watching, different people's performance and helping them improve kind of the over-under around that. So there's performance-based. I think, again, we're early days in this, but also, you were talking earlier about how the personalization of the content you look at. Right now, what you have is you can put cameras all over the pitch. And then the AI allows you to see what you care about. So if you care about this particular player, you care more about that team, it personalizes what you see. You're starting to be fair, it's early days. Again, we're starting to see this more in India. I suspect Australia actually might be a big market as well. But I think that's an interesting tech trend coming out. Yeah.
And I'll give you the final word.
Yeah, so why don't I give you a slightly cheeky answer to your question? Because we're talking a lot about technology, but what I will say, the nice thing about being upstream, i.e. being a sports league, is that sports leagues tend to survive all technological disruptions. We've gone from free-to-air TV to cable to streaming, there's gaming, there's betting, there's all sorts of things now, but the NBA is still the NBA. One championship is still one championship. The NFL is still the NFL. We're in an evergreen business, and that's great.
And you do need the people to play the sports.
Exactly.
Still, at least for now.
Great athletes, right?
Thank you both so much for joining us
Thank
here
you,
for this
Julia.
conversation. Appreciate it. Mandy?
Thank you.
Thank you. That was really great. Thank you very much to Julia Boston of CNBC and, of course, Deborah and Hua Fung. Thank you so much for pushing the boundaries in terms of how we think about, how we view, consume and pay for sports content. I would really like to stay with the sports theme right now because we've got a real treat for you waiting just behind us here in the wings. I am very, very honored and happy to introduce to you and welcome to the stage now 12-time Olympic and world champion and one of the greatest sprinters of all time. We have also Emma Crosby of Catalyst to do this fireside chat. So Michael Johnson and Emma Crosby, welcome to the stage and put your hands together.
Oh, and take the far seat. Thanks, Michael.
All right.
Oh, Michael, welcome. Thank you
you
so much for coming over here. Isn't this wonderful? Michael Johnson in the flesh. We're so delighted to have you here because you've come all the way from
Los Angeles.
wow, literally the other side of the world. How are you feeling right now?
I'm a little jet lagged, but
Yeah,
good.
you've got your kind of athletic mindset on. I can tell you're going to do brilliantly. Just to let you know, we have half an hour together with this fantastic gentleman. I'm going to ask questions for about 20 minutes or so, and we've got lots of microphones roaming, so there's going to be plenty of time for Q&A. So please don't be shy. We'd like you to think of some good questions. Put your hands up, and we will get to you, I promise. Okay, so the title of this session is Beyond the Finish Line, but Michael, allow me, if you will, to take you back just a few years to the beginning of your athletic career when you began to claim your place in sporting history. When you watch those races back, if you do, let us know. Are they still as electrifying for you as they are for us?
It's more than a few years. I retired 24 years ago, and sometimes it seems like yesterday, sometimes it seems like a lifetime ago. I come across them from time to time when somebody posts it. I'm not sitting at home actually watching races of myself, but
Maybe when you're feeling a bit like you need some self-esteem boosts or anything.
But it's great memories of that time that I have. I was very fortunate to be able to, be in what was really sort of a sort of golden era for my sport, for track and field, and it was great memories for me. I was able to accomplish all of the goals that I set for myself, and so I look back on it fondly. But it's like I said, sometimes it just feels like it was yesterday, and sometimes it feels like a lifetime ago, and a lot has happened in my life since then.
A lot. That is the nature of life, isn't it? You talk about goals, and this is a question that you will get asked a lot, but for the benefit of us who we've not heard it, what are those highlights for you? What were the goals?
Yeah, the most important thing is I was driven by goals, and I started in the sport thinking I could do things that no one had done in the sport, so I was sort of chasing history. And at the first half of my career, it was really about, this is going to sound sort of diabolical, but it was just really about beating people as badly as I possibly could. I took joy out of winning by as much as I possibly could. But about midway through my career, I realized that, as long as I continued to do everything that I needed to do and I was prepared, I was probably going to win the races. So then it became about chasing records and chasing history and trying to do things in the sport that had never been done before.
And you did that. I mean, you broke many records and achieved a double in the Olympic Games back in 1996. Was that a highlight? I mean, talk us through that time.
Of course. I've competed in 3 different Olympic Games, and to be fortunate enough to have one of those, the one actually right in the middle of my career, fall as a home games for me in Atlanta, in my country, competing in front of a largely home crowd was really special. And it was a lot of pressure. It was a lot of stress, and but I was more focused on the opportunity to make history at that games, and so it's a really special memory. Most athletes won't get the opportunity to compete in the Olympics at home, so I was very fortunate that the timing just worked out for me.
And so unusual to compete in two races in one Olympic heat. Talk us through the thinking about that beforehand, and how do you arrive to that? And talk about the different training mechanisms, if you have any.
So as a 200, 400 meter sprinter, it's now common. Then it wasn't. Actually, early in my career, I always had to choose the 200 meters or 400 meters, and then I would have to sit in the stands and watch someone win the other race thinking, I could win that race, I should be there. But the schedule wasn't, just because it wasn't a traditional double like the 100 meters, 200 meters, or 800, 1,500 meters. The 200, 400 was a very unique double. And so I had to actually appeal to the International Olympic Committee to change the schedule to allow me to actually attempt the double of those 2 races. Initially, they said no. They wouldn't change the schedule for me. We were able to apply some pressure and finally got them to change the schedule. And and I was successful. So it all paid off in the end.
Was it exhausting?
It was a tremendous amount of pressure. So of all of the 3 different Olympics, that's the one that I have actually the least memory of, because there's 8 races over 6 days, and I flew in for the opening ceremonies, and sort of being the face of that games and needing to be at the sort of highest level of focus. I flew in for the opening ceremonies. I was based in Dallas, that's where I'm from, and I flew in for the opening ceremonies and flew back home because track starts the second week, so I wasn't there for the first week of the games. I flew back 2 days before my first race, and pretty much for the rest of that, I was just sort of between my hotel and the track because I just needed to be focused on the task, and Yeah, and I was running every single day. So I don't have much memory outside of, what I was doing on the track for that game versus my last game, Sydney. I was a little bit more relaxed and able to just sort of enjoy it.
Yeah. Maybe your brain has completely blocked it out for a reason because it was so tough. But just talk us again through the strategy of approaching those two races. What do you go through to ahead of time?
So it's as much as, as simple as our sport is, sprinting, gunfires, everybody takes off, we all run as fast as we can, and first one across the line wins, right? It's very simple. But it's much more technical than that when you're actually competing in the race. So your mind is actually focused on executing the race strategy that you've developed along with your coach. So we know what sort of race strategy, at what sort of times I need to be at what points on the track. And so the objective is to go in and try to execute that strategy as best I can. So what's happening is I'm running the race. I am constantly assessing if I'm behind or if I'm ahead of where I need to be at certain points on the track. I'm then making decisions based on that assessment of whether I need to make an adjustment or not, if I need to make the adjustment here or whether I need to make it later. And we're talking about a 19-second race, so you don't have time to really ruminate on that. Well, should I not? You got to make the decision very quickly. So, and if you make the wrong decision, it could be catastrophic. So that's why the focus has to be so high. Now, while you're making all of those decisions and doing all of that assessing, you're still in a race, and there are 7 other runners. So you also have to be focused on what they're doing and making decisions as to whether you adjust anything you're doing based on what they're doing. So all of these things are happening during the race. So it's a lot. And, those who can become better at making those decisions in the race are the ones who are typically going to perform best.
And, to prepare for this interview, I indulged and I watched your races back, and it is actually on YouTube and the various channels you can do it on. It's very addictive, actually, to kind of click back and keep watching it. And it's
is it clear footage or is it grainy?
It's a little grainy, but it's mesmerizing. And what I found really fascinating was the camera would pan to each athlete, but particularly to you because you were the superstar at the time. And it would just watch your eyes and your face as you're looking down the track before the gun fired. And I thought, what is going through your mind at that moment? Like, you seemed so calm but ready, and I just was wondering what you were thinking about then.
It's probably sort of like that duck that looks like it's just gliding across the water, and underground it's just like under the water. It's just like, I looked calm, but inside, there's a lot going on.
Your heart pumping?
Absolutely. So in that moment, it's, if you imagine, with all due respect to other sports, which means I'm going to disrespect those sports, if you don't win the championship that year, what do they always say? Oh, we're going to try again next year. But the Olympics, there is no next year. So as you're standing there behind the blocks and it is the Olympic final, what's going through your mind is, have I done everything that I could possibly do to be prepared for this moment? And that starts in the months, weeks, months before that, knowing every day that this moment is going to come and it's going to be the moment of truth. And you're going to be standing there behind those blocks knowing that, okay, when this gun fires 19 seconds from now, I'm either going to be the Olympic champion or I'm not. So you want to be as prepared as possible. And that's where the confidence comes from. So yes, I was confident. I was nervous. I always wanted to be nervous. I felt most comfortable if I was nervous. That was where because I understood how to control the nerves. And so it was, basically just being at the highest level of focus at that point because all of the training has been done. Hopefully you feel very confident that you have actually done everything you could do to be prepared for that moment, and I had. And so now it just comes down to execution. Now, being the best, I always knew that I could win the race, but you never know if you're going to win the race. You still have to go out and actually execute on the day. Nobody's going to give it to you.
Yeah.
And even if you're the best and you're the race favorite, today just might be somebody else's day. I was that person once where it was Carl Lewis was the favorite. He was the king, and I was not. But eventually, one day, it was my day, right? And so you always know when you were in that position that someday somebody else might be their day today, so you got to be ready.
And you had many days, so that was good. In the end, you had many. But the pressure, the mental pressure, and I know you've talked a lot about this, you've written books about this, and it translates into business, and we can all take from it. It would quite cripple mere men and women, but it really would. So how did you cope with that pressure in those moments?
Yeah, I mean, it starts with, being prepared, and just like anything else, the confidence comes from knowing that you're prepared and you've done everything that you could do to be prepared for the moment, whatever it is. So that relieves some of the pressure. But then it's understanding, which I was able to do, over time, how to best manage the pressure and how you deal with the pressure, right? So it's different for everyone. Different athletes handle it differently. For me, it was being in the highest state of focus that I could be, absolutely focused on how I'm going to execute this race, focusing only on the things that I can control, not thinking about or concerning myself with the things that I can't control. So I can't control what's happening in someone else's lane, right? They can't control what's happening in my lane. So I'm not really worried about the other athletes. So just spending that time just visualizing myself running the race in the moments leading up to the race is what put me in the best mental and emotional state to go in and perform at my best. Now, if you think about Usain Bolt as an example, who came after me, and he was out. When you watch him, he's out there, sort of playing to the crowd and being an entertainer and all of those sorts of things. And I was interviewing him once, and I said, what's going through your mind when you're doing that? And he said, when I was younger, when I first started, I used to watch you, and you were like really focused, and I tried to do that, and it made me too nervous, and I ran tight. So he understood that, in order for him not to be so tight, which you don't want to be, you want to be relaxed so you can run fluid. He needed to sort of take the pressure off and just not really focus on it. But if you watch him and he's out doing all of this silly stuff, right, as soon as the starter says, runners take your mark, it all changes. So it's different for every athlete, and the athletes who perform best are the ones who figure out what works for them.
Oh, it's so fascinating. Another lovely thing with all the videos and the archive footage of you is looking at the comments underneath. And there are so many, and I'm sure you would all feel the same, of people saying, I remember watching you. It gives me goosebumps. I was 12 years old, and that's when I fell in love with track. How does it feel to have inspired people you never meet? It's electrifying moments for you, and it's your life, and it's very personal, but it's also for us too. It's an amazing moment, isn't it?
Yeah, it's outside of, being in a position to use my platform and use my voice to help others. It's probably the thing that, since retiring from the sport, that I'm most proud of, being able to inspire other people, having given people that joy, with those moments. It's the thing that I'm probably most proud of in terms of the legacy that I was able to leave for the sport.
Yeah. I suppose what was frustrating is it just didn't happen that often. We had to wait every 4 years for the Olympics and every 2 years for the World Championships. And that for you is a frustration into the rest of your career, which is you're trying to do something about that, aren't you?
Yeah, I'm very, very excited to launch Grand Slam Track, which is my latest venture. It's the first truly professional league and home for the fastest people on the planet. This is our first year. Our first event is coming up here in a few weeks in Kingston, Jamaica. So very excited. We've built this in the mold of sort of the 4 tennis Grand Slams, why it's called Grand Slam Track, and the 4 golf majors. So 4 major tentpole events every year. Starting this year, we're in Kingston, Jamaica, Miami, Philadelphia, and finishing up in Los Angeles in June. We're really excited. We've got the best of the best athletes. Only track, just racing. Not the field events, just the racing on the track. So we have our racers that we've signed represent over 50% of the medals won in Paris at the Olympics last year. So the Sydney McLaughlin-Levrone, Gabby Thomas, Quincy Hall, Cole Hawker, Masai Russell, all of the podium from the men's 1,500 meters, Josh Kerr, the podium from the women's 100-meter hurdles. So we got great athletes. It's the first time there's a true home for the fastest people on the planet. And I was inspired to create the league because, to your point, when I was competing, I was fortunate to be able to sort of transcend the sport, but it's very difficult for athletes to really unlock value for themselves and build a brand when you're waiting 4 years for a major championship to come around again versus other sports. I mean, tennis has 6 major events a year. Golf has 8. Track has 2. And if I ask anyone to tell me when the next major track event is, you're probably not going to be able to tell me.
Does anyone know?
Yeah, there you go. So, yet despite that, you have over 300 million people a year around the world watching 2 races a year, right? But it's not. It's very fragmented, and it's just you don't have the best of the best athletes competing against one another. So the opportunity is to take those same sort of things that attract everybody to watch this sport during the Olympics. It's the most popular sport on the planet every 4 years for that 2 weeks. And that's because it's high stakes, superstar athletes, and amazing stories. So what we're doing with Grand Slam Track is recreating that by bringing the athletes under contract, centrally contracting them, and then now being able to go out and, because they are contracted and they're guaranteed to compete against one another, we're able to go out and that will be televised in 100 different countries. We're on Peacock in the U.S. and the CW and on NBC as well. Eurosport across Pan-Europe. And so, yeah, it's a real exciting time for the sport and exciting time for Grand Slam.
Exciting because I know you've dreamt about this for many, many years, and you said that you think you can save track. Big statement. So just how big could this become? Or would you like it to become? Yeah, and look, around that statement, one of the problems with track is that it doesn't have to be saved because it relies on the Olympics every 4 years. But that's bred a lot of complacency with the sport, where in those years in between, if there wasn't for the Olympics, this sport would be gone. Right. What do the athletes do in that time?
I mean, there is a fledgling, sort of circuit of events that the athletes will participate in, but it doesn't allow them to really realize their true value. It isn't a home for the best of the best. So there were close to 2,000 athletes who competed in Paris in the Olympics last year. All of them could ostensibly be considered professional, but only about 200 of them are actual professional athletes. So if you look at most sports, you have, a league at the top of that sport. It's the smallest, sort of at the pyramid. It's the top of the pyramid. It's the smallest group of athletes, but it's exclusive. And all of these down here want to get to there, right? And that becomes, it provides this sort of halo effect, and everything benefits downstream. We don't have that. We're the only sport that doesn't have an exclusive home for the best athletes. Yeah. So that's where the opportunity is. It's what the fans have wanted. They want to see the best of the best athletes compete against one another more often. And typically you don't get the best athletes competing against one another. In non-Olympic years, like for example in 2023, you had the top 3 male sprinters only competed against each other 1 time. The top 3 women sprinters only competed against each other 2 times, right? So this is what, but it's not that the athletes don't want to. They're not incentivized to. Sure. So at the previous top circuit for the athletes pays $10,000 in prize money for the winner. It's just not enough to incentivize them. Our prize money is $100,000 for first place. Our 8th place prize money is $10,000. So this is the sort of reward that the athletes deserve, and we pay them a base compensation as well. So they now are true professionals, but again, what that allows us to do when we centrally contract them is to now go out and market the sport and commercialize the sport in a way that allows us to grow this league into, the UFC or F1 of racing.
And that's the really interesting area, isn't it, for business? Because we know that business and sport go hand in hand. That's what we're talking about all afternoon. You're making superstars out of these athletes. It is a place for the fastest people on the planet. That is a great phrase. So what is the potential for them, getting brands and business and athletes together? What do you see that potential?
Yeah, the potential for the athletes is to actually realize value for being as talented as they are. It's currently very difficult for them to do that because unlike athletes in other sports, they don't have a platform to use to brand themselves. So if you think about an NBA player, for example, the NBA is a platform for them and supports them in building their brand. Their team is another level of platform for them and helps them in building their brand. Track athletes don't have that. This generation of athletes have been doing a fantastic job of connecting with fans themselves, but now they need a platform, and that's what Grand Slam Track provides for them, a platform for those athletes to now go out and build their own brand, to realize more sponsorship opportunities, but also to be able to perform on the grand stage 4 times a year to provide value and visibility back to those sponsors as well. And it provides an opportunity for businesses as well. Some of our partners already recognize that because we're a new league, we have a sort of greenfield of opportunity, and they can, we're integrating new technologies because we don't have sort of legacy systems or fans with expectations of how we've always done it. We have the opportunity to do whatever we want to with this new league. So it's been a great opportunity for some of our partners and sponsors as well.
Exciting times. I've talked so much that I've actually already into our Q&A session. So let me open, with Grace, let me open the floor now. Oh, we've got lots of hands up already. I'm sorry that it took me so long to get to you, sir. We're going to grab a microphone. If you can tell us your name, that would be great, and speak to Michael.
My name is Juan Ignacio from Spain. Mr. Johnson, it's quite an honor to see you today in Singapore. So when we were younger, we used to play basketball, soccer in Europe. And here in Singapore, actually, my son chose track and field. He's in the Singapore American School, and yesterday was his first training. And I'm not very familiar with track and field, even though I've seen you, by the way, many times, and the Olympics and World Championship. Could you please share with me, a parent that doesn't know much about track and field, what would I tell my son that he has started, by the way, yesterday? Could you please share any of your thoughts? Thank you so much.
Yeah. I found that a lot of times it's really good for kids when they're playing a sport that their parent doesn't know anything about. You may not appreciate it, but your child will. They kind of want to just do their own thing. I think, the best thing any parent can do is just encourage their kids to have fun with the sport. Just enjoy it. There's plenty of time for it to become serious, but there's a high risk of the kids burning out on the sport if it gets too serious too soon. From myself, I played all different sports when I was a kid, and I was just out there having fun. I wasn't thinking about being an Olympic athlete. I wasn't thinking about being a professional athlete. I was only out there because my friends were there and we were having fun, and that allowed me to find the sport that I love. It allowed me to develop slowly, and I think that's the best thing you can do as a parent. Just encourage them to just have fun with it.
Great advice. We have got, if you speak, gentlemen, and then if I can get a microphone here for Guy at the front as well, and then I'll come to you next, I promise. So yes.
Good afternoon, Michael. My name's Unmesh. Great to be in the presence of a legend. A lot of athletes at high performance talk about trusting the process, because you're trying to achieve something which has not been done by anybody before. There's no playbook. In your sort of conceptualization of Grand Slam track, what's the sort of trusting the process equivalent in terms of thinking through the idea, building a team, and realizing success, which is still sort of on the horizon but not quite there? Thank you.
Yeah, I mean, it's a good question. There are certainly parallels between being an athlete. I've been an entrepreneur since I left the sport 24 years ago, and I've been able to apply a lot of those things that I learned as an athlete and experiences. So some of those things I talked about earlier, preparation is everything. You're trusting the process. Better have a good process, right? I mean, if the process isn't a good one, nobody's going to trust it, right? So having a good process, understanding what it takes to be successful, being able to build that sort of platform for success and duplicate that. Teams definitely are important. I've got a great team, and this is someone who came from an individual sport. I hated team sports. I played football a little bit, and had one time I had a great game once when I was playing football, and we lost, and we're on the bus on the way home, and everybody's sad, and I'm thinking, I had a good game. I should be happy, So that told me that I needed to be in individual sports, right? But I learned being the captain of our 4x400 meter relay team, the Team USA 4x400 meter relay team, that you've got to bring people together. Everybody has to understand, what the goal is, and you try to get their individual goals, to fit within the broader team goals and get everybody sort of rowing in the same direction, but also allowing everybody to, everybody's different, as I talked about before. You got Usain Bolt over here who knows how, to get himself ready for the event. You got me with a completely different situation. When two people like that are on the same team, they need to be allowed to be able to be themselves, be their best, figure out how to be their best, but then bring that into the team.
Thank you, Guy, and then I'll come to you. Could I get a microphone for this lady here as well?
So, Michael, I was one of those people living in Atlanta in 1996. We remember the pressure. We remember the gold shoes. We remembered the domination. And it all came from preparation. You were probably the most disciplined athlete on planet Earth at that time.
I talked to him earlier. There's probably not a question coming.
No. The question is, you're starting something new. 5 years from now, what do you want Grand Slam track to be? And not just in the U.S., I mean globally. What is your vision?
Great question. We have the potential with this sport and with Grand Slam track, because of the fundamentally flawed current structure, to create now the F1 of racing for athletes. The UFC, UFC is the Ultimate Combat Sports League. We have the opportunity to create that same sort of league. We have a fan base that spans the globe, with fans from all over the globe. We have athletes in our league who represent 25 different countries. We're televised in over 100 countries. So, yeah, we have the opportunity to be the UFC or F1 of athlete racing. So
you heard it here first. I'd love to invite you to ask a question.
Thank you. Hi, Michael. Just so you know, my partner is very jealous that I'm here and he's not here. But I just wanted to ask, so I come from Ghana, right? A place where there's so many incredible athletes, but we just don't have the right infrastructure to support that kind of talent and platform that kind of talent. One, is that part of your ambition at all, kind of, taking that the platforms you've created and scaling your impact in places like that? But two, what advice do you have for, private entities that might be interested in, kind of building up some of those structures in markets like Ghana?
That's a good question.
Yeah. So it's certainly something that is on my radar. We're the first company, an organization to go into Jamaica and take a major event down there. Jamaica has been unbelievable in terms of its impact on the sport of track and field. I mean, this is a country of 3 million people, and they constantly go toe-to-toe with us, with the U.S., a country of 300 million people. Well, that's not true. They actually don't go toe-to-toe. They've been beating us for the last 10 years. We got them this year, though. But I thought it was important for us to honor that heritage and what they've meant to the sport. So we're having our first event there. We've talked about, what Kenya and Uganda and Ethiopia has meant to the sport as well in terms of distance running. On the other side of the continent from you guys, it's certainly on our radar to take Grand Slam track to different places around the world where there are great athletes, as opposed to just being a home as a league for those athletes, taking our events there as well.
Great question. This gentleman here has been waiting very patiently. If he could have a quick microphone, and then I'd maybe squeeze one more after, and then I'm afraid that's it.
Hi, Michael. Sarisha. One question. When you were running, how did you look at competition? Did it inspire you, or did it make you a little more subdued? And what would you then advise today, or do you see a difference today in the athletes today do they view competition from a different lens as compared to 20, 25 years ago?
Yeah. So, I mean, competition is at the heart of sport. It's why we all do it. The great thing about sport and the reason why, in a sort of crazy, ever-evolving media landscape, the one thing that people will still make an appointment to sit down and watch is live sport. And at the heart of that is competition. The athletes view it the same way today as they did 20, 30 years ago. That was one thing that hasn't changed because only one person can win. Only one team can win. Everybody wants to win. Only one person can. Only one team can. And that creates a sort of, atmosphere of bringing out the best in people, not only physically, but mentally, being in position to deliver your best performance. Competition is the only thing that will bring that out.
If you're very brief, sir, I'll give you one last question. I'm afraid it's the last question, but thank you. I'm sorry, sir.
Hi, from Malaysia. So my question is, 96 Atlanta, you did double, 200, 400. Was there consideration of 2000 at Sydney to do double or even triple? Thanks.
Yeah, so I was, you always want to defend your titles. So I went into the 2000 season knowing that was going to be my last Olympics, and yeah, the objective was to defend my 200 and 400 meter titles. I got injured at our Olympic trials in the 200 meters, so I wasn't able to make our team. We have a very brutal process. The first three people across the line win and go on to the games. So I won the 400, made the team, and but didn't make the 200 meter team because I got injured. So, and that was probably one of the most difficult titles to defend. No one still has ever defended a 400 meter Olympic title, and I barely did it because after that injury, the Olympics were another 6 weeks away. Typically, I would have probably 3 or 4 races in between to prepare, and I wasn't able to do anything but rehab. So I was able to win that title based on experience. We talked about preparation before. I wasn't as prepared as I would like to have been going in, but I was fortunate to have had enough experience to be able to rely on that to win that title.
And what's wonderful is that you're not stopping now because you're still passing on the experience to the next generation and the next generation. And with Grand Slam track, I'm sure you're doing that too. Whether they'd like to listen or not, I don't know. But we're kind of running out of time, I'm afraid. So it leads me now to say thank you so much. Sure. And we wish you the best of luck with Grand Slam track. And please let us know how it goes.
Will do.
Michael
Thank
Johnson,
you, guys.
a big round of
Thank
applause,
you.
please. Thank you very much. Thank you, sir.
Thank you very much to catalyst Emma Crosby and, of course, the legend himself, Michael Johnson. That was really so special, wasn't it, being let into the secret chamber of the inner workings of the psychology of a sports legend. And thank you, Michael, as well, for supporting the sports legends of tomorrow. We're staying now with the theme of sports and actually throwing it back to esports in particular, because we earlier heard about Saudi Arabia's ambitions to start the inaugural Olympics for esports in 2027. So let's delve into this in more detail, shall we? And welcome to the stage once again, Arjun Karpal, our technology guru here at CNBC, along with his guest, Danny Tang, the CEO of Hero Esports. Over to you, Arj.
Hey, Mandy.
Where's your guest?
Good to see you. She's just in the wings. Danny? Well, there we go.
There he is. I'm not going to leave you all by yourself up here.
All right. Thank you, Mandy. Danny, welcome to the stage. Thank you all for sticking with us this afternoon. Can I have a quick show of hands before we kick off? Are there any gamers in the audience? Anyone? One, like it?
Cool.
2, 3. Okay, this is the right audience. Does anyone actually watch gaming rather than play it, like esports on YouTube too? Okay, good. All right.
There we go.
So Danny, look, esports has changed so much over the last few years.
Right.
What would you say are some of the biggest changes?
Wow. So if we turn back the clock a little bit,
So when we founded the company, we founded a company called Hero Esports. When we founded the company back in 2016, the kind of world we were looking at was where people were still finding it super strange, the concept of people watching other people playing games. Yeah. And at the time, even in our market in Asia, most of the esports titles were PC and console-based. So the penetration was not as deep. We don't see a lot of casual gamers or female gamers. And now fast forward 8-9 years to today, we're seeing esports being talked about as part of the mainstream culture. We're seeing lots of female fans that are filling up our arenas and also following our tournaments online. We're seeing an influx of a diverse world of esports titles that have emerged in the past 8-9 years. And we're seeing the big macro trends happening in our industry. With Prince Faisal was here earlier talking about the great efforts of KSA in pushing the industry forward with Esports World Cup. And we also have seen the announcement of the Olympics connection to esports. We're waiting for the first edition of the Olympic Esports Games in 2027. So a lot has happened.
So Danny, you said it's being spoken about in sort of mainstream circles, but has it gone mainstream? That's a different question. And as I look at it, it still feels to be maybe not quite niche, but it still feels to be a sector that many people have not been introduced to, have not seen as of yet. Is that fair? And if so, if you disagree, that's fine. But how do you, or what does the path to mainstream look like?
All right, let me give you a couple of anecdotal data points. Right. So this is happening, mostly observed in our parts of the world, in Asia, in China. I think we benefited from the fact that our whole gamer community just skipped through the whole generation of console and PC and went straight into mobile gaming. And that really broadened the scope of the people that are playing games and then viewing the contents. Now, if you look at, take buzzwords, what are the popular topics people are talking about online these days? So we have, if you look at the top 10 buzzwords on Xinlang Weibo, this is our equivalent of Twitter, 9 out of the 10 buzzwords will be esports related. Now, I think that's a strong indicator for that. Another data point is that when you go out to our arenas, when you look at our tournaments, we have arenas filled with anywhere between 60% or 80-90% of female attendance. Now, these are girls going and watching, not because they want to go with their boyfriends, they go because they are gamers and they follow the game. The online viewership is about 50-50. Another sort of anecdotal evidence is that if you look at the brands, the sponsors that have entered into esports tournaments that are using esports to reach their target audiences, these are not just the niche endemic brands anymore. Of course, we love mobile providers and all that, but we're seeing jewelry brands, shampoo brands, gasoline brands, car brands, all of these brands realize that, hey, if they want to speak to the younger population, this is an area of the content they must invest in. And when we think about the content universe of esports-related content in our market, in China and in Asia, yes, the professional, highly competitive tournaments is a pillar of that. But we also have a wide range of contents. In addition to that, because people just love the content so much, we have the competitions. We have, of course, the off-the-shoulder contents. We have reality shows. We have romantic drama, chick flicks. So people love embracing this content, and they want to watch more. So I think that's sort of anecdotal evidence to answer that question. Is this part of the mainstream? I answer would be yes, it is.
So the actual content has expanded in terms of the amount of it, but also the breadth of that content.
Exactly.
Well, I think it was interesting you mentioned Weibo there because, of course, that's a China-based platform.
Yep.
And I think that speaks to potentially the way that esports has been welcomed and adopted in different parts of the world differently. Asia, in particular, is very strong, and certain countries within Asia, right, versus, say, Europe.
Yeah. I think, let's take a step back and talk about why people want to watch other people play games. Like, what's the fundamental need we're solving as an industry? Esports, just like traditional sports, just like traditional media, esports is an experience that you enjoy and you share. This is a connecting experiences. What we're building here is experiences to connect people together, both offline and online through the great tournaments. And you follow the athletes. You want to see the best compete. You want to learn from the best, and you want to root for their success. And that's the basic fundamental of why people follow esports. And that's true across different geographies. If you look at the kids these days, I mean, I've got 2 boys, an 11-year-old and a 7-year-old. They live in a world where purely physical engagement is not enough. It's just not the case anymore. And if you look at us, even our generation as adults, we live and both in the physical space, but at the same time, we use a lot of online tools to live and to navigate our work, to socialize with others. Our generation lives in this mixed reality that is both virtual and physical. So esports is just a very natural part of that experience, and that's universal. So talk to any kid around the world, be it in Europe or in the United States or Iceland or somewhere in our market in China. Like, how do you spend your time these days? Do you play games? How do you connect with your friends? Do you use a computer for your schoolwork? I mean, that's something that's happening all across the world. So that's why sometimes we say the future is already here.
Yeah.
But the future is not necessarily evenly distributed. Why? Because sometimes we've got constraints in terms of infrastructure. Now, I mentioned that something that we've seen in our market is the accessibility to mobile games. You can game anytime, anywhere. You can watch your content anytime, anywhere. You can compete with your teammates anytime, anywhere. But the accessibility of, say, 5G and mobile network that is stable, that is fast, is not necessarily there yet. I spent the summer in Europe last year, and with all due respect to the Europeans out there, I could barely sustain a high-quality Zoom call, let alone like play an episode of game with my friends. They would probably kill me if they realize I'm playing, but I'm dropping things left and right.
I think I make the mistake sometimes of thinking esports as pro gaming only, big tournaments, big money tournaments these days as well. But I think what you're describing is a world in which there's a lot more to it, right? It's the content, as you're saying, in terms of even if you're not necessarily gaming, you're watching things or consuming things another way. Just in terms of distribution, I guess, a lot of, I guess, esports is played out on Twitch, maybe on YouTube, on these kind of free, a lot of free to consume kind of platforms.
Right.
Do you think there's a situation in which Netflix needs to get involved, or on Amazon Prime at this point, and where you have traditional sports leagues like soccer or others charging billions of dollars for rights for some of these channels to play the content, do you think a similar situation will evolve in esports as, I guess, the business becomes bigger, more professional as well?
Yeah, for sure. Absolutely. I don't see esports as kind of something that's vastly different from traditional sports in terms of business model. We're just not there yet. We haven't seen a strong international IP at the global level that speaks to all the audiences in different markets of the world, US, America, China, the Middle East. I mean, we're seeing the beginning of that era with Esports World Cup. We're going to see a lot more of that now with Olympic esports games happening. But ultimately, esports and traditional sports are the same thing, isn't it? Like you're experiencing this connecting experience in real time. You're sharing a moment of your life together. You're rooting for the best to play, and it's essentially the same. So I don't see a scenario where we're probably going to have more diverse revenue streams, but for sure there is great value in the media rights, in the broadcasting and distribution of esports content.
What do you think some of those revenue streams are? As you look, because I know sponsorship plays a big part at the moment. Right. But where else do you see sort of revenue expanding to?
Yeah, well, for our industry, as of right now, I can only talk about the business model as of today, because I tell this to my team a lot. We've been in existence for almost 10 years, and we think we've seen huge growth and a large diversity in business model, but we're at the very early days of esports as an industry. We're in the very beginning years of the first 100 years of esports. So mind you, the business models will change. But even now, if you look at the business models in our industry, multiple revenue streams. One is game developers. The game companies, game publishers, they are willing and eager to invest in this whole ecosystem. So they put up money, they put up expenses in order to build this ecosystem for them and for their community. Because why? It helps their core business. It helps the community stay engaged with the game and the content. So therefore, they're willing to pay for that. And the second, sponsorship, like you said. The brands, I mean, think about it. Where else can you find such an amazing and devoted group of community of 18 to 45-year-old with almost equal gender influence? Average age of an esports tournament spectator is like, what, 26, 27? And if you go to them, you speak their language, you capture the future market for yourself. So that's why we see a huge amount of influx of brands who want to come in as sponsors, and media rights owners as well, broadcasting platforms. And the third category is actually from the influencers. So we talked about esports, not just the core content, but also related content, because people want to view and engage with their athletes both on and off court. So we have seen this huge rise of gaming and esports influencers that have really made a lot of diverse commercial revenue streams in this market.
Danny, can we just talk for a couple of minutes? Because I think this is an area I think a lot of people don't know about, but actually how on the pro side of esports, the professional gamers, there's been this big drive over the past few years towards professionalization, right? Where there's teams. And I remember speaking to a player who was playing FIFA, a game I grew up with and play a lot. And I would ask them, how do you train? It's like, well, just how any soccer player trains. I sit there and take corners to learn how to do the technique and things like that. But there is training regimes in place. There's professional teams.
Yes.
That's been a huge shift, right?
Yes, a huge shift. People have this idea that says, oh, if you want to be a pro gamer, you just skip classes and stay in your bedroom and play all day. But that's no longer the case, not anymore. There are over 200 registered professional teams in China, and they train in a very highly organized way. I'm talking the athletes are put up in special training centers, facilities, 10 to 12 hours of gameplay each day. And
that sounds fun.
No, it's a job, right? It's a profession. And you have the physical training because you need to have that kind of strength in your body in order to sustain that level of gameplay and pressure as well. And then, of course, there's psychological training as well. There's the whole nutrition program that comes with it. Like, look, I tell my kids, I tell my boys, you want to play games? Great. But if you really want to be a professional esports player, you've got to understand the level of requirement, the level of hard work and tenacity. You got to do it. And you've got to do your math homework in order to do that because you need to keep your brain fresh. And you got to go to your swim team training because you need a good physical body to do that.
And just like physical sports stars will have nutrition plans, like you mentioned there, but also welfare plans around their mental health, around physical health as well. Right. Are you seeing that yet in the esports world?
Yes. I think the competition of esports competitions are extremely fierce. Yep. So in order to be, it's the same thing. It's same with everything in life. If you want to be the top of the world at something, we just heard from the 12 times Olympian. If you want to be the top of the best in the world in anything, you really, really have to activate every single resource that you can. And we've definitely seen that, not just in the Chinese teams, but definitely in the South Korean teams and the teams in Saudi Arabia and around the world as well. It is, again, it is a real job, and it's a really demanding job. It takes a lot of talent, a lot of grit, a lot of strength.
Yeah, fascinating. Danny, before I let you go, what game are you playing at the moment?
I think, so there are two titles. One is more on the esports side, Honor of Kings.
Okay.
So it's a great title that focuses on your physical capability. It focuses on the ability to strategize and also collaboration with the team. On the non-esports side, Black Myth Wukong.
Yeah.
So it's been a challenge, but it's been a very interesting challenge for me.
And that's a fascinating story because that's a big blockbuster game that's come out of China, which was a big surprise to the world, which is fascinating. Danny, it was a pleasure to see you again after so long, and thank you for all your insight. Exciting times in the world of esports, and looking forward to seeing where this is going. A round of applause for Danny Tang, CEO of Hero.
Thank you.
Thank you very much. Don't go anywhere. We've got another 15, 20 minutes left on stage here. And I want to introduce my final guest for Converge Live 2025. Can I bring to the stage now Min Liang Tan, the CEO of Razer. Min, good to see you.
Good to see you again.
Yeah. It's been a while.
It's been a while.
There's been a lot of changes.
Been a minute. Yep.
It's very hard to be at these conferences these days without talking about AI, right?
Sure, absolutely.
So we're going to have to talk about AI.
We can talk about AI.
Something interesting you've done recently is release an AI gaming coach, right?
A gamer co-pilot.
A gamer
AI
co-pilot.
Gamer co-pilot.
So run us through what it is and how it works.
Sure, absolutely. So we've got a AI gamer co-pilot that we announced at CES. Yeah. Essentially uses computer vision. It sees exactly what a gamer sees on the screen, and then it provides esports coaching, it provides walkthroughs, system optimizations, pretty much what every gamer needs when he's playing a game. So give you a quick example. If he's playing League of Legends, for example, it would be telling him how to play, what items to buy, which towers to be pushing, so on and so forth. If he's playing like Black Myth Wukong, and I just heard you guys talking about it, oftentimes a gamer would, if he gets stuck in a particular boss battle and stuff like that, he needs the alternate tab. We would go out, we would check on YouTube walkthroughs and stuff like that. But with Ava, our AI gamer co-pilot, it would literally give you all the hints and tips when you want it. And all of this is in line with the terms and conditions and stuff like that. And essentially, it's your gaming buddy.
Can you just help us understand a bit about the technology, computer vision? How is it trained? Because obviously, each game is very different in terms of how you need to do the walkthroughs, etc. But so how is this trained to accommodate various different games and styles of games?
Sure. So first up, because we use computer vision, it essentially perceives exactly what a gamer sees on the screen. And then over and above, it connects to our cognitive engine. It's a proprietary model that we've got. And we've trained it with all the data that we've got, that we've collated over the years for gameplay data, so on and so forth. And we also buttress that and reinforce that with event data from the game itself. So oftentimes, some of these games have event data that comes across, and we kind of put that all together, and then it processes it in a kind of specialized LLM fashion. And then it provides that text-to-speech feedback across to the gamer.
Can it be wrong? Can the user have a better solution for a level or a boss than the AI?
Absolutely. Well, in the sense wherein we've been actually training it with data from our esports athletes. And some of these esports athletes are the very best in the world. They know what they're doing. But oftentimes they've been really surprised by the kind of feedback they're getting from the AI itself. It's providing different kinds of play styles, gameplay, hints, tips and tricks. So it is pretty cool. But I would say that it can only be a co-pilot. It can only give you suggestions. You got to play the game yourself still.
Min, allow me to just play devil's advocate for a moment as well. Is it cheating?
So that was one of the first things that we took very seriously from the outset. First up, from a terms and conditions perspective, we made sure that the games that we had tested the co-pilot on, it adheres to terms and conditions. But over and above, if you think about it, essentially it perceives the same things a gamer perceives, all right? Now, that much said, it's a much smarter, if I can call it that, because it collates all the data that comes through, and then it provides the feedback and stuff like that. Now, I don't think that this will be used in a competitive scenario. That much said, it would be great as a coach. If you're trying to get better at your game, it gives you great feedback. It's a little bit like a golf coach if you think about it.
Sure. My other question is, will it make gamers lazy? So just an example. Sometimes I'm playing a game. And
all gamers are lazy.
Yeah. And, I at least try a few times on a level or a problem in a game. And then I actively have to go out on somewhere to go and look for a walkthrough online, a video, or some guide somewhere if I want to solve that particular problem. So there's a part of me that needs to get up and do something, or sit down and do something. But with this, is there a way to control it or make it less easy to access?
Well, you see, think of it as a buddy that you can say, shut up, if you don't want the feedback and information and things like that. And you can kind of tune it to say, I don't need so much feedback, or just let me know when you need when I need help in respect of this. Now, for what it's worth, gamers today, when we're stuck in a Dark Souls kind of game, an Elden Ring or a Wukong and stuff, we are oftentimes already alt-tabbing out, looking at YouTube videos, walkthroughs, and things like that. This just makes it so much easier. Now, over and above, of course, we are thinking of what else we can do with the AI Gamer Copilot. We're going to be trialing it. We're going to be releasing it out to beta for all our gamers out there. But essentially, we're tuning it along the way. Do you want more feedback? Do you want less feedback? You can pretty much customize it the way you want it.
Now let me look at a potential opportunity. I reckon if I was a bit younger, I'd be really good and a pro gamer, of course, right? But I reckon, is this potentially a tool that also could be used for people who maybe have aspirations to get into gaming professionally, who want to improve as well? Is that also how you're potentially seeing this tool? You're someone wants to maybe make it as a big-time gamer, wants to improve and maybe doesn't necessarily have the tools, the access to coaches, etc. But this could help or be a starting point?
Well, that's exactly why we came up with the AI Gamer Copilot in the first place. Now, if you're an aspiring esports athlete, you want access to the very best kind of training that you've got out there. And what we've got is that we've trained it not just in terms of the data from the esports athletes, but their current play styles, how they're playing, constantly in the top tournaments, the matches, so on and so forth, to the extent that while we've been chatting with the top esports athletes, they see it as a potential tool, that as they're prepping up for the next event, how will, if I'm playing against so-and-so, how will he play? And likewise, they are able to kind of think of new play styles, new kind of strategies and elements all the way across. So it's not just for aspiring esports athletes, it's going to be fantastic for that, but if you're a top esports athlete, it's going to be useful for you too.
Fascinating. So you can play against different styles maybe.
Absolutely. Yeah. Super aggressive, more defensive, it's up to you.
Yeah. Min, let's broaden the conversation out to AI in game development as well, because this is, I think, a fascinating area. Since we've seen a lot of this generative AI technology hit the fore, we've seen how it can be used to generate video, imagery, and I know that there's trials ongoing about how could that be infused into the game development process and even into a gaming environment. Where are some of the biggest impacts that you see generative AI having on the game development front?
Sure. So I do think AI gaming is going to be one of the most fundamental disruptions to the entire gaming industry, right? So, but what is AI gaming? And pretty much we see it in threefold at Razer. First of which, we look at it in terms of how AI is going to change the way games are made. I think that's one, game development. The second way is where the way games are played. So if you think about AI Gamer Copilot or Project Ava, that's one of the ways that we see games are going to be changed in terms of when AI comes through, where gamers are going to play games differently. Now, finally, we do see the way that AI is going to have a big influence in terms of how games are published or operated or run in the future. So for us at Razer, I think essentially we've been looking at AI gaming for quite some time. Now, from the premise of whether it's from a hardware perspective and where we look at AI hardware, we look at AI software, where we're building out these tools in terms for game companies out there. So we've got about 40,000 game developers out there in the world using our SDK at this point of time. And we have been building out these AI gaming tools across to them. So if you think about AI Gamer Copilot, it can be used by the gamer, but it can also be used by the game company itself to be embedded within the game as a tool to allow them to do like tutorial walkthroughs, to be able to kind of educate the gamer how to play the game after you haven't been back to the game for a while. And of course, from a services perspective, we're also thinking of what kind of services we can provide across to the game companies who use our tools at this point of time from Razer, as well as the gamer themselves, where we believe that in the future, everyone is going to require the use of compute.
Yeah. When you say services, just give us an example of that.
Sure. So if you think about even like the game tools that we've come up with, right? So traditional game servers in the past would need things like real-time processing to find out for multiplayer games and stuff like that. Inferencing is now a new requirement if AI is going to be embedded in games. So you now have this need for inferencing. So what we're doing is working together with some of the compute companies. How do we provide these services across to the game developers so that they can do generative worlds, for that matter, have new audio, music, so on and so forth, NPCs to be incorporate it within the game itself. So all of this is really the brave new world of AI gaming.
Yeah, that's what I wanted to ask you about, because that was something, a few people have told me they're quite excited about, this idea of, maybe you fight a boss in a game, you lose, it learns some of your actions and then come back, and it's a very different experience if you try to tackle that same boss or player again in the game. And also beyond that, so that's characters within the game, but also the generation of worlds as the game moves on, potentially the ability to change those depending on the progress of the game's narrative. Are those things that are realistic or just a bit of a pipe dream?
Well, these are the tools that we are building out at Razer. So we either develop it in-house, we're partnering companies to do that. We're investing in startups who are also looking at AI gaming right now. But I would say it's early days yet, right at this juncture. We're seeing game developers right now vibe coding to using different tools for AI gaming. And some of these games are already being released at this point of time. Now, some of them are micro games, but you can actually see where these games are going to evolve, develop, and get there. So I would say that the vast majority, and that's why we think AI is going to completely and fundamentally change the way games are made, because it's going to be so much faster. We're going to see, worlds being generated as opposed to rendered in the future. So it's a great opportunity, I think, at this point of time for game developers who are just starting out, looking at, if you're not even technically trained, to be able to use some of these AI tools to create the next big game.
Yeah, I don't know, cloud gaming has been, an area of focus for a lot of the big players as well, and perhaps that links to, the kind of idea of streaming games. Does the console have a future in the world you see?
Well, at the end of the day, whether it's a hardware console or whether it's software streaming or whether it's cloud streaming, it all comes back to the content. It's the content and how immersive these games are getting. And today, games are getting more and more immersive. There are more gamers today. From the last time we met, I probably said there were about over 2 billion gamers. There are today over 3 billion gamers out there. It's the primary form of entertainment. And with AI, you're going to see productivity increases along the way. But when things get to that level, you need to find a way to occupy the times of the people out there. So gaming is just a great way to get out there. So I would say that there is a place for console gaming. It's growing. PC gaming is growing year on year, whether it's through esports and much more out there. Mobile gaming is just gangbusters right now.
Okay, now AI is the focus of the conversation, but there was a time we were talking about VR gaming, augmented reality. Has that gone out the window, or is there still a future in any of that?
Well, it's just a new platform, and you get, and that's the beauty about gaming, where, you've got such a broad audience and a multitude of gamers, and, they talk about the fact that, PlayStation is better than Xbox, or mobile gaming is better than PC, and PC is better than... Now, at the end of the day, if you put things in perspective, 3 billion gamers out there, and for VR games, and some of VR games have been incredibly successful. So I would say that there's always a platform for anyone looking to be a gamer today. It's a great time to be a gamer.
Yeah, just thinking about the broader gaming industry as well, man, what do you think are going to be the key drivers of growth going forward? Of course, we had the boom because of the pandemic, and some of that has come off a bit and normalized. But where does the industry go from here in terms of growth, and what's going to drive that?
Sure. Well, ultimately, I would say today, gaming is bigger than movies, it's bigger than music, and as I've mentioned, there are now more gamers today than there were yesterday, and I would dare say that tomorrow we're going to see even more gamers. It's just this constant need to get interactive entertainment, and it's one of the most engaging ways to really get out there and have fun. And I would say that the growth of the access to the internet to a lot of the emerging markets, I think we've seen Southeast Asia, for example, being a massive, massive market for gaming. Mobile gaming has really pushed that. And over and above, AI gaming, I think, is just going to be another area of which is just going to drive the entire gaming industry.
And if I was to ask you what excites you most about where the industry is headed, one thing, would it be that, AI gaming?
Absolutely. I think right now, and the thing is, the way AI is going to change gaming is so fundamental from the premise that it's not just from the game development perspective, but it's also from the gamer's perspective, and ultimately how games are published or operated in the future. So it's really, I think today we're going to talk about AI gaming, but probably the next time we meet, AI is just going to be part of gaming, and we're just going to go back to talking about the gaming industry again.
Ben, thanks so much for your insight. I've got to try out this AI co-pilot.
You have to.
Thank you for driving us home to the end here at Converge Live 2025 in Singapore. Thanks for joining me.
Thank you for having me.
And thank you all for being here with us today.
Thank you.
And thank you, Arjun, for driving it home, because guess what, guys? That's a wrap. We've actually come to the end of the wonderful event that is Converge Live right here in Singapore. You've been an amazing audience. Thank you so much for joining us. I hope that you've made your 5 new connections, either professional or personal, over the past couple of days. Hopefully. I also hope that you've learned something, maybe even just something small, up here on the stage or maybe out there networking and talking with people, something that will change your life, something that will change your life starting from tomorrow. That's my personal hope for all of you out there. I would like to say thank you to our sponsors, and I would also like you all to join me in putting our hands together for the incredible teams behind the scenes. The people over there, the people over there, the people who've been working not just day and night for the past couple of days, but for months in putting this all together.